I have no idea how to do this. It's user volume. Testing. Guess that. What about now? Oh yeah, that's good. All right. I'm pretty sure we're streaming. I think I'll just check. Coffee number 2. It's way too early. Let's click on this thing. Oh yeah. Yeah, looks like we're live. I think we're... Oh yeah, got a viewer. Might be me. Who knows? Can't see exactly what's meant to be on my screen here though. Do I have a blank image? Oh, that's why I have a blank image. Right. Hey, there's a chart. It's been a while since I've done a live stream. All right, we are live. How cool is that? 24 hours. Try to stay awake. This will be fun. How you doing? It's good. Somewhere there was a list of questions, but we've got heaps of time, so I guess at the end of the day we can drag it out as long as we want, much to the amusement of anyone watching. For those that are watching, feel free to chuck your questions in the YouTube chat, because there'll be gaps, there'll be spaces, there'll be things that we can come back and answer those. All right. Markets are funny, aren't they? We're just sitting on the edge of either collapse or a rally. It's very interesting. Definitely not a time to be taking a huge amount of risk, that's for sure. Okay. So, question number 1. Okay. So, I suppose the thing is, how do they all fit together, right? Like, because you've got, as individual components, hold levels are pretty easy to understand, origin levels are pretty easy to understand, break levels as well. But the big question is, how do they all fit together? Why do they even exist? And that's, once you sort of understand that, you get a bit of an idea about what's actually going on, bigger picture. So we'll start with something. Let's find ourselves a blank chart. So we'll just jump back into the past. So firstly, what happens is you get the creation of an origin level. So an origin level, as you know, is just going to be a break level. There's a couple of them in here. It's just going to be a break level that gets touched, and then instead of the price continuing to break in that direction, it actually reverses. So example would be, say, this one here at 50,904. It's the break level because it's the bottom of the accumulation range. It gets touched here. And normally when a break is hit, the price should actually be continuing. So if we look at the top, there's another one here. So these kind of mark out the boundaries of your range. So that's the top there at 71, and that's the bottom there at nearly 51. And in both cases, you've got origins, and that is typically what will happen. There'll be one at the top and there'll be one at the bottom. And if this if this was a bear market consolidation, it would just sit and go between these two. It wouldn't look this obvious because it never does. It's, it'll spend a bit of time at the top, and then it'll have some big event dip and blah blah. And then, it'll do this kind of thing, time in the middle. But the moral of the story is there'd be a top and there'd be a bottom. So that's kind of how everything starts. And then what you're going to get is you're going to get ladder points, and that's what hold levels are. So they are just the points at which the price tries to. They basically try to protect the origin. So if you think of them as the guards, and that's a ladder point there. That's a hold level. So you've got your origin, it gets created, you get your first hold, and then the hold's job is to stop the price getting back to that origin. And what the hold's job is then to do is to try and create another hold. And that's, in this case, this one. And what it's trying to do is just continue to ladder that price to the downside to eventually break the origin and lose the range. That's what its goal in life is. So when you're taking a trade off a hold level, you're basically taking a trade off a ladder point that is going to try and break the range. But at the same time, you're going to have one on the other side, which is going to try and support the bottom of the range. So when it comes to taking profits on trades, and it's probably one of the bigger ones that people often forget about, is it's really easy to know where to enter. You can enter on a hold level. It's really hard to know where to take your profits. But if you just kind of think of it in reverse, you just take your yeah. Oh, you can't hear us?
Yeah, we can't hear her.
Oh, okay. Right there.
You,
That should be better.
Okay.
Okay, I think there was a little mute button that I might not have pushed. I'm not a very good shitfluencer, eh? Should be.
okay, I check. Thanks.
Hey, everyone.
I think that was my bad. I'm pretty sure I had the Discord audio muted. So, testing 1, 2, 3.
Hi, everyone.
Yeah, I think that'll work. That should work. We'll see. If not, I'm sure Blue will chirp in again. Oh, well, at least everyone could hear me rabbiting on by myself. So if you were to flip it upside down, and because a lot of people's brains just work long, that's the only way. And so it's great that you can just go Alt I on a chart, and suddenly shorts are longs. If you were to look at where to take profit off a hold level, well, the obvious place is going to be into some other hold level or break level or origin level. And there are some statistics that we've got huge amounts of data on, like 50% of breaks convert. So you've got a 50-50 chance that when you hit a break level, it becomes an origin level and reverses the price, which means it's a pretty good odds if you were to actually just be taking partial TPs into break levels. So that's definitely something worth knowing. Another one, of course, is 95%. Type properly. 95% of breaks broken get retested. So even if you were to take a partial at a break, there's a really good chance you can re-enter that amount of money back into the trade if that break level actually breaks. So that's what hold levels are. That's what origin levels are. So origin levels are just breaks that convert, and they represent the boundaries of a range. And then, of course, hold levels are the ladder points, which is just designed to keep trying to push the price down to break. And then, of course, you've got trends, which are designed to send the price back to the holds as well. So price doesn't necessarily just bounce between a hold and a hold. Quite often there'll be in fact, it doesn't really bounce between a hold and a hold. It bounces between a hold and a trend. So there'll be some kind of trend that's designed to keep the price bouncing. So that would be out here somewhere. Let's find it. there'd be some kind of trend in here which is designed to try and send the price back up and attack the hold. And often you can tell which direction a range is going based on the origins moving up or moving down. So if you look on the top side here, we've got this one up here at 71, and if we look at where the next one could form, the next one could form here at 70, but it didn't actually touch the break. So that's not actually an origin. So the top of the range is still up here. Whereas at the bottom of the range, we had one that formed here. And then the next one could have formed here, but that got, assuming that stays as a blue candle, that got broken. So then the next one could form here. And if the origins start laddering up, then that basically means the range is compressing. And if they ladder down at the same time, then it's very much compressing. And then when they get really, really close, there's going to be some kind of break. But that's... So you can see the hold sent the price back down again. So you've got the hold, which is trying to ladder the price down. You got the trend. This is a very cheeky way that they break trends, which is create another hold. So if we rewind a bit, origin, first hold, laddered hold, laddered hold. So you see how it's trying to break down to break through the bottom of the range. And at the same time, what they use is they use things like trends. So trends attack holds. So the backside of this trend is going to try and break this hold again. And it's not the first time that hold has been hit, because it got hit by this, which created that bounce. So it's now heading back to try and break it. And it's using the backside of the trend to do it, which of course is going to move the trend. So that trend is now there. This hold is now going to try and ladder down again to see if it can break down. And what has to happen is basically a candle has to close up inside the hold. If it closes up inside the hold is starting to wear a bit thin. And it's more so the body, because the wick of the hold is often a greedier portion. But if you can close up inside, sorry, it's more of a FOMO portion. If you can close up inside the hold body, then you've got a pretty good chance you're going to break the hold. So let's see what that one does.
Can we back up a little bit?
Yeah, shoot.
And talk about the back of the trends and closing into the body of the holes. Can you just go over that portion again real quick?
So every level, if you just think of everything as a level, so there's going to be a top and a bottom. So likewise, there's going to be a hold like this one, has a top, has a bottom. Now, with trends, if you actually open on the wrong side of the trend, you've got a 50-50 chance of breaking the trend, because obviously the next candle is going to be the one that actually has to be a blue candle if it's going to break that support trend. But it's got a pretty good chance of just rejecting straight off it. And there's certain types of structure like this, which is very obvious, which is where they build the hold right next to the trend, open on the wrong side, go up into the hold, and then come back down again. So this is basically like a trend dive, or what I call a trend dive. So as soon as you're on the wrong side of one and you target the other one, it's not really a sustainable way of moving the price up. This particular candle didn't really have a hope of actually escaping from this trap. It was just going to push back down again. But that's where that hold comes into it, down there, to try and send it back up again. So then closing into the body of the hold, you've sort of got three key points. You've got top, and this is often different from a break level, but it can give you a bit of a insight as to whether you are going to break a break level as well, which I can probably find an example of here. not the best example, but here's an example. This is your break level up here. And then this is your hold candle at the top of this range. Now, the moment we closed above that hold candle, chances of that break level actually stopping the price is pretty low because you've got above the hold. So the way that these wicks play out, if the blue one is, in this case, with a resistance hold, if the blue one is taller than the yellow one here, then the level that's actually important becomes quite often the top of the hold, which is this 45924. And at some point in the future, that would actually probably be a support level as well, once it's hard closed. So there's probably examples of that you can find somewhere on the chart. Somewhere. This is effectively how reverse holds get created. There you go. That's one. So you've got blue wick goes above the yellow. That's a hold. Holds the price down, keeps it laddering down, eventually gets broken and hard closed and becomes support. And reverse holds are basically polarized moments. So if you're ever going to create a range, you need something that's polarized or has changed from its original purpose. So if this this hold was designed to keep the price down, but suddenly it becomes flipped and becomes a support level, you can see the volume that came in just when we hit that that hold for the first time after it was hard closed. So that created that pump. So you can then create a range, off whatever this engulfs. Something like that.
Okay.
Yeah. So that. So holds the ladder points. Origins are basically top and bottom of the range. And then probably the tricky one is that origins are really, really easy because you can see them plain on a chart. And once you see them, you can't really unsee them. Your eyes just go, oh, okay, there's another one, there's another one. But the other thing that can create a range was basically any polarized moment can create a range. So that reverse hold there created the range through there. Doesn't actually need technically an origin. And so can range trends, polarized range trends. So stuff like this. That trend through there could create a range if that breaks as well. So let's see what happens when that broke. Off it goes. We cover those questions. Your turn to talk.
Yeah. I'm still absorbing that last part.
Yeah, that's a bit more complicated, I guess. I'm still absorbing coffee. It's 6:18 in the morning. Something wrong with being awake before 10.
Can you hold another example of a reverse hold polarizing without really needing an origin to create the range?
Yep. I'm on. That's one. And that's the wrong tool. There you go. That's one. That was the top of your range. So you're looking for basically an engulfment. This one's really subtle, very, very subtle. So you're looking for that engulfment, full body there. This candle, you see how it rejected from the top of the yellow. Created that. And all the way over here. See, it got up over the top of it, took off to the upside, hard closed it. So this is actually the range that it's going through. And then that 70,000 up there became the top of the range. And eventually it came back down, tagged the bottom, and off it went. So quite often there's different things that will all point. And this, I noticed in the spreadsheet of questions people have, people asked a lot about, how do you use different data, particularly CSV data and stuff like that. So it's all about confluence. Like, this will not be the only way to find that entry. It's the fact that that entry exists on many different, or for many different reasons, that is why it's such a good entry. So it was a broken reversed polarized hold, so it was going to bounce, and that was, I don't know what week that was, but that was a pretty decent wick. Like, that thing went down, hit, and just shot back up again. But there'd be range trends, and there'd be all sorts of things coming through that same area. And like, this is the top, the top of the accumulation range up here, created by the flip of this. Because you actually don't need to re-enter the thing that creates the range to then move through the range, if that makes sense. So a hold level, you're going to touch a hold level, and then you'll go into reverse, and that's a trade. But a range gets created and then just continues. It's actually put positive from a range perspective that you don't touch the base of the range. So once it's created, it should just continue, which kind of means you're almost chasing it a lot of the time, because you just don't know whether you should be waiting for an entry. But so this would have had a range trend.
But not touching it is, how is that a good thing?
Well, if it's touching it, it's testing it. If it's testing it, it's testing it to see if it wants to break it. So that's, whenever you touch an origin, and like taking a trade off the first touch of an origin is a really high probability trade, but you've also got to think about what that's actually saying. It's saying that they're actually testing the very bottom of the range, and they're only testing it to see if they want to break it. So it's this top of the range up here, we have got a reverse hold that tells us what the range is going to be. And then, of course, we've got this left behind hold level up here, which creates a range trend. So there's several reasons. So even if you hadn't have noticed this, if you didn't know that was there, you would have seen that this yellow candle re-enters this hold over here and creates this range trend. You would have seen it wick through it, grab some liquidity, come back down, polarize it, so it didn't go back to it. So it's now a polarized range trend. And then, of course, the bigger rejection comes from that next series of touches there. And then back up again, couldn't get through it. So somewhere in the future, when this trend breaks, there should be a relatively big moment. So we'll see. There we go. Give it another shot. Off we go. Okay, so that's the thing about polarized moments on the charts, is that it was built to keep the price down. It became a polarized moment because it was touched. The price never got back to it. Down it goes. Another big rejection. But when they eventually break, big move. Big move in the other direction. But as you can see, there's also no no real warning. There was no hard close. There was no nothing, and that's quite often what happens with polarized moments. They just go. There is a little bit of a warning that you would have only kind of realized afterwards, and that's this what happened right there. So this is a in-range origin. So they basically wick through the bottom break level before they actually even move. So it's kind of like a really fast way of saying we're going, we're taking off. So, but all of this actually started down here, which all started back here, and which started back here. So there's always something in the past that creates what happens in the future. So if you look left, you'll find why so there goes your range. Now where it gets really fun is that it's going to have to come back here at some point because it's gone right through the top of that, which means at some point it's going to revisit this. So that's oh, there we go. See that? So that's another thing about ranges is the top portion of a range, same sort of numbers about 95% of the time, top portion of a range will always be revisited. So that's see, that's kind of another reason why you just don't bother chasing, because all this sideways accumulation, or in this case distribution up here, is basically position being unloaded to come back down and reload.
There we go. Okay.
What's going on? I would have bought space. I don't need to buy space, did you?
Did I what?
Oh, I was just reading the YouTube comments.
Oh.
20 people viewing online. Hello, everyone. Just see what's in there. So who bought into SpaceX? Does it go up or down? Guess we don't know yet. Okay. Yeah, cool. What else? What other questions?
So long-term trading, right? Well, not long-term, probably medium-term. If you wanted to do scalping, great, and I know we do like 4 hours, for example, like 4 or 8 hours, or even daily. Do you have pointers for the best kinds of trades to take? And what goes into separating the really good trades from mediocre ones?
Yeah, so first,
if you're not able to chart all the time, if you have a full-time job or something.
Yeah, first you got to have a bias. So I would normally start with looking at safety risk. So, and typically on the daily, if you're going to take a trade within a time frame that's less than 1 day, you just want to look at your daily, and maybe if you're going to do it on weekends, you're going to want to check out your weekly as well, just because you're getting close to weekly close. So daily and weekly would be the two. And what you can sort of pick from that, say yesterday, we were closing above the trend, we were closing above the range trend on safety risk. So, but we were below the resistance at the top side. So if it's going to travel up into that rejection points there, then you'd be looking at that point to say, okay, well, I'll probably at the same time that this is going up, you'll find that risk assets are going down. And then because it's going to reject when it gets towards the top side of this, that's when you'd be saying, okay, well, I'll look for long scalps. So then you're looking for things like hold levels on other time frames, things to actually take a trade off. So they could be hold levels, they could be origins, they could be range trends, they could be just taking a trend back to the hold, anything like that. So then having a chart like this is quite helpful. So this will give you, say, 3 panes. So you've got BTC because obviously BTC affects the overall market to some degree. There'll be tokens that just go and do their own thing. And then there'll be a lot of them, particularly if they have a BTC pair, where there'll be influence over what the token does based on what BTC does. And then, so the middle one, of course, is the BTC pair, and then the left-hand side here is the token itself. So yesterday I mentioned in the daily update video that we hadn't actually got hadn't met the minimum requirement of the hold bounce here, which is just this basic fib level at 7710. So if we look really closely, we did not touch that the day before. We went back down. And the reason we went back down was pretty much because of the trends. So there was a really good chance that if we closed or opened above that body of that hold level, we were going to go up there and do that again. So I was lucky in a way because I took some profits here. I was already well over the 1%. So then I set my TP at 7700 or just before. And so when I woke up, I'd actually got that TP as well. But because I hadn't touched it, it made good cause just to open a little, what I call a swing scalp. So it's not going to be a very big position because you're going to want to be able to add into it if it goes down again. But you just open it up and you just target the same level because we hadn't actually touched it. And then, of course, the confluence I had for that is sitting over here. We'd kind of open just above the resistance trend. So and we'd already tested the hold once. We were up inside the wick. There was no full wick engulfment. We're up inside this hold here. So I was like, okay, well, we've got some upwards pressure. And then over here on BTC, we'd actually opened above the trend. So there was sort of a whole bunch of things just pointing at it. And if BTC had come back and tested this bottom hold down in here, then that would have been a justifiable reason to add more to the size of the scalp and still just target the same level. And that was just a daily scalp. Now, at the same time as that, there was, I think, a 4-hour level. Might have been Sol. No, here we go. There is one of these in Sol as well, I think. But there's also this 4-hour level sitting all the way down here, which is the front side. And keeping a bit of an eye on that, because if this was to dump, it's probably going to come back down and target this front side that's left behind. So that would be another opportunity for a scalp. The thing is, you just don't really know whether you're going to get there, because what's actually happening right now is it's progressing up through this range. So, we're probably looking at getting up to this 7827 level, and then potentially that 0.8. So it's just going to kind of keep going. And it's got hold levels over here, which you didn't ask about backside, frontside holds yet. Someone's going to do that, aren't they?
I did actually in the notes.
Did you? Okay, there you go. This is like what a really good example up here of backside, frontside holds. This is a big choppy mess, but as you can see, it didn't take too kindly to touching the backside of that candle there. So, but it's also one of the reasons why we're probably heading back up to this one. The other ways you can find scalps would just be trends to hold. you might want to start with some kind of higher time frame. I think this was a Sui scalp we did the other day, which is just a small one. This is where those indicators can make life way, way, way easier. So, and then looking for like these types of trends here, these are going to be your bigger moves. This so putting an alert on that range trend for the future is quite important, because you might not be looking at the weekly chart and not realize that this thing is wandering through a weekly range trend from $3.80 and it's going to go back to $3.80. So that's where it's going to start going back to $3.80. So this is what bear market bottoms tend to look like. Bouncing along here and eventually, breaking through these range trends and heading back up. So let's find a scalp. So always start with like the highest time frame that's got any reasonable structure, which don't really have a heck of a lot of structure here, but you could take, it's probably going to be longs. So we've got this candle cutting through and it's got 2 months and 19 days to go. So we can take that, try to find something smaller inside there. We can't do too much there on the monthly. Even the weeklies dive through it. So then you're down to.
And again, we're just looking for a candle that closes below the trend, right?
Yeah, correct. So there's quite a few on the daily, as you can see, that have closed below it. And so this was the trade that we took the other day. We found the daily. Yeah, there might be something. Let's try 3-day. Okay. So say you'd gone to the base of this 3-day candle right here, which was a full 3-day close under that trend. Then the next thing you're looking for is where is the 3-day resistance? Okay, and this didn't exist. So let's just get rid of that. Okay, so that's where you were. And so the trend had moved here. You can now open in this little space right here. And that's going to be on top of the prior broken trend. It's going to be on top of the new time array trend. And your first resistance is going to be up here at about 7481. And then the thing that sent this down is going to be this closing under that origin right there, which sent the price down. So you'd be looking to, if you take this trade, take TPs here and here, and you'd be entering on the trend, looking ideally for some kind of low time frame reversal, because it is a 3-day trend, so it can go down below it. And there you go. So, and that's kind of where we're at now. So that would have been a scalp that would have taken a while, but it's still an 11%, 11% scalp. Most people would be pretty happy with an 11% scalp. And if you're waiting for the reversal, you're just looking for lower time frame stuff like this. So I would look for, I usually just use things like vertical lines, just chuck one on there. And that tells me where it's opening. I've got my trend down here, and then I'm just going to go down to a lower time frame. Come across to my vertical line. And okay. And I'm only wanting to look ahead of my vertical line because this is where the trend was created, so that wasn't the entry. This is where the entry is going to happen. And what do we have in here? Well,
That was 67. Nope.
we've got a hold created off that trend. So there's a couple places you could have entered this trade. One would be because you know it's a 3-day move, so it's a big move. You could just enter it the moment you get this engulfment off the trend. The other thing you could have done is if you were a bit late to the party, once it's hard closed the range up here, you could enter on the revisit of the 3618, just like you saw on that bigger time frame. You know, what were we looking at, a weekly, right? So Bitcoin dumps from 100K or whatever back to 70K, and it's just a revisit of a range that's been hard closed. So this is exactly the same thing. It's just a 15-minute chart. So
Okay.
up, down, and out again, and then off the top of the range. So there's plenty of places you can sort of find to enter trades. The trick is just not to chase it. You don't enter here. You wait for it to come back to here. And if you missed this entry, but it went back up above the top of the range again, then you'd enter on the top of the range. Then up it goes. So that's kind of how you can find a scalp. You can use like time array trends. You could just enter on a hold level. You could enter on the hold level after the creation of an origin would be another one. Not so much. Yeah, if you're entering on an origin, then that's a really high probability trade like this. And this is what you use for lower time frame scalping. You've got this range, this touch, this move, this entry, this scalp in here. And you could scalp it up to say that hold just there, which would have given you probably all you need for your day. Yeah, I mean more than 2% for that trade. So something like this.
Okay.
So if you took 1% of your portfolio and you put it on that origin as a 1-to-1 up to that hold, that would be your entire daily trade done in 1, 2, 3, 4, 5 or 6 candles.
Yeah, that's crazy.
Yeah. So I mean, you don't have to trade on 3-day timeframes because your risk to reward and that kind of thing, it's always gonna be the same because it's all fractal. You might find that during low liquidity times, it's a little bit harder to get a big entry on a low time frame, but it's if we went out and looked at that 3-day. So if you found where's a 3-day origin that got touched? This is actually that's a 3-day origin that got touched. Up there. So that's one of those in-range origins where the break level has already been touched prior to the range even completing. And then that's the first touch of the origin there. So you tend to get quite big moves off these. And they show you that they're really setting something up.
Wait. You move. You see the origins so quickly. I'm trying to catch up.
Right.
It's like you said, once you see them, you can't unsee them. Okay, I see it. I see it now.
So these tend to be created because they really want to take something off. They're running out of time, and so it's a good way to see in advance that there's something coming, quote unquote. Something's coming. But yeah, that would be another one you could have taken a trade off. Thing is, when you look at where would you have taken that trade to, the touch of that origin, the first resistance is going to be this hold here. So we're on a 3-day chart versus a 15-minute chart, but technically your one-to-one trade is still just going to be this.
That hold, okay.
Yeah, it's going to be that hold because you don't know it's going to do that. Now, when it does do that, when it reverses that hold, you get a moment of polarity and then you get a bigger move, which is off this one. So that's this. So you'd be taking this scalp and then you'd be looking for this bigger move, but you didn't know that was coming. And then you have to look for some kind of resistance over to this side, which is going to be break levels here and here. So you'd be taking a TP. See, it's still, if you took a TP at the first resistance, it's still basically a one-to-one. It went up to the second one. So there's a lot of one-to-one trades, really high probability one-to-one trades. And although most traders would say you're just going to go bankrupt if you take one-to-one trades, the real thing is you're going to go bankrupt if you take losing one-to-one trades. If you're taking very high probability one-to-one trades, then you're going to get enough of them to actually not go bankrupt, even with fees and all that kind of stuff. So it's really just knowing which ones to take and which ones not to take.
And then there's a psychological aspect to it too. You know you should get out of the trade, but you stay in it because the greed factor creeps in, and you're like, "Oh, what if it keeps going though?"
Yeah. What if?
The fight. Yeah.
I mean, there's so many ifs in trading, but there's just ifs that are driven by fear and greed, and then there's ifs that are driven by statistics, and so if this closes over a certain level, I will get a move. That's healthy, if. What if it just keeps going is not necessarily healthy. It's kind of a case of, well, what justifies that it keeps going? So there's, I'll give you an if. Here's a healthy if. And this is kind of how you can play the ifs. So you've got an origin here. Now, if it touches this origin, I will have a trade. And that's a healthy if, because you know that's going to happen. But it's still an if because you don't know if it is going to touch that origin. There could be something in here you've missed. There could be a trend. In fact, there'll be some kind of trend coming through here. Okay. And of course, when it does touch this, it could just come back to here. And then that's it. So if we are waiting for a trade on this, you could go and put like another line in, maybe just on the base of this, and you can have an alert set so that when it touches this, I want to pay attention. I want to look at the chart. I want to look at the time frame, and I want to look for an entry. And along it comes, it hits it, etc. You got your entry, and now where are we? So we're under the trend. Assuming that's the trend, I probably have to check it, but let's just say it is. We're under the trend, and other considerations is things like this break level up here. So who's to say we get back above this break level? We don't really know. You've almost got to be you've almost got to be a little bit defensive, and just always look to take profits at the worst case scenario, because if you do that, you will always make profits. If you're looking at this being the one trade that goes all the way to some new all-time high, then chances are one of those will just bite you in the ass. But this is, you take your profits when you hit this hold. But there's so much stuff going on here. So I'll give you another what if. So, okay. So now this candle, say it's still open, and the first thing I notice is we've got volume. We've got back above the trend. We're back above the break level. So now here's another what if. What if we close here? So if we close here, I have a reverse hold, I have a normal hold, I have a backside hold. So if I'd taken my profit here and I'm looking to re-enter or a new trade, I've got 1, 2, 3 places I can re-enter this trade, and I've got back above the trend. So that's a healthy what if. What if we close here? And so does it close here? Yes, it might. More volume? Yes, it does. Okay. So now there's another what if. What if the next candle closes above this? Because that can become the backside to this front side. So, but if it doesn't close above that, it doesn't really matter. We've now got these levels that we can re-enter down here. So any profit we took here, we can now look to add it back in now that we seem to be regaining the trend. We've got new levels that we can take trades off. If it touches the hold, I've got this move. I can also tell just by putting this one little fib on here that we close below that, so we are probably going to come back before we bounce. Okay, we've got a backside hold here that we can take a trade off. Okay, so I've got entries at 6-4 that can take me back up here. We've got trend, we've got another hold, and then it's just a case of kind of doing nothing, because you don't want to enter here. You want to wait for it to come back down into here. And it's already signaled that it will come back down, because this little troll just under the line is coming back down. Okay, so that's and what have we got? Got the reverse hold, retest of the break level, big volume comes in, backside hold kicks in, off it goes. So you could have entered here, you could have tried to enter here, didn't get the entry, could have entered there, probably just got it. If you missed all that, once it closed over the top of this candle, could have entered here.
Okay.
This one's probably not a sustainable one. It's going to come back at some point, but there you go. So this move, which is the big volume move off the backside candle here, this is the non-sustainable one, and then that's it coming back down. So could have entered on the trend. So there's lots of trades. I think the main things that catch people out is they either just don't know the basics of the structure and what it all means, and what the ifs are. If we close over this is what can happen. If we close under this is what can happen. You don't know whether it will or won't, but you know what to do if it does. And the other one is, of course, chasing. The entire design of this is designed to get people chasing those 3 candles, and that's so that they can come back down and do that.
I think it's just more practice, and looking at hypotheticals and if this happens, then what do you do? That's the part that I just need to work on.
Yeah. It's a
And like you said, finding the points of entry if it comes back here, and if it doesn't, then where's the next best entry? That kind of stuff.
yeah. Replay tool's good. Just chuck this on, pick a random moment, and then just skip through the candles and of course the the indicators, which are going to point out all your trends and your breaks and your origins and sorry, I shouldn't laugh. What's this? Iran directly rejects Trump's new claim of a deal. See? What is with this rubbish? Deals on, deals off, deals on, deals off. Schoolyard.
Soybeans.
Yeah, I know. It's such schoolyard stuff, isn't it? It's just like, what the.
Juvenile. I
Uh,
think they're having trouble with my volume.
yeah, I just saw that comment. I'm just going into Discord now. I've got you cranked up at about 170 something percent. I'll try. Actually, I can probably turn it up in the recording software somewhere. Let me find it. Okay. There you go. Try saying something now.
Sure.
Yeah.
Hello.
I just cranked you up a notch or two in the recording software. We'll see if
Can you
that.
guys hear it better?
We'll see what they say. Okay.
All right. Can we practice a time array?
Yep. Let's pick something.
Okay. You pick one and make your move, and I'll say yeah or nay.
Okay, so we'll go with.
Because it's easy. It's easy to be led when you're doing it. It's very easy to be led. But when I'm practicing it, sometimes I get to one and I get stumped. I'm like, oh, so I just want to make sure.
So what we're going to do is we're going to find the highest first. They want more volume. They want to hear you really loudly. Let's go. I've got you at 200% now. We'll see. See how that's like. Okay. So I want to try and find the biggest, ideally the biggest trend where price is pushing through it is kind of the key thing, because if it's pushing through it and has been for some time, then there is probably going to be a Pikachu memes. There's probably going to be a it's kind of distracting having Discord on my other screen. Yeah, probably going to be some kind of trend below it. So start with, it's not really enough. So what I'm looking at here is I looked at that, which there would have been something in here, you know, at that moment when the price was pushing through it. That's kind of not really enough. So go a bit bigger. It's probably still not enough, in fact. It's probably a really bad token to choose. It's not been around very long. Okay, so we can probably do something with this. What did I just do? Back to that. Okay. Ooh, that's loud. Did everyone hear that? Hopefully not.
Mm-hmm.
Did you just hear a really loud alert? Come
I
off?
did.
Oh well. Hopefully I don't get too many of those loud alerts. It's interesting you heard that. I've got desktop audio is muted. Discord audio
It
is
sounded like a whack whack.
whack, 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 whack. Yeah.
Yeah.
It probably shouldn't have come through. Oh well. Okay. So we had this weekly trend here. Which gave that little bounce there. Got a backside hold, we've got a frontside hold. So if it closes under any of these, it's in trouble. That's called trouble. Okay, so now you could probably, while this was going down low, you could have probably looked for some kind of time arrayed trend inside here. So if we take this, but we only want to look between these two lines because we've got to, for the sake of demonstration, this candle didn't exist. So you can go down to your daily. All right. Where are you going to move that trend?
I'm sorry, 1 second. For some reason, my video is delayed. It's not synced with the audio.
Uh-oh. Technical difficulties, and we're only an hour in. Need more
No,
compute.
it's on my end. I assure you, it's on my end.
I'll just drink some of my cooling coffee.
There you go. I'm just refreshing it real quick so it'll get caught up.
What's going on in this chat? Oh, thanks, Joe.
Yeah.
I can press the heart thing.
Okay, I think I'm caught up. Okay. All right, where are we?
We good? We good?
I think so.
Okay. Right, so we've got our little anchor point dot is all the way back here. We've got several candles that have gone below. Whereabouts are we going to move our trend?
I'm sorry, it's not working. And my I'm sorry, my screen is frozen. Come on. I have a black screen.
Uh-oh.
Come on. I can see the chat, but my charging area is black.
Might need a refresh.
Yeah, that's what I've been doing, but it's sure that's refreshed, but it happens if it's not rocket science. No, we got this. I see the chart now.
Cool, cool.
Okay,
So we've got
so
our little anchor pointers here.
Mhm.
Where do we go?
from there we are going to go to the next candle that's not touching, which is going to be, where's your
So it would be that one.
there's your anchor point, right? Yeah, okay. And then go over to, well, where you? Okay, not the long candle. Keep going over, all the way over yonder. That one, yeah. And then after that, the very last one
So go to there.
would be the next one that's not touching, but we have to stop there, yeah.
Yep. Yeah, because this candle's not technically closed yet. So now what we can do is we can look for a smaller time frame.
Mhm.
So that was daily. So we'll go have a look at say 4 hour. And now we're starting to see a bit of structure on the 4 hour. So our little anchors back here. Where are we going to look now?
For the, excuse me, for the one that closes, a candle that closes completely underneath it.
So be that one there. Now we're going to trend. Okay, so this is where it gets fun. Now we go down below that trend. We come back up. We close above it. We create a hold. Create a couple of holds actually. So at this point, you've moved the trend to here, and what would you be seeing in real time? You would be seeing this. Okay. So in real time, you'd be seeing this. Now, you could start to look for an entry or a reversal here, or you could wait to see if they polarize the trend. So no polarizing. Got a hold level. So now you've got some kind of minimum obligation target closing just below. So you're probably going to come back. Okay, polarizing the trend. So you've gone dive the trend, come back up, haven't gone back to it. Now look for an entry on the trend retest or the hold. Current target's up here, but something else could get created before you get there, and that's why you can't really just set an entry here and a TP up here. Okay, so now your current target has been reduced significantly because you got a hold right here. But you can still take a trend to the hold. I don't know what percentage this would be. But yeah, it's still 9% or less, so 7%. And you're probably going to have to put your stop loss down below here. So it's probably not going to be a one-to-one. Depends on where it hits the trend. Okay, testing the hold. Right, so now you've got, see, you can see it's really compressing against the trend. So this is where sometimes trades become not necessarily worth taking because they just keep building the resistance down to try and break the trend. And we're also looking at closing under it, but that'll bounce, you know, because it is a polarized trend. But it's probably going to fail quite quickly. So if you were to have this thing where you're going, what if, the what if is probably going to result in, you know, you losing the trade or it going back down. So there's your bounce. So your hold has now met your minimum 1618, and that was relatively risky because you had these two holds that existed before that. So what you had was a polarized trend to try and attack the holds. You had a hold with a minimum obligation. Pretty risky trade, but at the same time, it's possible. Now, if it can actually engulf this one, because this trend is a polarized moment, if it can engulf that and get above that 9387, it could continue through, but it's an if, and so you'd wait, because you've also got hold, and a break level, all kind of trying to stop it. And okay, closed under that minimum 1618 from back there, rejected down, and it looks like it touched the break level, which it did. So now if that becomes an origin level, it becomes the top of the range, and then you're looking for what engulfment to the downside, and it has that it can work with as well. And it's closing back inside this hold again. So this has already created its minimum move to the upside, and now the price is re-entering it. See the rejection off the top of the body, breaking through the trend. And now you've got front side, back side holds in play in here. And all it really has to do is close below this range, and it could dump. So anything below that. So this is now going to try and make that the bottom of the range, and that's the top of the range. And you notice this trend is still technically holding unless this closes blue. So now that trend is broken. This trend is bouncing to this hold. So that's your tiny little move. I mean, that in itself is actually a scalp. So you've got an origin down the bottom here, which you could have entered on, which it had to dive through the trend, and then the first TP is the hold. So these are 4-hour candles, so you would have had a bit of time to digest that was a possibility. And that is a 6% scalp. Pretty safe scalp to take, just simply because it's diving through the trend, hitting the origin, coming back up to the hold. But the hold is a ladder point to try to break down and break the bottom of the range and break the trend. You've now tested the bottom of the range, you've tested the origin as the bottom of the range. We haven't gotten a new engulfment, we haven't got any kind of new range forming to the upside, so it's looking like this could be it, and that this is going to try and break it. The hold is holding it down. It's engulfing. So our ladder points are starting to move towards breaking the base of the range. Tiny little move from the top of the trend up to the new hold and then back down again. So it's getting really close. Now we're under the trend, started from above. Just trying to survive, holding on for dear life. Up it goes again. So this is this bottom of the range here, basically just trying to keep this thing up. Eventually you end up with a whole bunch of lines on your screen, but you can see how it's come up now and hit this hold in here again. So now this ladder point has got to keep it laddering down, or it's got to break it. And of course these ones at the bottom here, this one, they've got to keep it moving up. It's got to close over that break level if it's going to try and continue to the upside. break level wins, big engulfment. Now, if it doesn't revisit that break level, the top of your range then moves from here down to here. And that's your range laddering down. So the entire range is laddering down to try and break. And you could then, got way too many fibs on here now. So then this is your next one. So you're under the trend, haven't broken it, haven't moved it, potentially going to create a new range and potentially going to create a new origin. This hasn't been broken yet, so it could still get it back up, but it's getting into a pretty dangerous position where if it can't get back above that trend is eventually going to push it through the horizontal level. And that's kind of what you get with trends and horizontals. The whole point of that trend is just to keep a ceiling on it now because it's below the trend. And that ceiling is just going to try and push it down through the horizontal till the horizontal breaks. There's your trend again. And you hold. You've now got two things. But it's a yellow candle. Uh-oh. Let's see. Now if we close below the 1618, and you can see how algorithmic this stuff is. The levels are exact. It's what we call trolling. They just perfect closes, and then back up to the hold. Creates another one. So it's pretty much just and of course we would have moved our trend, so trend would have moved to there. Diving the trend for liquidity, going back up to the hold. So these are all, every single one of these is actually a scalp you could be taking. Trend moves, back up to test the hold. You're either going to break the hold or not, because you've got this hold in here now. So this bounce, minimum obligation of the hold. That was a trade. So that whatever this token is, it would have been dishing out, probably somewhere between 4 and 9% trades every 8 hours based on its structure. And all you really have to know is trends and holds, trends, holds, origins. But be a good one to practice on. And there'd be other trends in here, like this. There'd be your interiors. So once it created this interior, get a bounce off the interior into the hold again. And so holds can, hold price down over and over and over and over. You could have a hold at the top of a range that just keeps on rejecting the price, keeps it sideways, and the whole point of that hold is to keep it sideways to break the trend, and the whole point of the trend is to keep it moving against the hold. And that's your wedge. One side has to break. In this case, it's the trend broke.
Does anybody else in the chat have questions?
Let's see. Where would you place your stop? limit orders. So you would put your stop below whatever. Say it's going to be a long or a short. For example, if you were going to take a trade on this hold, it would be pretty safe to have a stop loss above that one. I mean, if it really just blasted through 2 holds, it would be a bit weird. The real issue is that with limit orders is that you might get that limit order while you're asleep and you don't know where your TP is. You know, the TP is the thing that can change. So as this was laddering down, the actual risk to reward on the trade is getting worse and worse, and that's the core reason why wedges break. You know, so if you have some kind of wedge, the risk to reward is really good here, and that's where the volume is. That's where people, you know, every single bot, every single algo trader, everything is going to want to take that trade because the risk to reward is really good. The distance is really good. The closer you get to the corner here, the risk to reward gets worse and worse and worse. So eventually what happens is one side of that equation just says, no, I don't want to take this trade. And once one side says it's not going to take a trade, it's going to break. And that's, so where could you set stop losses? Well, you set your stop losses above whatever invalidates the trade idea. So if it was this trade, you'd have it above the hold. And if it was down in here, you could still keep it up there if you wanted to. You could try to, you know, just go a bit cheekier and have it above that hold. You would have still been fine. And then as the thing gets tighter and tighter and tighter, that's the point at which you have to make a choice of, is it even worth taking the trade? So that's, I don't know if that answers the question. But yeah, entering with limit orders is on high time frames is probably very risky, because you can have deviations where the candle goes down below a level and then comes back up. And so if you just put a limit order straight on that break there and decided you were going to try and take a trade off the break level, these first touch origin ones are probably the one that is that one right there. They tend to be quite precise entries, and you could put a limit order on that, but you'd have to have some kind of stop loss, and I normally just look at 1-to-1. So once it's approached this, I know that I've got this new hold level here, which has been created. So it'd be, if I was looking at that trade, trade box. Trade boxes plus magnet tool. Not good. So that entry there, up to there, that would be the trade. And it's probably not going to deviate because this one did. So if you really wanted to be cheeky, you could ramp that up, have quite a tight stop loss on that. It's because that one did the deviation. But yeah, if you didn't take your profit there, you end up getting stopped out a couple candles later when it continued to ladder down. Trend to backside holds. Yeah. So a good example. This is a pretty small move, but this hold here, which they closed just under, just busted straight through that trend. So you could have tried to have scalped in there, but let's see. So you can see this bounce that happened. So after the trend moved, the trend got touched, bounced up to the hold broke down, and obviously just destroyed the trend. You could have tried that inside there. Would have been pretty high risk and only worth about 2%. You would have won. So most of the time, trend will attack a hold. It's going to be a front side or a back side. It's just going to be whatever's closer is the one that you actually take your TP at. But you've really got to sort of see the intention. The intention is that they're building a hold really close to a trend. And if they're building a hold really close to a trend, it's probably because they want to destroy the trend. They don't tend to do it for giggles. So that's, yep. And they destroyed the trend. Geez, that monster. Look at that thing. These are the kind of hold levels that send stuff down. Someone's buying in here. This is kind of the difference here, just between a range level versus a hold level. So that's a range level. I think someone asked that question. Full engulfment went below the 1618 in that single candle, and then that's resistance over there. Cool. What's next?
Um, hmm. See. Hmm.
This thing could have a pretty cool breakout if it gets above this level. So this whole candle here on the weekly, this might hard close this. So that could be a pretty decent pump. See if it makes a 50% move, eh? Don't know if I've lost you or you've run out of questions.
I think you've answered a lot of my questions. Um, just in the explanation from before. Many questions have kind of been answered in just one demonstration. So, but I'm just looking on the charts and seeing if there's any point where I'm not real sure what happened, so I can get some clarity there.
I think we should all
I'm
start looking.
also still
we should.
fighting this delay stuff.
We might all
So,
start looking for ARC entries, I think.
I can't trade ARC, unfortunately.
Oh.
So, so remember that Bitcoin video you dropped this morning? Or the one you dropped earlier.
Which one?
Can you go over that one more time?
Bitcoin.
Yeah, there was one you dropped yesterday,
Was it in the Discord?
and you were saying we really should be. Yeah, and you're saying we really should be watching those closes today. See.
Oh, there's heaps
How it
of there's heaps of big closes today.
Yeah.
Okay, so let's find those.
Okay. Can you keep talking before you do that? Cause my video is delayed again. I'm not super techie, so I'm trying to figure out what to do to fix it. But
It
I
could
need
it could
to-
just be YouTube stream. It's seems to be a bit like that sometimes. So here we go. Closing timeframes. So as you can see, we've got a huge amount of closing timeframes, big ones today. And so some of them, like this one, we're getting an engulfment. Now, that gives us possibility to bounce to 85, but we are closing below the wick, which means something like 69. So we could just head up to 69 and then end up pushing back down into the hold. Either way, if we're going to bounce, say we're going to go down and then up, we'd have to go down and visit 58 or lower before we could go up from this, because it's not actually engulfing the whole range. That would be really big time frame stuff. Basically the same thing applies. 931. Okay. So that 69 level, it's been resistance. Halfway down, about 43. And once we start getting into this stuff, we start to see more structure. Geez, that is loud. So some of these big closes that we're getting today, like this one, we've got a hold. We fall back below the break. We've got an untested trend to the top side. So this is your sort of 150K BTC type trend. And then this is the range that we've revisited. So if we were to come down and test this hold down here at about 31K, then the target for that would be this trend up here at about 155. So this is potentially just the whole of next cycle. You know, you go down here, we hit the base, we head back up here. There is the possibility of this bounce that might happen between 58 and 74. Based on today's close, we're kind of in between. We haven't touched either side, so that's another potential. There's a lot going on today. So we've hit the trend by the looks of it. Yep. So we hit the topside trend on this one. So this is traveling in the other direction. So this was going down to try and get into this hold. And we're closing inside the hold. But we haven't touched the base here yet. So this could be a sneaky little rally that's coming. But only really up to about 84 be the minimum. And they've got it on the wrong side of the trend. So we could hit this hold maybe head back up to the backside of the trend in that sort of low 70s. Could push through to the 80s, mid 80s. And then the backside of the trend could come down to try and break the hold. So it sort of depends on which way it travels first. If it goes down first, it's got a good chance of actually continuing up off the hold. If it goes up first, it's usually designed to trap people before pushing down into the hold. So most of these big time frames look like they're setting up for something. You've really got to start zooming in on some of them because you just see they didn't quite touch down here at 48. And that's fallen back through the trend. If it goes back up to the trend, it's sort of around 82. If it stops at that first rejection there, it's sort of around 68, 69. Getting another hold coming in here at 74. So a lot of these time frames are just looking relatively bearish, but they are showing that we could have a bit of a bounce from some of these untouched levels that exist lower down. And when we get right down into some of the smaller stuff, we're creating new resistance quite close to current price on some of them. I think the 2-day hasn't quite completed yet, I don't think. Yeah, so this gets us up to about 64, just that continuation. And if it happens in the next few hours, we could get an engulfment here, in which case you get a bit better chance of moving to the upside. And then when we get into something like the 7-day, you've got all these holds waiting to reject price. So yeah, the 2-day, 5-day stuff can send us up. 2 days already trying to send us up. And the 5-day could give continuation if it gets a decent close. The 7-day, on the other hand, has already got a whole bunch of rejection just waiting for us once we get up to that level. So this kind of has to get above the 65 area if it enclosed today, something over 65k in here. Get up inside those levels. And what have we got here? Yeah, 65,556. That candle could reject the price down lower. and then you get ones like this one. So we're bouncing off this 50-day hold down here, which has got a target of 65,476, but it's moving so slowly that if it doesn't get back up above 64,936 by the end of the day, then resistance is getting created in close proximity to the target. Then you got the body up there, 70k. So basically what I was looking at is that we've found support. We've found all these reasons to go up, but it's moving so slowly that it's potentially creating the resistance to offset it. So the real intention today is going to be, do we close off this 8 o'clock and the New York algos flick off, and does the price push up a bit? And if it does push up a bit, it's actually quite bullish. Bullish to not create this resistance that it's threatening to create at the moment. Yeah, so that one also kind of says that if it can get above that, the wick of that hold candle, then maybe come down and bounce off that trend, then more confluence with going up to about that 84 area there. If it pushes through it and hits that hold candle, that'd probably reject it. So it looks like they could be setting it up for a bit of a bounce if they don't make this resistance. How would you proceed to find an entry for a long-term holding of stocks? Exactly the same way, really. You just have to look for retests of ranges, really big holds. Same way. You need data. You need to find, because it's particularly hard with older assets because there can be much bigger time frames involved. Now, if you look at the SpaceX example from yesterday, it's this brand new asset. You can run it down to like a 3-minute chart. You can find an entire range, and then you can trade a 3-minute chart. But once it's been around for a week, it'll have some daily structure. Once it's been around for a year, it'll have some monthly structure, and some stocks have been around for a really long time, which means they've got some really big structure. Mostly the thing you got to worry about is ones that have gone up and down and up, quite a lot, because they'll have really big engulfments. Like this area here, if you sort of look at this latest pump, the fact that we're below that latest pump means that that could just be one big up candle. So 50, 200 days or something, and then you got 200 days coming down, which means you've sort of got a 200-day engulfment to the downside. So it's that sort of motion where something goes up and down a lot, which can lead to it going further down, or same thing applies in reverse down here. you've gone down for a long period of time, up for a long period of time. So there'll be some kind of engulfment in here, and that's what created that pump. So the time frame you've got to figure out. And when you're looking at some of these really big ones, yeah. The reason I sort of struggle with holding anything a long period of time is that they're all going to go up and they're just going to come back down again, and then they're going to go up some more. Now the markets are designed for wealthy people to compound money. So if you're holding it for a really long period of time, you get to watch your portfolio go up and down and up and down and up and down. And over a long period of time, sure, it might go up, but what's this Endgame Eve online? I don't know what that means. Endgame Eve. Yeah, but over a long period of time, yeah, they'll go up. I guess you could get really big breakouts, but that's what you do. You just got to find really big range trends, really big engulfments, really high time frame stuff, and then just start DCAing in for that, really, if you're going to hold it long term. I think we've got and you're not going to use leverage, obviously, if you're going to do anything long term. There's a couple of really big levels, I think, in play at the moment for BTC. Filter this. Yes, we ran into this the other day, which is about an 86. There's a few in here that you can see that are all kind of around that 86 to 89 area that we ran into recently. So there's some pretty big stuff pushing it up. Now, as the price has sort of gone up previously, we were moving into a whole bunch of shorts. A lot of those shorts played out by the time we hit the 60k area or lower, and there's still a few that need to play out, but the balance has started to shift more into the longs, and some of these really big longs can they can take the price back up, even if it's just a bit of a rally, stuff like this. So entry 59,259, and minimum targets up here at 86,331. So, you might find, for whatever reason, we push up there. Could be some liquidity to grab. The question is, does it close over it? It's got 166 days to go, and it might. And if it does, close up over these levels, then it's going to kick off the range for the next cycle, which could head up to 200 or 263, because that's about right. Ends in 166 days is about the same time as we should be heading back up again, if not sooner. That's why it's a bit hard to say what's going to happen, because because we have technically landed on some stuff big enough to send us. See? Hold. It was a pretty good reason to buy at 59. So, because obviously there's a lot of members who are watching this, all I was doing there is I was coming in here, going to symbol, BTC, hold levels, and then just turning on the filter. And what I wanted to see was, not possible because they haven't closed yet, not inactive because we haven't touched them, not completed because they would have already moved to the minimum targets. I was looking at, okay, so price at the moment, we seem to be spinning around, like our daily's positive, our 2-day is still bouncing up. We know we're bouncing off a 50-day backside. We've got a lot of reasons like why we could be going up right now. So we want to look for the biggest reasons why we could be going up right now. So we're going to get rid of shorts. And you can leave wick and body in there if you want to see possible ranges. Then we've got activation time over here. So if you want to look at filtering by activation time, you can basically look and see what we have touched recently. And then you're just looking for whatever really big time frames exist inside that. So you come down here and you start seeing some of these big ones and you go, oh, we've really landed on some big levels. And that's that 50-day one. And likewise, you could look at, see what shorts are still to play out.
Hey, Sin.
Yeah.
Can we go over the bot, the origins,
Yeah.
yeah, and just
Okay. So
actually maybe not the bot so much, but the origin, support and resistance trend, the one that's consolidated.
oh, and here in metrics.
It's the one that's in the Discord.
Oh yeah, okay, cool. Okay, let's have a look. I wonder what happens if about to find out what happens if I exit the voice channel to look at that. Hopefully I can still hear you.
We're hearing you.
Okay, cool. Let's bring up the screen. Okay, this channel. Okay, so there's lots of data that we're collecting inside here, as you can see. And it's all basically just based on structure. So if we look at this one, which was the original one that we were recording, what all this sort of means is break risk. Okay, so you've got a certain amount of levels that have been watched, and there's a certain amount of those levels that are at risk of breaking. So, for example, if there was 100 levels, damn, those alerts are loud. If there was 100 levels, and then we had, say, 2 of them were ready to break, this would say 2.2%. So the bigger this number, the more of the levels spread across all of the tokens that this thing watches are sitting there ready to break. So when we were seeing some really big shifts the other day, we were seeing numbers in there sort of like around 8, 9%. So that meant out of the 600 odd tokens it's watching, 9% of them were sitting in a position of risk to break. And then the upside bias is giving you an idea about which way they're actually looking to break. So at the moment, there's not a huge amount when this snapshot was taken, not a huge amount of levels looking to break. And the ones that are, it's pretty even, 54% are looking to break to the upside versus 46 looking to break to the downside. Then you've got origin potential, because at the same time you might be looking to break a level to the upside, you might also have created or started to create origins. And in this instance, the origins that are potentially going to be created more likely to get created above us than below us at the moment. So it's looking like it wants to try and go down. And then you got the broken level bias. So broken level bias is just things that need to be retested. So it's a bit of a mixed bag at the moment with the market, because it's really not, that's really not that big. 2%, 8% would be big. This is just kind of sitting in the middle. This is a bit of a warning sign. This is sort of saying, okay, we're building new range resistance above, and if this gets created and then we start to get hold levels, then we can go down further. But you can also create those origins, test them, break them, and then break out to the upside. So it's not really just as one standalone number. It doesn't necessarily mean too much. This is a key one, because if you've got 68% of the levels pending retested to the upside, there's a pretty good chance you're going to go up, because 95% of these broken levels get retested. So that's probably the one at the moment that's implying that we're going to creep back up and do some retests. So then we start to break it down by time frame, and out of all of the levels that are looking to break, the 1 to 4 hour levels are mostly to the upside. The 6 to 12 are mostly to the upside. The dailies are mostly to the downside. So what that can mean is that we can get a move up in the short term, but then potentially rejection and then a move down, because the dailies are breaking to the downside. And then all of the origin potential stuff is basically all bearish. So it's looking to create resistance above, and it's actually less bearish on the daily than it is on the shorter term. And then when we get down to the broken level bias, you can see it's mostly the smaller time frames that it wants to retest to the upside. So out of all of that, you could basically say that short term it wants to go up, but long term there's not a lot of big structure in there. So then we break it down into this gives you an idea of the percentages per time frame, and you can see the weekly is still crap. So you might find that the upside bias is fine for the shorter term, but yeah, weeklies are still looking pretty bad. The weekly can, of course, recover, but we're getting too close to the end of the week. So you've either got to have a really good Sunday pump for these weekly levels to actually start to catch up, or you're going to get a whole bunch of weekly levels that break to the downside in a day. So that's that first one. Then we've got hold levels. So these are these same sort of thing. The amount of hold levels it's watching, which is huge, something like 60,000 of them or something. Some of the stuff, like we don't do alerts on hold levels yet, so that's why that says 0. Slight bias to the upside, but resistance getting created to the down, more to retest to the upside. So it's sort of saying we could do some retest to the upside, but we're still creating resistance to the downside. And same sort of thing, breakdown. As you come down further, you'll find trends. So these are all basically just same thing, but trends. most of this is pretty even. And then when we get right to the bottom, you find consolidated. So this is taking into account breaks holds trends, and whether we've got more breaking to the upside or the downside. And as you can see, the consolidated sort of all below 50%. So at the moment, it's still the market still looks bearish. We may travel up in the short term to do some of those retests, but you know, when we were pumping, if you go back to when we started recording this data, these numbers were sort of 60% minimums and 80s, 90s. There was one time frame that had 100%. So you're talking every single token that was at risk of moving was going to move in one direction. So yeah. So that's pretty much what that is. If I was looking at this one, I'd say combined break risk, short term up, long term down. So we're working on some more stuff because there's all sorts of interesting things you can pull just from structural data that can give you pretty good indications of which way the market's going to shift. So more and more and more over time as we find time. And then of course you can use the bot. So added some new stuff to that recently, so you can come in here and look for pending range retests. I think some of the original ones are up on the website, or there's like a pinned post for it. Some of the new ones, no. Range retests only kind of put that in a couple of days ago, but that's just showing you those minimum revisits that haven't been completed yet. So as you can see, there's a bit of you got some 1 hour, 2 hour, 1 hour stuff, here, and then woomph, straight down to that 48 area. So it's kind of mostly to the upside is quite low time frame. And you can put in, if you just want to ignore all the sub daily stuff and just look at the bigger picture, you can just chuck in high time frame and it will show you key levels that haven't been retested yet. So that's kind of it. We're living somewhere between retesting 48k and potentially heading up from here, depending on what structure does and how the closes are. But that weekly level, once we've touched that 66, that would be pretty dangerous beyond that. And then you've got your hold levels. So your sub level in here depends on, if you go sub level fib 0, it's looking at the bottom of a hold level, which would effectively be the top of a reverse hold. And if you're looking at or the entry of a reverse hold, and if you're looking at fib 1, then you're looking at sort of the top of a normal range hold. So if you're trying to get a bit of an idea about where should you be looking for entries, the point of this is that it gives you not only a price, but it gives you a time frame, and then you can go and look up the time frame to see what's going on it. And you can see we've been bouncing off. What's this one? Daily. So that's telling us that we're potentially going to hard close above a daily hold. There's not too much most of these are support holds. So when there are support hold that's above price, that means you're already inside that hold. And then you look at the countdown timers and you go, okay, well these ones as an example, this 2-day and this 3-day, they close in 2 days and 3 days, and they're a 4-day and a 13-day hold. So you kind of want to be out of those. You don't really want to be inside any support holds because then you're closing inside of them. And unfortunately, there's that daily, which we're closing inside of. And then you've got your range trends. So there's some 1-day that we're sitting below at the moment. And then we've got a 5-week. We're below a 5-week range trend. That's not ideal, which closes in another day's time. So that's at 66,980. We've got a 71-day, got a bit of time to get out of that, but we've got that 44-day hold there that closes at 66 in 2 days. And we've got that weekly retest all around 66, daily retest around 66. So, if we don't get out of this area pretty soon, there's a whole bunch of really big resistance that it's closing under. Then you've got origins. So this 19-day, 13-day, 38-day. So there's a couple big ones in there that we closed back above today. And 65, we're closing below a 7-day today. And potentially below a 55, below a daily, 2 weeks, yeah, below a 2-day. Below a 7-day. So we've got a bunch of them that we look like we're probably going to close below today, up around that 65 to 66 area. But closing above some of these can definitely send us up into some of these. Then we've got origin recent. So this gives you your most recent levels created by time frame. So this is where you look for ranges getting created. So this 2-day at 59,900. So the most recent one created. You got a 3-day created above, which was back on the 31st. So if we go and look at, say, 3-day and 2-day timeframes, so look at the 3-day first. Okay, so this is probably the, is that the level? Nope. Bearish 3-day. Oh, it's that one. Okay. So that was our 3-day origin created in there. And this would have been the whole candle for this range. So we've got a retest to do up here at 70k. So it's probably going to try and work its way back up to that, which lines up nicely with the backside hold. 1, 2, 3. So if it's going to head up into that, then could get a rejection there. And then you look at your 2-day. That's your 2-day there. So it's created that origin. And so we're just seeing now whether we get this 2-day close to create that range to the upside. And if we do, probably going to try and push back up. And then roughly that area in there is where it could complete that minimum retracement to the upside and then reject, or it could close up in there and keep trying to come up. So there was another 3-day origin as well. So when you're looking at the origin recent, and I don't think a lot of people in the group use that one, but the point of the origin recent is it's not about when you're touching one, it's about when it's making one. And when it makes it is actually the point when it's creating the top or the bottom of a range. So if you know when it creates the top and bottom of a range, then you can actually take that very first trade, which has got the best risk to reward. I mean, when it created that 3-day bearish top of range, if you just hit the short button without using any form of brain power, you would have shorted $17,000 on Bitcoin. And there's another one in here somewhere. That one. So that would be another option created. So that break level touched, no yellow candle above, came back below, closed without retouching, so that's your origin. There's your hold candle, there's your entry, there's your level 4. So you had that one, then you had another one in here, and that was your whole distribution range. Now 66 would be the retracement just back up to that 3. So you can see the candle's kind of just creeping its way up there now. What do all the different colors mean? Not much. They're meant to represent different levels, or different types of level. So there's not really that much uniformity to them across the different tools at this point. Like red is meant to mean broken level, and green was meant to mean untouched. But most of the tools have just been slapped together, care of AI. So probably need a bit of fine tuning. The whole thing kind of started as a bit of a random garage project, really. But eventually it'll end up probably all integrated into the dashboard software.
Hey, can you talk about the barometer a bit?
Yep.
So I think it's kind of neat.
Okay. So it's basically support and resistance levels. So it's very similar to this, and it's actually what powers this chart that's up the top here, which is your consolidated support resistance. It's designed to just show you what levels you have above and below price, acting as either support or as resistance. And then it kind of breaks it down by time frame brackets. So you know whether it's bigger or smaller stuff, daily, weekly. So if you're going to run into some really big resistance or really big support, then it's going to be in these close boxes. So this one here is an example, really, really big. You can click on it and it's showing you the different levels that make it up. So we've got this 223-day short. So I'll check that out on the chart. It's got 57 days to go. So 227-day long. Might be a long actually. $223. 68.61. So with a lot of these, because they're really big time frames and you're looking at a candle, you don't know whether it's come down or gone up, but that horizontal line is where it entered. Well, that's the candle that anything ahead of that line could have hit the entry. And as you can see, we hit that entry there at the 1, and we bounced back up almost instantly with the size of that thing to hit the 1618. So the minimum obligation of that long is already played out. This entry down here doesn't technically have to go back there again. It was already that one. So the idea of the barometer really is to show you these levels that are floating around price so that you know that as you're heading down into it, there could be this long here for you. And who doesn't want a $7,000 long? But unfortunately, yeah, that's done now.
Okay.
If you look inside the this level, these hold levels in here, then you can see which ones have completed that minimum bounce and which ones haven't. So, and which ones are possible or inactive. So if you're looking for, say, longs below current price, the idea would be to look for inactive hold levels, like come in here and go longs so body bounces, minimums, and then you could filter it by entry price if you wanted to, and something like this. And you know, you got this big monster sitting down there at 58k. So you can see there's a lot of entries. Yeah, so it's sitting down just below where we are now. And then next big set of stuff is all down there around 48.
What is the evenness?
Even versus uneven time frames.
Oh, okay.
Yeah, I've never really played too much with that to see what the difference actually is. Because you can actually refine the hold level as well. So if you're looking at, say, this 893 day here, we come across to the side here, there's this search refined. And then these are all of the levels that exist lower in price but forward in time from that particular level. And as you can see, there'd be some pretty low levels in here. So if you wanted to get really scared, 16k is the actual like 3-day refined entry inside that really big hold. So that's why a lot of these big holds will be they'll be the next cycle. At some point, you know, we're going to go hit this. Maybe we do the minimum bounce, then we go down inside, refine, you know, find a refined level, and then we can head back out and we can head through the various stages of it. And yeah, at some point, I think the average bull cycle lasts about 1,000 days. So it's entirely possible to see BTC up around 263 in 1,000 days time. If we went and spent 100 days diving down into that hold, then the next 893 heading up to the top of the range. Very possible. But yeah, from a trading perspective, like that's good for bias because you know that these levels are there. Like I wouldn't be worried about buying spot right now. Like if you bought spot right now, you're always going to be able to get out, you know, at this sort of 85 level. It just appears everywhere. It might not look great if it goes down first, but it's going to go back up. And if you're looking for greedy entries, you can see the areas where there's groups of things, And if you're looking for scalps, you look for the shorter time frame stuff like the weeklies, and might be a $3,000 area, but when it hits that, it could start working its way back up to the 60K pretty quickly, and in which case you take something that moves more. Like if risk assets are switched on and you hit a BTC long at 57K, then you look for something that moves at a greater percentage and you long that. So it takes it back up.
Say that again.
So say you got risk on, so risk assets is looking healthy and it looks like things are going to bounce, and then BTC runs into say like a weekly level, and it might only be like a $3,000 move on BTC or something, but because risk assets is on and you've hit a weekly support, then you might look at something else that moves more. Maybe it's SUI, maybe
Like
it's
Sol
Sol, or just any kind of alt that basically moves more, and then you can long the thing that actually moves a bigger percentage, whilst you've got strength and risk and strength in BTC.
Okay.
And then these bigger swing entries, most of the time you got to really look at the charts for these too, just to make sure that there isn't a trend in the way, because you might have a big trend. But a lot of these don't. So because they've got no topside trend, there's a good chance that these play out to their targets. So that's and then you can come and find your biggest untouched origins. So these were some pretty big monsters that got created, but you see that was the bottom 18 week, off it went. And you didn't get a first hold on this one for quite a while, but so that's that pattern, that quick I'm going to move pattern. That was your first hold. And then your backside hold was this one over here. So you've pumped up, closed over the backside hold, took off to the upside, and now it's retracing back to this front candle. So that candle starts at about 48. It goes down. So it's a pretty realistic area below 48 for BTC. If it goes to the 50% of the hold, then that's down around 32. And if it goes to the body, then that's about 37. So hard close, unsustainable backside bounce, rolling over, heading back down, hold candle, minimum target 44, and this thing starts at about 48. So somewhere down in this area here, below 48, probably below 44. It's a good little area to be looking for a real bottom. I guess we'll see. It could bounce off that trend, I suppose, if it at least temporarily. what that looks like on the weekly. Might have already bounced off that trend. Yeah, it has. So that's already bounced off that trend, so it might be rallying up. $74, $78, $76. Yeah. No wonder it's sort of hanging around here. When you layer into a position. All right, back in a moment. Coffee's got the better of me. Oh yeah. How do you ladder into an entry? Well, what you got to do is you've got to look at each ladder point as an individual trade. So if you were, let's jump back in trading view. Okay. Right. So let's say there's two options. Try to find somewhere you'd actually let her in. You just take the trade. Maybe there and there. She got, yeah. Okay, so let's say you wanted to enter on that hold. Okay. So it's a weekly, so you probably just shouldn't enter straight on that. You should wait for some kind of reversal. But hypothetically, if you wanted to, and you were just going to enter here, then the next places you'd look back here in the past and you go, okay, well, where's my next entry point? You could look at, say, the break of this range. You could look at the break of this range. You could look at this, which is a polarized level where it's created a hold, but it's worked below it and gone back above it. There was a lot of volume in there, so that would be another place that you'd look for an entry. But as far as the sizing, if you were going to put a trade on that lazy entry on that weekly, it would have to be very small because it's more than likely going to come down into that hold before it goes back up. And therefore, your next trade has to be big enough that you can get out if you get stuck inside this hold. So you'd have to forget that TP up there because that was probably going to play out, but you don't know how long it's going to go before it goes back up there. So it went up, the next week it went up and hit the target. So if you were going to take that break as another entry, you'd need to make sure that this was at least the same size as this because you'd want to bring the actual average down so that you could exit when it tested the body of the hold, and you wouldn't necessarily aim for that target anymore. You just adjust your TP. And likewise, this one that's down here has to be big enough to bring it below the break, below this point, so that you could exit if it didn't close back up over that break, which, as you can see, it did. So it snuck, went down, entered, snuck back up over the break. But the point of it is that whatever you're putting into the trade down here has to be big enough to bring the average of the trade down below the break, because you don't know that it was going to do that, head all the way back up there. So I guess that hopefully makes sense. I don't know if you've heard of martingale betting, but that's very similar. You're just doubling down, doubling down, doubling down, but you're doing it at key moments. Nice. Zeus. Yeah. That's right. I am. Well. Mhm. Okay. Well, I mean, at a $1,000 bag, all you're really trying to make is $10 a day, which you know, at the beginning, and then that all you're doing is adding 1%, 1%, 1%. So if you're going to do it in a scalp trade, it would be something like, say, what we're seeing right here. You would want to get a trade probably off. What do we got? Okay, this is a 3-day time frame, but you'd be looking, say, if this did close or had closed up here and the price was coming back down towards this origin level, you'd be looking just to try and get a move like this. And all you really need to do is take 1% risk, 1% reward, a little bit more ideally, just cover fees, and that's it. You know, then tomorrow you got to try and find the next one, and it could be a hold, it could be a trend to a hold, it could be it could just be a basic fib trade, it could be an origin trade. It's often the fastest trades are going to be the ones that have some form of polarity involved. So, but all you're really doing is just trying to make 1% a day. And if you just keep compounding 1% a day, it's often going to turn out a lot better than just trying to buy something and hold it forever, because it's just going to go up and down, up and down, up and down. And then you might get one big move at some point, but often big moves just end up retraced eventually. So the magic of compounding. Yeah. Yeah, the key thing is actually having a TP. Let's see. 4-hour time frames, 1 hour. Depends how much the token moves as to what time frame you can take it on, but you know, you got this hold level in here that could have given you that move on the 1 hour, percentage that is, but 69. So the actual hold for that's up here, so that's 1.3. So that's there. See that move in there, just between the hold and the hold. Got that one down there. Could have been one. So you're really just looking for ladder points. And if you want to hold them longer, I mean, that whole range is about 4%, but still that whole range is what, Saturday through to, I suppose it's 1 day. So you could have held some of that. But all you really want is just this one little move in here. You're in the market, you're out of the market, you've made 1%, you move on. And then this one is off this ladder point. So if you keep following this back, eventually what you'll find is you'll find the origin, which created the range somewhere. It's probably all the way back in here. Even that might just be a ladder point. That. Yeah, this thing really took off, so it might be all the way down here. This. So you can see all of these bounces that you could have taken. And I guess the thing is you got to forget the fact that it just did that, because you don't know whether it's going to do that or whether it's going to do that. You can't really see that far ahead unless you zoom out. Yeah, that's because this whole hourly move is just part of something bigger. In fact, we have hype in the dashboard. Okay. $25-day untouched. Ooh, that's interesting. It's sitting just above that break level, closing in 3 hours. So this break level was the backside to that front. This is likely to give, if it closes up here, it's very likely to give some kind of unsustainable pump to the upside before a retracement back to here. This could be interesting. Oops. Okay. So you can sort of see the level there. Looking to troll today. It's going to be this break. And it's going to be a trend break from down here. So it's got justifiable reason to, if it closes under the break level, it could easily come all the way back down to this $44 trend retest down here. And then if it loses the trend, it would come back to the front side hold. And if it closes above here, it might push up. Also, we've got that revisit of 54 pending. Might have already done. Yeah. Up, down. See, so that would have been an okay entry down there as well. So if you're looking for, trades, really a lot of it is about just looking through the timeframes, looking at the data, looking to see whether things have or haven't played out. This extension up past the top of that 25-day range, that would have, well, that's resulted in the pullback back down here to the 3618. Could have entered here on the 3618. Also happens to be where it's created the origin level after bouncing off that break level. And then you've got, so you got a hard close range trend. Maybe, no, you don't. You have range trend resistance there. So it's going to run into that at some point. Then it has to break that. If it breaks that, it can hit up to that top hold. And even things like this candle here, you sort of need to check lower time frame to see whether it went up and then down. Because if it went up first then down, this is still slowly playing out this creepy little move up to 60.9. It may just be that it's trying to close inside the body of this whole candle today. So that's all potentially bullish behavior. Closing over the 25-day break level, which would also be the 25-day backside hold, up inside the daily resistance hold, with a pending move potentially still to $60, just to kind of keep that upwards pressure pushing. These are all things that might mean you're about to see another little pop from hype. Yeah, control or range control is basically the range hold. It's a fully engulfed candle that comes after the origin. So this one right here, origin, engulfed, range, completed. Inside this one candle, it went up through here, pulled back to here. Now it may close over there at the end of the day. And if it does, it could try to push out again. Hello. Oh yeah. Hmm. Sure. No worries. Oh, okay. Ah, gotcha. So share the video. Share the video. Okay. I think. No worries. I think I've got that shared now. Now that you're leaving. Now that you're leaving, let's make it easy for you. Oh well. You were first, so you taught us something. Thanks. No worries. All right. See you. Bye. Bye. Th- 3 hours in. Wow. Yeah, I know. Hopefully, I don't have to. I've got this big glass of water here next to me. I'm like staring at it, going, "My nemesis." Hello. Probably not. See you. Ta-da. All right. Catch you later. Hello. I can. I can. We'll have to wait for the delay, and then they'll probably say yes or no in the YouTube chat. But they probably can. Yeah, the same sort of volume. Easy. I can see it on the corner of my screen. Yeah, shoot. Yeah, go. Mm-hmm. 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 Yep. Okay. Okay. Oh, oh, really? Hold on. Discord audio. Someone say something? Ah. No, I can actually see that it's not coming through. Why is it not coming through? I wonder if it's because I shared my screen. Where would that be? Please hold. Um, hmm. Anything? Someone say something?
I can keep
Hello,
talking
hello.
now.
Okay, you are popping up.
Hello, is anyone out there?
It is showing me that that is now working. Is that working?
I have YouTube on and I don't hear anything now. Only screen.
There is a delay on YouTube. Tell me when
Yeah,
you
okay, give
when
me
you
a
hear
second.
there is a delay on YouTube. Still nothing.
No. Can you move your screen once so I have a reference?
Okay, just switching it to BTC.
I just heard it. There's probably a 12-second delay.
Yeah.
Can you hear me now when I go through?
I
Guess we'll know in 12 seconds.
I can see the recording
Oh,
software
wow.
is the recording
The delay
software
is like
is
20 seconds.
acknowledging the voice. Well, the delay is probably going to increase if I'm streaming video through 2 different platforms. I imagine that's going to create some fun.
Okay, if others say they hear you, then it's on me and just keep going then, sorry. Have fun.
Sure. Okay.
All right. So if you want to show me things, that's great. If you want me to switch to my screen at some point, that might be helpful to me because I definitely, I think, overcomplicate my views and what I'm looking at, and that causes a lot of analysis paralysis. So I think at some point, me showing my charts, you can point out all the things I'm overcomplicating and maybe help me simplify it down to a better chance at making good decisions.
Okay. Let me see if you bring up your charts, and I'll see if I can find a way to pump those up on YouTube.
Yeah, let me get that screen up.
I'll disconnect mine.
I think it's this one. All right. It looks like you can see my huge mess.
I can't. There's a lot of lines.
Yeah, let me clear drawings. That was from some recent trades. Let's just clear them all. All right, we'll start with just the indicator palette.
Just gonna see if I can find a way to full screen this.
Yeah, I can full screen any of my panes if you want. But this is just kind of an overview of how I'm trying to get a good view of everything, but also, I think, clouding what I actually need to see.
So I need. right. I suppose that's good enough. Okay. Oh, hold 1 sec. I might have lost your voice. Just when I change this. Discord audio. Yeah. Okay, let's try that now. No, why not? Discord audio. Should have got you back, but it doesn't look like I have. Say something there? No, I'll try turning on desktop audio to see. Which means people will probably get hit with really loud alert sounds, but we'll see how that goes. Okay.
Is it going through now?
I can see the volume bars. Someone on YouTube there? Can you hear them?
Can someone confirm? You got me? Am I still silent? Hello, hello.
Gotta wait for the delay.
We'll know in 30 seconds.
Yeah. Yep, they can hear. Cool.
Okay.
Go.
So I got my daily over here for kind of the bigger bias of what's going on. I got my high time frame closes. So my middle pane I've been going through, looking through for what's next. I got 80, 160 minutes coming up. And then over here is kind of my more nuanced view of what's happening on either the 5, 15, or 30 minute. And then can turn liquidation levels off. That's a bit noisy, but I kind of keep them on the low time frame stuff to see where liquidity might be magneting the price towards. But I know you've recently been showing some Sol, and then middle column is like Sol BTC, and then the right you have BTC to get all your references. So I'm wondering if maybe I should be shifting to that kind of overall view, just everything on one time frame rather than the kind of mix that I'm going for here, because I do get tripped up looking through the different time frames, because a 4 hour might say down while the 15 minutes looking up, and I might just do inaction because I'm not really sure which way I want to take it.
Okay, so like the looking at it on a whole bunch of different time frames is kind of good for managing the trade, but for the overall bias of the direction, it's really just going to be the higher time frame. So if you've got, like in this case, you got 2 daily engulfments, and you haven't had a retest of either of those daily engulfments. There is also the fact we're drawing close to the weekly close, so it's quite important as you get towards the end of the week, you start to have a look at where they're positioning for the weekly. Someone says loud. I'm just going to quickly just turn down the desktop audio a little bit. Okay. Maybe that's better, maybe it's not. Now, the reason why I would have the BTC pair and BTC in the extra panes is what I'm actually looking for is I'm looking for a moment where all of them end up pointing the same way. So you want to see, for example, if Sol is moving up because it's creating engulfments to the upside and laddering to the upside, you might not get a revisit of the entry if Sol BTC is actually bouncing off support and at the same time BTC is traveling up, because it's kind of like if you're looking at a USD chart, you're looking at the money flow between stable coins and the risk asset. But that's not the only thing that can push the price up on that. If you then look at the Sol BTC chart, you're looking at the direct relationship or money flow between BTC and the risk asset. So if Sol BTC hits a level of support and starts to bounce, you might never actually get the entry you're looking for, or not even require the entry you're looking for on the USD chart, because you've already got inflow coming from a different direction that's not represented on that chart, if that makes sense.
Yeah.
Yeah, so that's kind of the purpose of looking for them all. As soon as you start to get the bounce on Sol BTC, then you could actually look for starting the position on the USD price effectively. And you just...
I tried to switch to a different tab. So I do have some other charts that I'll have on a second screen. So I'll have my Sol BTC with 1 week and 1 day split, or I'll split 3-way with a monthly if we're getting close. And I do the same with the totals, totals excluding, and then risk totals. So I do have it next to me, but I think I need to get better at referencing them all at the same time, kind of on the same time frame maybe. So if I'm looking at maybe a 1 hour or 4 hour trade, do I want to be looking at pretty closely at Sol BTC and the, I guess, flow to risk assets on the 4 hour, or do I care more about the daily, more macro view?
You definitely care about the daily. I mean, everything kind of revolves around the daily when it comes to timeframes, daily, weekly, monthly. So if you definitely start with the daily, how did today close, and what would I expect from the daily move, and then look deeper into that to find whatever scalp you want, and also a bit of the timing, and the liquidity. Although you're looking to see what liquidity might get taken, it's also kind of good to look at what liquidity needs to be built, because if there isn't really a lot of liquidity, then you're probably going to find that the lower time frames are tradable and there isn't really going to be any kind of big move or big sweep. But if there is a lot of liquidity, then you might find that it's going to pull outside of that lower time frame and move into something bigger.
How would I see that more on the lower time frame, like my 15-minute on the side? Because I do have my daily up here, so I kind of have some bias of knowing that these daily levels will probably get hit sometime soon. But what should I be looking for on lower time frame?
Well, I don't know whether with that particular indicator, I don't know whether it's ideal for that, because you really need to see the size of it, not just the presence, but how big is that actual liquidity pool, which that doesn't really show you. So
maybe this is just noise and I shouldn't pay too much attention to it on the lower time frame?
I mean, it gives you
Okay.
levels, like it does give you levels, but it doesn't really tell you the urgency of them. So like what I've found testing this new FibLab liquidity indicator is that price tends to gravitate towards the liquidity once the liquidity becomes layered. So if it starts out as a block of 100x, then that's great, but it's really more when it becomes 50x introduced at the same price point, and then 25x introduces at the same price point. It's when, like from a psychological perspective, if you think about it, they want more people to become comfortable that a level is safe. And so as different risk profile traders, whether they're high risk traders, medium risk, low risk, whatever, they all start to believe this is a safe level. They all start to open their positions there, and the liquidity actually becomes kind of layered in that area. So if you were to look at something like a CoinGlass liquidity chart or whatever, you've normally got the bars that travel upwards, and you've got the different layers of liquidity in there. So it's more so when it really starts to build up across different risk profiles that it seems to get taken. And obviously when that is in line with a structural target, then that's kind of your timer. So the liquidity is more or less just noise, other than the fact that it can sort of tell you when the move is going to play out. And what you really should just be focusing on is the levels based on structure. So trends, holds, breaks, that kind of thing.
Okay, that's helpful. I can remove some of that noise that is just clogging up where I can see levels.
Yeah, I mean, I have liquidity charts up permanently, but not so much for entries and exits. I pretty much just have them sitting there so that I know that, okay, when are we going to move? It's more about, can I go sit on the couch and watch a movie? Am I wasting my time by being in front of these screens right now?
Okay.
That sort of thing.
And I guess, do you have any more comments on this stuff so far? Or do you want to move on to another topic?
No, I mean, I like what you're looking at there. The only thing I'd really change about it is I'd make that chart basically Sol BTC in the middle and BTC on the right, and that would be my daily overview of what's going to happen. And then you could do the same thing for a weekly. So you have a couple of tabs, one for a daily, one for a weekly, and maybe one for a monthly if you. But you can always just change it as you get closer to the close of a month. And then you've really got to use the things like the origin tools or the dashboard, that sort of stuff, if you want to see the really big time frame bias. Because even just the weekly, ultimately the weekly is just noise. It's just noise inside of something bigger. Everything is pretty much just inside something bigger until you find what the biggest is.
Okay, so I should probably sync this by time, and then this becomes kind of my daily overview chart
Bingo.
of how these assets are flowing between each other.
Yep.
And then I'd just make another. Oh, I didn't sync my time over here.
So you can
And then
see
I'd come up with another. Yeah, go ahead.
Sol BTC looking to close over the break level. You've got Sol USD looking to close over the break level. So then all you really need is BTC to close over the break level. And then you got three different things all looking to break from the level that they're at. From a trend perspective, you've got Sol BTC looking to break trend. BTC is looking to break trend. And it looks like you're looking to break trend there as well on Sol USD. So all three are pretty much in line to look to break up.
Okay, so when they all want to break, that's probably a good opportunity that the market's going to go up, or at least these two assets together will go up.
Yep.
And what conditions should I look out for when BTC might just take the whole move and Sol isn't going to move at all? Is that where Sol would be maybe closing under the break?
Well, it would be Sol BTC would be closing or hitting resistance effectively. So
Okay.
So say, for example, if the wick was really long on that Sol BTC, then it might break trend, but actually close under the trend, and then that could create a rejection. So at the moment, they're all looking pretty bullish.
Okay, and then that would mean that BTC could take off. Sol will sort of take off with it. It'll hit the trend, and then Sol will start to drop off.
Yeah.
Then BTC might move or keep moving up a little bit, while this either could stay flat or keep moving down if Sol's going to have a bigger change. Or I guess Sol could maybe just stay trapped in these levels while BTC is moving up and Sol BTC is slowly rejecting back down to its trend or hold down here.
Yeah, and even today, like you could get, for example, you could get BTC engulfing the wick, whereas Sol and Sol BTC, it's probably going to take a little bit more effort to get up there. So you might find that BTC actually pushes off.
Okay, I think I'm understanding that. I think seeing it more will help me see the nuances as they show up. So this is kind of shifting my view where originally I had Sol on one page, BTC on another tab, Sol BTC on another tab. So instead, I'm aggregating them together by time.
Yeah, I mean, it works fine on multiple tabs as long as you've got the memory to sort of retain what you saw on one versus the other. But it's easier to see them side by side.
Okay,
And
I think that should be a good view for me because I'll forget to look over at my other screen and keep
Mm.
scrolling through Sol BTC and BTC, and I get too focused on all my Sol charts. So I do think this could be a good view for me to get used to and
yeah,
helpful long term.
yeah, if you wanted to add to it, because you can have more pains, obviously. If you wanted to add to it, you'd add in the totals and you'd add in the safety risk assets, and you'd be looking at the overall picture of is risk breaking up or down, totals breaking up or down, because totals is quite important. Like Sol versus BTC is really about relative strength. It's not necessarily about dollar value going up or down. So that's where totals kind of kicks into it, because if the totals is going to break to the upside and Sol BTC is going to break to the upside, then you're going to have an overall market increase, but you're going to have a market increase that's biased towards the risk assets being sold, being breaking higher, faster. So yeah, having totals makes a bit of sense.
Would this be totals excluding stables or excluding Bitcoin also?
You could do both, but totals excluding Bitcoin and stables would just be pure risk. So that's just.
So I guess if I'm looking at a Sol or another alt, would that one be
So total
more
two,
useful?
total
Yeah.
two, total two ES.
There it is.
So that would be.
I think this one.
Yep.
So I guess that's good for most alts. Would it still be good for my Sol BTC overview, or would I rather just see the excluding stables?
I look at both. So I have stables, and so I have total one excluding stables, and I have total two, and I look at both.
Okay, I do have those on my other tab. So if I'm not needing to look at those as more often, I do still have my overview over there.
Yeah.
And how often would I pair in the Bitcoin and stable dominance against what I'm looking at here? When should I start looking at that?
I don't really look at BTC dominance all that much. It's
Okay.
the tough thing is that there's so many other reasons for stables to exist now inside the whole crypto ecosystem, whether it's just people sending money to each other through PayPal or whatever. So in the old days, it was Bitcoin dominance dictated, risk on, risk off, but that's because most things had a BTC pair in most transactions. At the very beginning, all these transactions were pretty much between BTC and risk assets, so BTC and alts. So BTC dominance, excuse me, BTC dominance was a very real chartable thing. Now BTC dominance, you've got more reason for things like stables to exist. So hence I take stables out of it. Don't really look too deeply into BTC dominance singularly.
Yeah, I am looking at the formula of BTC plus USDT plus USDC together dominance. Do your statements hold true for that as well?
That's sort of what I look at. It's gives you kind of like an average overflow or an average overview of things going risk on, risk off. So
is that something that's less important than the normal totals that I have over here now?
Yeah, ultimately totals excluding stables is just going to be pure levels for risk. And then, of course, you can have BTC included in that because the whole market's going to go up, including BTC. And often you can also tell the difference between whether you're going to get a risk pump versus just a BTC dominant pump based on the difference between the total ES and the total 2 ES. Because if you've got, like, right now, just looking at that, it looks like total 2 ES doesn't look quite as good. So if you go total ES,
I got that on the top here.
So what you want to do is compare the structure between total 2 and total. And if there's ever sort of a significant difference in the position of those two, then that would often tell you as well whether you're going to see more of a pump in risk versus less risk. It's all risk
Okay.
at the end of the day. So it looks like they're both creating origin resistance at the start of the day if it doesn't go back up.
Mhm.
Break touched. Break. Is that untouched or touched? That top one. Untouched.
Yeah, just barely missed it.
Yeah, so and yet the risk assets is touched.
Yep.
Yeah, so that's sort of suggesting that there's more resistance being built on risk assets compared to when you include BTC.
So this is saying that BTC is likely to have a better run if it's headed to the top side
bingo.
than the total ES being stuck, creating potentially origin and being under trend.
Yeah, and that I was about to say that too. It does look like it's under the trend.
And coming from the wrong side of the range trend.
Uh-huh. So all of that's sort of suggesting that risk assets may not pump as well as what BTC is going to the upside at this point.
Okay. This is pretty helpful. I'll have to incorporate this to my my flow.
Then of course you got to go through all of your high time frame closes for the day and just see what they're up to, because it's sort of how you tell where things are going to go. It's how you create biases. They either will or won't, create resistance levels. They'll either close above or below. And so the daily's quite important for just which scalps you're going to take, which trades you're looking for. And then your really big stuff, which is kind of like your dashboard closing timeframes, that tells you, okay, well, they're building yet again another hold level at 58K or whatever it might be. And those are your bigger levels, because you only really go slow and sideways like this for a certain length of time before something big happens. And if you know where the big levels are, then you're sort of prepared for it.
Okay, that kind of draws into me finding my bias. So I can look at all these high time frames, and they're all really bearish. They're gonna hit stuff and reject, but there's kind of a larger range of where they might go through, like maybe only up to 75 SOL versus, maybe a huge sweep up to 95. So I guess one thing I get caught up in is kind of sort of expecting that we will have some sort of sweep. But it's so large of a sweep that it's hard to make a good decision, or I'll get stuck in a position that I probably should have risked down or closed sooner because I keep thinking, oh, we keep hitting this high time frame stuff. This could be the point where it rejects. So I just have a difficulty finding out where that move might go to, where it might stop, and like I don't want to long into the resistances, but then it's not the right time to short into them either. So I sort of get stuck either in the wrong position or not really being able to enter a position to make a good call.
Yeah. Well, I guess you've got to find, first of all, a trade. So, why are you entering and what are you entering on? So at the moment, if you're looking at the daily, there isn't really anything to enter on the daily. You're kind of floating above a trend. You're creating holds. You're closing above a break, but you're not actually hard closing the break. You've sort of only got, you're close to having a front side and a backside hold. And if it does go up a bit more before the end of the day, then you might get a front side and a backside.
Actually, a quick tangent on the front side backside, since that's another thing with the order blocks. If we do engulf here, that would be our front side. Would this be a middle, and would it still be a backside?
Yeah, it could be. There's the whole whether it's going to work off 2 or 3 thing is a little bit tricky. Certainly the middle, which is the break level, that would definitely be an area I'd be looking at. And then I'd look to open that with a small enough position that I could get out if it went down to the bottom level there. And the whole candle that's at the base of the middle, that roughly lines up with what could be the backside. So it's almost certain that you get a bounce if it wicked down into there. Plus the position that it's coming from, like it would come from up above the trends. So yeah, if there was any kind of engulfment of that top candle and then a dump into the new day, it would almost certainly be a bounce back up above the trends. So
Okay.
that's the kind of thing I would look at.
So a small entry here on backside and trend testing.
Yep.
But where would you exit if it starts to fail? Would it be if we started closing in this body or below?
See,
Because I know these entries
would-
are pretty close.
Yeah, I probably wouldn't necessarily exit. I would just increase the size of it in the bottom one. So if it came down, so just wait. And then if it came down to that bottom one, I would just increase the size of it and then exit out at the backside of the trend.
Okay. So maybe adding down here and then maybe exiting up here if we've closed down here.
Bingo.
Okay.
Yeah, if it stayed down there, then and sometimes it'll hang out down there for 3/4 of the day and then go back up. But you just have to wait really and see where it closes, exit out at the backside of the trend, or it's
Okay.
yeah. The key is not to get overexcited and add anything in between. It's you're either going to be at those lower levels where there can be a bounce, or you are in between the levels where you just do nothing effectively.
Okay. And if you did take it on the middle and we started to move up, would you add in at any point with strength, or would you just take it maybe at the trend here?
Yeah, I'd
take profit.
I'd definitely take profit at that trend, because
Like a full take profit or half, and see if it runs.
I'd take 50% of the trend, and then I'd see if it ends up hard closing, because you've got a reverse hold in there as well. So you're actually just sitting up just above the reverse hold at the moment. So that's
Where was the reverse?
so you go.
Oh, this one?
Yeah, that one. Yeah.
Okay.
So you may not go. Excuse me. You may not go down. It might just be trying to close up above that reverse hold and then bounce straight off that. So that's
Okay.
And then of course the reverse hold is gonna go up and run into the trend, and then you've got untested holds getting left behind. So if that happens, you're going to go up into the trend, hit the trend, you've got untested holds left behind. If it doesn't close above the trend and continue, it'll reject off the trend and come back down to the untested holds.
Okay, so potentially hit this middle backside, hit trend, maybe come back down, hit the previous backside, maybe another unsustainable, or do you think it would just die off if it hits this backside?
No, it would probably have some kind of bounce. Depends what it
Maybe
does.
this trend
Yeah.
over here.
It kind of depends what it does in between. So at the moment, you don't have a hold, but by the time it comes back down to that, you might have another hold, because you got a yellow candle now. So if you actually end up going up to the trend, coming back down, closing blue, creating another hold, you could create a reverse hold. You don't really. The thing is, you don't really know what will happen between this point and that point. But at this stage, all you really can work on is it's either going to try and close above the reverse hold, and it could just bounce straight off that, head up, or it's going to pull back to the trend or to one of the lower holds. At this stage, it looks pretty bullish.
Okay.
Short
I guess
term.
kind of yeah.
Keep saying short term.
The
weekly looks horrible.
Going back to kind of finding my bias and kind of a more clear example. So I think I had an entry around here that I was thinking, okay, this is kind of the bottom of the range that we've been sitting in. So we might hit that and have a good bounce. But I stopped out of that one at some point because I knew, okay, if we fall through that, we're probably going to hit this 75 level. And then we just kind of fell straight through that. So I've got a partial that I was stuck in for a while going down.
Yeah.
How can I avoid something like that and see the move not holding and breaking down?
You got to wait for it to close. So there's a couple of things in there that you can see it closed under that level, and then it went back up and it touched the level from the other side and then dipped, basically. So that's if you'd waited till close, you would have seen that it closed under it, and that's pretty much your your only real warning sign. There's also, from the looks of it, some kind of interior trend. Maybe. Where was the trend before then?
I'll just step through replay.
Yeah, so first thing is, just notice you've got origin touched, origin touched, origin touched. They're all touched, right? And
Yeah.
your first untouched level is a break level at 75. And then your next untouched level is down there at 73. Oh, that was a pump. What's happened there? Something just moved. So you got all of those are touch levels. They're already tested. They've already had their minimum bounce, and you're creating a hold level above you right now. So, I mean, at this stage, that's not recovering. Something's going on.
Yeah, there's where it fell straight through. We closed under. Then I guess there I should have just exited fully because the move was lost already.
Yeah. Or the other side of it is just not enter at all. Like if you're coming down to hit that level and you close below that level, then you just wouldn't go near it. Whereas you see the 73 level, which was an untouched level prior. So if you
I had another partial entry there too.
So the untouched level got hit and it went back up to the level that was closed below.
Yeah, I did have a partial exit, but I should have just fully exited in hindsight.
Thinking, okay, it might get back up above there, but that's the thing. It's you don't really go for the whole if it gets back up there. So that if it gets back up there is not a reason to keep a trade open. It's a reason to open a trade if it does. But if it doesn't, it's not a reason to stay in it. So it's like if it touches the 75 level and closes above, it's a reason to open a trade. If it touches the 75 level and closes below, it's not a reason to open a long, the untouched level, you can generally speaking, geez, the market is actually going up for some reason at the moment. Turn off your replay tool. You're just bouncing.
Yep, maybe we'll get a trade out of stuff we just talked about.
Yeah. So it looks like it's at least where we hit 69. So I think the weekly trend is sitting at about 70, I think. Is it the daily?
Nope, I don't have the weekly up. That was Sol BTC. There's this whole weekly. Yeah, today way up there, but tomorrow about 69. So we might close over it if we keep pumping.
Yeah. 9:45. It's got a wee while to go. Yeah. So the untouched level would have been kind of a safer bet for just where to actually start a trade.
Yeah. So looking back, it was we were looking around here. Yeah, so that should have just been my full exit. Get out. We've lost the move.
Yeah.
I think a big part of that was just the FOMO of I had been waiting for us to kind of do that sweep, and this was the pump that I should have known or had a good idea that this is probably the upside sweep that we had been waiting for, rather than something that would sweep down and have the strength to come back up. It's probably unlikely after we already had a sweep to the top. Is that correct thinking?
Yeah, it's not a very good. Excuse me. It's not a very good topside sweep, that one. Like it's
I was kind of expecting more.
Yeah, you'd almost expect that sweep to get swept, but there was some bigger resistance inside that whole 97, 98 area, real big backside resistance. And this is the catch with watching on, say, a daily time frame, is even a daily is really not that big. It's in the scheme of an asset that's been around as long as what Sol has. I think if you went and had a look at what levels existed around that, just see if I can. Sol.
Are you pulling your stream up, or did you want me to pull something up?
No, I'm just checking in the dashboard for hold levels on higher time frames.
Actually, that could be a good exercise for me if you want to walk me through how to view what you're looking at now.
okay.
So I just tried to pull up the dashboard. It looks like it came up on the stream.
So if you go to metrics,
is that there? It is.
Actually, sorry, go to the little burger thing next to metrics. Yeah, drop that down. Have a look at Sol. Go to native.
Oops, yeah, it wasn't native. Native holds.
Yep. And now those holds will have, if we've already hit them, then they're now going to be either active or completed. So if you get rid of possible and inactive, and then get rid of long, okay, and now filter by entry, or sort by entry, I should say.
Where's this? Oh,
So
down this table.
Yeah, just click on that, and then yep, and scroll down to roughly where that thing rejected. It's probably going to be on
oh, more pages.
Yeah, there'll be a lot. Okay.
Maybe page 4.
Maybe page 2. Oh,
about what price were we looking at?
It'll be in the 90s somewhere.
Yeah, back a page.
So you can see you've got some pretty big holds.
Yeah, so this, you're showing me what we were running into on that upward sweep.
So what's that? 11th of the 5th, we ran into, was that a 419-day hold?
This one.
So that probably gave it a good kick in the face. 78.
And we're headed down to negative 620.
Yeah, exactly. So, I mean, those kind of holds, they're not going to ever go to the lowest target because you can't take it to negatives, but they're sure as heck going to give it a good smack. So it's that's the kind of thing. So the other thing I would quite often do is I'd sort it by activation time to see what we've most recently run into. Yeah.
Am I still on? Okay, back to page 1. So activation time.
And
these are our most recent high time frame.
Yeah, so you've got a 1 day that you ran into, you got a 42 day. So see that 42 day, which takes us down to 59, that's completed. So that's good.
There we go.
But a revisit to 63 is still potential. And that makes a bit of sense. We've got layered liquidity at 63. So if we were to head down there at some point, then that makes a bit of sense. But that's the 1 day that you're looking to flip. If you flip that 1 day, you can keep going up. And if you don't, then you've got mostly completed from the looks of that. So now you could look at longs. So turn off short, turn on long, have a look at activated time. And the 2 day, which takes us up to 68. So we would have just completed that.
And we just hit that.
Then you got some stuff down there, that bigger stuff that takes us what to 86 on the 22 day, 88 23 day. Yeah, so 89 on the 35. So you've got probably a little bit more long bias right now than what you do short, because other than that 1 day short, which is still recently hit, the bigger stuff looks like it's trying to push up at the moment.
Okay. So I guess to work this into the other things, I've gotten my kind of time frame views to see my macro of my alt versus BTC and totals. And then I start looking over here in the dashboard to see what holds we just hit or which could be activated soon.
Yep.
Is that kind of the workflow I should be looking for?
Bingo. Yep. So then if you want to know now the future basically just means unticking the active and completed boxes and ticking the inactive. And of course, you're not going to have an activated time, but you can sort it by price. So you just look at your entry and
Is there a sorter by price?
it's just entry.
Not yet. Okay.
Yeah, it's a good. We should actually have like a little slider so you can narrow it down and just look at the price. These are things we can add.
Yeah, so if we do that drop to 63 for the 1 day short, we could also pick up a greedier entry
Yeah.
potentially for this long.
And look at that massive 41 day long.
The 41
Sorry,
week?
41 week long.
Yeah.
It's huge, eh? So that's the kind of thing I've been looking at and just going, okay, well, if there's going to be a sweep, if there's going to be a bounce, it's probably going to be off something like that. And
Yeah, there's a lot of 58s, 57.
Yeah, exactly. So,
And
it's not uncommon to bounce off a daily and have a bit of a move, and that induces the liquidity, and then of course they sweep down into something much larger, and then the real move kicks off the larger one.
say that again.
It's not uncommon for lower time frame stuff like a 1 day or whatever to create a bit of a bounce, and that induces the liquidity. So once the 1 day starts to run, people start to open those longs, and they of course
Oh, okay. Yeah, I see.
they become the liquidations that are required for the 41 week move to actually be tapped and then take off.
Okay, so before this, maybe we do hit that trend, come back down, backside to trend like we were talking about.
Yeah.
Maybe get some liquidity in there to help us drop back down to maybe these 58 levels if they're going to sweep down.
Yep.
Okay.
Because trends are the target of holds, and holds are the target of trends, right? So we've left behind daily holds untouched, and we're going to run into a trend. So there's a good chance that we run into a trend and we come back to the holds, and then if we sweep the hold or break the hold to the downside, we then run into something really big, which can then actually send it back up. Meanwhile, all the liquidity is getting created because people see the price running away. They think it's something to do with the war deal getting signed as the narrative, and the price is going up, and the market's not going to stop, and we should open along, and then all that layered liquidity comes in, price goes and takes it, and then bounces for real.
Yeah. So that's kind of the trend to hold stuff. How should I be factoring in when I'm looking at breaker origins? Because I guess I get my kind of macro time frame of the day, where we're at on my charts, and then I come over here to the dashboard to see if there's anything close to be having an entry on. Do I start looking for origins? Because I kind of prioritize origins when I see them on the
Okay.
trading view charts, is what I'm currently doing.
So origins are the top and bottom of ranges, and they are the creation of a range. So if you were going to filter by origins, probably the first thing you should do is just turn off everything that's been touched and just have untouched origins. And then you want to probably click on 2, so just click on page 2. I think it'll flip down to 1. Maybe there are 2 pages. Okay, so you got all your untouched origins, and now you want to sort them by price, and you want to go find where we are.
Yeah, so not
Okay.
much beyond
So-
our current range area.
But what that's actually telling you right there is where the top of the range is and where the closest top of the range is and where the closest bottom of the range is. So 91.932, that's going to be the top of a range, 5-day from the looks of it. And the bottom, I think you've got a daily 61.
Yeah, is that hard to
touch.
read? I forgot I have a high-res screen. I can make it larger.
I can see it. So the thing about origins getting created is they usually then lead to a range. So if you were to go back to the, what's that? Go to the 5-day chart.
Oh, on the dashboard?
Yep.
Zurich. There we go.
Okay. And then have a look at where that was created.
That was the 91 origin, or were we looking below?
Yep. Okay. Now, have a look at the first hold that got created.
Is that this one?
Yep. Now have a look at the ones behind it. You've got the 2 in the middle, and then you got the backside, right? Now this could be a 2 or this could
Let
be
me visualize that better.
Okay.
Oh, I hit escape. Take me back. All right, I'm back.
Gonna drink some of this Nemesis water.
Okay, so let me try to get this backside order block type stuff. So this would be our newly created front side. This would be, I guess, our middle, and we would have a backside here.
Yep. Now have a look at where they closed. So when they created that front side, have a look at exactly how that candle closed. That big blue one.
This one down here.
Up above.
Under trend, this one.
Yeah, sorry, where it opened, I should probably say.
Okay, so yeah, we're under,
Notice
and we're hitting that middle and backside.
Yeah, notice they trolled it quite nicely, and then just went up and tapped it, and then dumped. So it starts with the origin. They create the origin at 91,932. Then they create the first ladder points for the range, and then they start to range. And as you can see, they really did go for a range. Now, scroll your screen across to the left. Okay. Put a line on the wick of that blue candle. Down.
This one down here, or this one?
Up. Yeah, keep going up. Down.
Were you looking around? Around here?
Yeah, down and to the left.
Am I looking for a break,
blue,
or what am I looking for?
blue candle. Yeah, you're nearly there. Yeah, straight up.
Oh, this one.
That. Yep, look at that. Okay. Now go back and have a look at where that price stopped. Okay, there's your
Over
ladder
here?
point. Yep. So there's your ladder point. So create the origin, create the hold, ladder the hold, find the next hold.
Okay, so if this engulfs, we get our hold and our range to start
Bingo.
working back up to the top of this
so
range.
How many days to go on the 5-day?
Where does it say?
Top
Is it up
left.
here?
Yep.
All right, we have a day and 2 hours.
We're screwed.
I don't think we're gonna make it.
I mean, it can engulf. It can engulf the 5-day over 2 candles, but it's But I think from that you probably get the point. The origin is the beginning of a range, and then the ladder points come after the origin, and then the ladder points ladder, and they have to find some opposite ladder point. And the opposite ladder point, of course, is this thing that probably existed all the way back in 2023. And so, you could have taken a swing. Then this is, now swing trade. The moment it created that hold, you could have just hit short and just put your stop loss above the origin.
Yeah, but right
Because,
here, I kind of looked for
yeah.
that backside and entered there.
Yeah, I mean, you could have entered there and just that would have been a little bit more precise. You could have entered on the backside, taken a TP, when that first candle closed, and then just set your stop loss at entry and waited for it to go down and hit the ladder point and then take another TP, and it'll be working its way back up now. But it's not to say it will go back up, because if this current candle closes as a yellow candle and then the next one engulfs it, then that creates another ladder point which could ladder it to the downside again. So that's also very possible.
Yeah, we could end up with something like this. Maybe that sweep to
bounce that trend and then head up to that next trend. Yeah, or head up to the hold, head up to a retest of the backside. And there'd obviously be bigger time frame stuff here, but that's how you use that. So you use the origin level thing to find the most recent origin created, to then find the hold that got created by it, to then find how the price is actually moving down from there.
Okay, then I need to shift how I'm viewing origins, I think.
Yeah, so
I think I'm viewing them too simply as just something to look for a bounce on, rather than looking for the entire range creation that
well, that's what we use them
setup
for. What we actually use them for is the fact that they always have a first time rejection, and it's just a scalp trade. So origins are just one of the easiest and most high probability scalp trades that you can take.
Okay, so I'm still doing that part right, but I'm not going to the next level of looking for how it might continue to get my next bias, I guess.
Correct.
Is that
yeah?
okay?
Because if you're trying to work out bias, you're trying to work out which way is the price actually ranging. If you're trying to take scalp trades, then there's so many opportunities to take scalp trades. It's like in this case, you could have scalped that hold level. That would have been a scalp. We don't know whether that hold level was going to hold, but you'd be up at 69
the one
now.
at 62.
Yeah. So go chuck a fib on that hold. Fib that whole thing from wick down. Okay. So that would have got you from 62 to 68 or thereabouts.
Mm-hmm.
Yeah. So that's just taking a range. So if it closes over that, it can probably continue up. And then that might lead to an engulfment in the next 5 days, which might lead to something new. Is there a break level over there?
Oh, I did it again.
4 hours in, have we solved most of the world's problems yet? No, we've laughed about them.
All right, sorry, what were you saying? If we engulf,
so now let's just go left again and just see whether we've got a break level over there.
to the down or upside?
No, we don't. No break level in there. So the break level is lower. So this ladder point is part of something bigger. There'll be a 5-day origin all the way down there somewhere. And you can find that through the metrics thing by just looking up the time frame, really. So you could just go, origins and then look up 5-day, and then you could actually find the boundaries, or you could turn on. You could expand the proximity that it's looking for levels, and then it will just point it out to you, or you could filter, get rid of all your. Yeah, there's lots of ways you can find it, but at this point,
since it's so far away, do I really care about what the 5 level's doing down at like $20, or would I just start looking for other areas?
The reason you care about it is that if it's that far away, if it's going to test the bottom of the range, where is the bottom of the range? So we know what the top of the range is, 91. Where's the bottom?
Yeah, so we'd be looking down here at 21 about.
Yeah, it's probably going to be somewhere down there. So it could make a new range, and that's possible. Like what it tried to do when it hit that whole 90s area, it tried to use that left-hand side there to create something new. But really, it's going to be 51 or around 51 that it could create the bottom of a range.
Okay, so I guess what I need to care about on the 5-day, I guess that's part of the analysis paralysis part, is I know that there's all these other time frames trying to do stuff. So if I focus too much on the 5-day, what else am I missing? But I
Yeah.
guess just focusing on the 5-day, if we lose this, if we close into here, I have a pretty good idea that maybe we're going to head down to that 21 range base.
Yeah, so it would go to the halfway point of the hold or the bottom of the hold, and then because at the moment you've bounced off the wick, so you haven't actually tested the body, so there'd be another bounce, etc., off the body, and then you'd head to the base,
Okay, so
which is the
that's
break.
kind of the last area. If we can recover from
Yeah.
the body, maybe we see that 91, or if we close down up below the 0.5, we're probably losing the move. Look out if we close below here, we're headed straight down.
Yeah, bingo. That's it.
Okay. Is there anything else you wanted to go over in the dashboard here? I guess, yeah, anything on the 5-day? I'll shoot you another question.
No, that looks good.
Okay, so when I'm starting to look for a trade, we can view these breaks, you can view the holds and origins and stuff. Should I prioritize looking for nearest holds, seeing what has the closest entry, pulling up its chart, looking for the trend? Is that how I should be looking for trades?
Yeah, so what you should look for is you should look for an untested hold and a trend that is providing support or resistance to actually head towards that hold. So we don't have the trend module inside the dashboard yet, but that's something that's being worked on at the moment. So you'd look for inactive, and then you'd look for the closest inactives to price, and then you'd check those to see where the trends are currently sitting.
I'm just looking for one to pull up to go through. So let's say we hit this long at 64. Is there a chart viewer on the right side? Yeah, so I'd see the potential hold there and there at 64.
So now you got to look for what trend could send it to that hold. So basically, you're looking for a daily trend.
Where do I clear drawings? Okay, I think I got it. All right, so here potentially have this, or we know we have the 65 about hold.
Yep.
So I'd be looking to potentially take that entry.
Mhm.
And then it also looks like we have this would be a backside.
Yeah. So if you just rewind a few days, Chuck, where was your daily trend?
Let's see if the auto trend will take it for me.
Okay. So you can see the trend that was created there. So if you go back, you got those two blue candles going down. Where did the price open on that first blue candle?
We stayed right above the range level, so we're still in our range. You're not losing it yet.
So if you go to the top,
Is that what you're saying?
Go to the top of that candle.
Oh, I think I got it. It's like that. Now I can move it. Okay. So you're saying to look at this first blue candle?
Yep. What did that open? Where did that open? Under the trend or above the trend?
Ah, I see. Yeah, up above the interior, but below the exterior.
The exterior. And what did it then wick up and touch?
It hit that broken break retest. Is that what that is?
And
Yeah,
the
break.
and the
We
exterior.
just broke it.
exterior trend.
down here.
So it wicked through the exterior trend, hit the retest, and then where did it reject? Where did it go?
Back down to the range base.
Which is also the hold.
Yes.
Bingo. So
Okay.
trend to hold. So now that we have created another trend that we haven't, another hold that we haven't touched, we're potentially going to create another hold today that we haven't touched, but we're heading towards a trend.
We'll potentially get this new interior here today, most
Yep.
likely.
And if we open over the top of all of that, we should be able to head up. But then we're going to run into that next array of resistance trend. And when we do, that can always send it back to the hold.
Okay. So yeah, it might be entry here because we're testing these trends and the
First-
range hold together.
And then first
Might bounce up,
TP,
get our 1.6 TP, potentially hit the hold after that, then may work our way back down to our older mid side maybe, or is that more
Yeah.
greedy than we might expect?
We see it. Excuse me. It's also going to depend a wee bit on where it opens, because it might open just underneath the support trend.
Do you mean this candle right here?
Next candle may open just under that support. See, it's
That would be down here.
It's right on the line, so it may open under the support, in which case it could wick up, wick down, but it's kind of in between the cross of the trends at that point. Whereas if it pushes up just a little bit more, it'll actually be opening above the support trend, definitely above the support trend at that point, in which case it's more likely to be able to continue up.
Okay. So this is kind of a more nuanced close, one of those maybe magnet levels.
Yeah, I mean they're often like this, where they'll float around next to a level and then close just above, just below.
So if we do close just about here on our support trend, would you expect it to just hit the rain base and the backside of the resistance trend and then maybe continue back up?
Yeah, so this is the whole like bullish bearish bias thing. If it opens above that trend and goes up first, then you should actually be bearish. And it sounds weird, but
Yeah, I get that part.
because then you're moving into something and you've got a untested target for that, which is the lower target. So that's kind of where it opens higher, goes up, pushes back down. Now, if it opens and then goes down to the hold and then starts to bounce back up, that means that they were more interested in taking out the long liquidity, and you're only going to take the long liquidity if you actually want to raise the price up, because you are buying their stops, you're buying their liquidations, and you're only buying if you want to go higher to sell. So if it goes up first, it's because you're selling, and then you want to go down to buy, and vice versa.
Okay. So that could be a chance of if we just open up, go up, we go down.
Yep.
We'll probably start looking in this hold for sure, but maybe down to this backside is kind of like a final sweep after accumulation.
Yeah, and
Is that kind of what the bias would be?
the backside and that the greedy point of the middle hold is basically the same level. So that's a really good level. Like if you're looking to get some kind of entry, anything around there is a really good level.
Okay.
And then that would
that makes sense.
That would send it back to the trend. So that's a relatively decent trade. The one catch that happens with trading trends to holds is that if the price stays flat and sideways for too long, eventually you do get to the trend, and you can go down into a hold and still eventually hit a trend. So if you were to go down into that hold and travel along for 4 or 5 days, you would hit your target even at a lower price than your entry. So
Do you mean this hold or the greedier holds?
The greedy ones below. Well, yeah, the top one could be the same. It could still happen. The top one just goes sideways. I don't like
either
that.
way, I guess.
Yeah, I don't like that top hold as much. It's a bit of a doji.
Yeah, So likely may not hold for long. Small bounce. Maybe we hit a trend.
Yeah, you could just
Depending on
hit-
how the next 2 days close.
Yeah, I mean that whatever happens today, if that candle's yellow, it breaks the trend. So then the nuance is, does it have a long wick or a short wick? You know, does it open above or below? Does it open above the support trend as well as the wick of the whole candle, as well as the resistance trend that's new and getting created, or does it open below it all? You know, do they just push it back down a couple of bucks before the end of the day, and then it opens breaking a trend but under everything, in which case it's a very different result. And that's the kind of move that could then break that hold, because it would be opening under the resistance. It could just touch it and then head down and target the hold, and then if that hold didn't survive, it would go to the next one, and then the next one's job is to try and keep the price laddering. So this is an uptrend. At this stage, this is a daily uptrend. We've created a ladder point, we've laddered a ladder point, we've created another 2 ladder points, we've hit a break level, we're closing over the top of a break level, we're engulfing a wick. So what you are seeing is effectively a daily uptrend, but a daily uptrend can change, you know, at any time. It can reverse, but it's probably not going to reverse until it hits a trend that can send it back to the hold. So it should have some more upside to it, whether it's to 70 something. It should have a bit more upside to it on the daily. So now you got to look at the weekly. Where's the weekly trend? Because it could be up there or thereabouts.
Load. Why isn't it grabbing the bottom? It's not quite moving the candles as I expected. Oh, well, this still gives us a view, I guess. See, our weekly, there's our daily trend that might be forming today. And then our weekly will probably open over here and may not have a large upside.
Bingo. So the weekly hold is that 61 level that I think we touched. And so we're definitely bouncing back to the weekly trend. That's from that weekly hold over on the left, far left, 2023 left.
There it is. Sorry, did you mean the bottom side hold?
Going left, yeah.
This one down here?
Here's one of the wonderful things I learned about trading. Always look left. Look as far left as you can find. There's always something on the left that creates whatever is happening on the right. So you've got one weekly hold there, which created that bounce that sustained the entire range that we were in for quite a while, until eventually that just didn't happen anymore because we created an origin and we started to reject. Then we've come down.
Yeah, we tested that base. We're inside it, up against the trend. So unless there's a good pump into the week, we're likely going to hit the trend, fail the range base.
You got it. If that weekly candle does not get into a position to open over top of that trend, then the chances are it's pretty screwed, because the weekly hold is going to try and get to that trend, but it doesn't mean it's going to break the trend.
So this is a polarized range base now. So we might hit that first, hit trend, and then jump.
Yep.
Or do you expect that it might have enough strength to try and give a trend continuation if it hits it at the right time? It'd have to be compressed for a while, I guess, to get over here.
Yeah, first thing I would do is I'd look to see if that weekly hold was ever tested before, which I think it was.
The base or just the top of it?
Both.
Why is it not moving how I expected?
That's the one that created. I think that top one's the one that created the whole range above. It's the one below that, which I can see
this
the yellow
one down here.
Yeah, so the yellow candle touched the body of that previously, and then this is your.
That was the one down there.
It actually touched it when it was created.
There it is. Oh, okay.
Yeah. So this is the second bounce that thing's had to sustain, which is probably why it's not looking so flash right now.
Oh yeah, immediately.
Yeah. So it was immediate, plus that blue one after it as well hit it, didn't it? It hit the wick, maybe? Or no? No, it didn't.
No, not yet. So this is polarized.
So there'll be a
that
range.
gave us a bounce.
There'll be a range trend off that though, which you're gonna have to run halfway across
This
the
one,
screen.
or do you mean when it was hit?
Yeah, the bottom.
This base one, right?
Yeah, there'll be a range trend off that.
I think I gotta move and grab it. Was it that one? I don't know why it's not letting me drag the candles around. It's making it a bit difficult.
I find sometimes you got to clear the cookies, especially when
okay.
you've been doing too much stuff.
So our range 1.0 is down here.
Yeah. So if that's your range trend, so you've got another level you could potentially bounce off as well. So you're going to run into a weekly resistance trend at some point. That's going to try and send it back to the hold. But you've got a range trend down there as well. And you've also got the option that it might close over. It might actually open that next candle over the top of the weekly trend because it's still got a day. And, a lot can happen in a day.
If we have this polarized range base and the range trend, I guess we could expect some kind of decent bounce, but minimum only to trend if it hasn't been touched yet. Because I guess this is a polarized trend now too.
Correct. If it hasn't broken that trend or if it doesn't open above that trend, it can just reject off that. Then it can either break the range trend or it could be maybe a more drawn out process. The weekly candle might end up as an engulfment of this current yellow week, in which case then the engulfment breaks the support trend or the range trend. So
the next week is going to be very important to tell us what's going to be likely.
Even this weekly close, they might just take it up just enough to open immediately under the trend, you know what I mean?
Yeah.
And then just dump straight away. That's the kind of stuff that happens sometimes. It hangs around and then it, particularly if people start to get really bullish or bearish, if the market starts to get out of balance one way or the other, and then it just option A, open under trend, Moonboy tears. Option B, open above trend, bear tears. So
yeah, we were talking earlier about these 57, 58 entries, but looking at the weekly, those maybe have limited upside if we're starting to lose.
Well,
and maybe they aren't that great to take a trade on.
Have a look at your 41 week.
Okay, so we do. Yeah, that was the hold. That was a big 41 week.
Yeah, so that's untested. So if you get rid of your...
Just clear stuff?
Yeah, clear it, delete it all. Always look left. That would make a really good t-shirt. For those on...
BibLab merch.
Oh, yeah. We should make that. Always look left. Yeah, so that...
Okay, so maybe those entries do have a lot of strength behind them. Potentially, we don't have a trend yet.
You can see the 41 week range. It's that big yellow candle that we're rejecting the wick of. So where does that take you if you fib that thing? Probably to 0, right?
Yep.
Yeah, it goes below 0. So I mean, that's the kind of game over. We're pretty close to the bottom. We're going to find some kind of support. We're going to bounce. Yeah. Pushing through the trend. But that's probably still got, what, several hundred days to go on it?
232.
232 days. So chances are in 232 days' time, that will be higher than where it is now. And that's because it's come from the top side of that trend. It's grabbing liquidity. if it touches or goes into that base hold, it's going to start to reverse. So
There's the 39 potentially greedy
Yeah.
entry.
bingo. Plus, look at you've got the bottom of the reverse hold, that really big yellow candle.
Ah, yeah.
There's a polarized hold.
A lot of confluence at 34, 39.
Yeah, that's it. There's lots of reasons why we're going to that hold, and even if you just chuck a trend from that top of the first yellow big wick candle last cycle, so
This one?
2020, yep, go last cycle, yep, run that trend and then run it to the next level, and what do we reject off? Rejected off the trend. Where are we going?
Down to the hold.
Bingo.
So I guess I'm still not quite sure where my bias should be on this hold. Do I expect it to have any kind of bounce up in here temporarily to help the daily and smaller time frames hit their targets? Or could it just be too strong and
Welcome
go to the greedier entries down here and wipe out those smaller time frames?
So welcome to the key thing about bias. Bias is based on time frame, right?
Yeah, so I guess those daily 2-day, 5-day could easily fit into this 41 week with
Oh,
just
100%.
small move back up. I guess we
Correct.
already did that for some of these other entries too.
You
So
got it. You got it. All the small stuff fits within the big stuff. So
okay, so big spot entries, I'm probably looking more down here.
Yep.
But in the meantime, I can take my lower time frame small multi-day scalps and still
yeah,
not get too confused by this higher time frame here.
correct. Yeah, and where would you say are safe places, if any, to put stop losses or liquidation levels, etc. for your scalps? They kind of have to be a range above what you're dealing with. Like if you're taking a daily trade, well, if it hits a weekly moment, it's probably gone too far.
Yeah, so that's the stuff I'm looking at there. So I guess daily, I'll mark that range we were looking at least the greedier one. So you're looking at that 1 week. So if I was looking for that 58, 59 entry, the weekly at least has that range here. So we have the mid levels. So I guess I would want to stop loss about 55 or 6 below that 0.5 and the
Yep.
0.8.
And the other thing, of course, is you don't just put a limit order on it and wait to get an entry. Because if you do look at that, you probably have to look on TradingView, but if you looked on TradingView at that weekly level and what was happening on, say, like 15-minute or 3-minute candles, etc., when it hit it, you'd find that you can actually see the trend starting to reverse. Let's jump into TradingView and have a look at that on a really low time frame.
Let's see. Which area?
So go
I'll drop the
weekly.
vertical level. We were looking at which point?
Across to the left, you got that weekly hold around $61, I think it is.
The close one or the old one?
Old one.
Oh, okay.
So,
Was it this one or
yeah,
this one?
lower one. That one. Yep. Have a look at what happened. Sorry, what I should say is put a fib on it.
Okay.
And then come across to the modern day and have a look at what happened when it went into it on a lower time frame.
Weekly. Is it this one?
Yep.
69. Okay. And then I'm looking for when it hit the 1.0 on the
Yep.
lower time frame back over here.
You got it. Okay, and now go down to like a 3-minute chart.
I'll work my way down.
Okay.
That was the one on the 15. So here's my 3-minute.
Cool. So you
That
went
was
down and in. Okay,
so there. We kind of started reversing.
got it.
We made a range here, a range here, but we didn't get out of it.
Now see if you can
Um,
find an origin. So it's not there on the 3, but it might be there on a 2-minute or a 5-minute. There it is.
Okay.
Okay.
So we created it here, but that was still part of the move. So I guess our first hold was this on a front side and this
Yep.
on a back side.
So now put a, well, you've got a front side, middle, back side there, but put a line on the top of those 2 candles to the left.
That's our break.
Yeah.
Is that the
next-
one? Or
Go up here, go up a bit higher. That one, yep. Yep. Well, in actual fact, put a line on each of them. So you've now got a line on the top, a line on the middle, and put a line on the hold candle, but put it in the body of the hold. Yeah, because the other 2 are close enough. Okay. Now scroll across to the right. Okay.
okay. So we got our retests in for both of these breaks.
Yep.
Those aren't going to probably hold us up anymore after that. And then this is about where we are now.
Yeah. So if you
We
ever
were
look
looking
at,
for trees around the 58, so maybe they'll go into the body of that hold.
it might do, sweep that whole range and then down to the body of the hold. Now it did technically hit the front side. Okay, so when you're looking at that, it has touched the wick of the front side, so it may not come back. But that's basically the reversal that you're looking for. So it's gone into the weekly. It's created a 5-minute origin reversal. It's created a front side, back side hold combo. It's started to ladder up. But the key thing to think about is that that happened in the weekly. So therefore the target is not the 5-minute target, the target is the weekly target. And the weekly target would be the weekly trend or a weekly hold if there's a hold before the trend.
So was that the 1.0? Is it that's the 1.6. So 1.0 was down here. So okay, yeah, that's where we hit it. Then we're looking to hit this trend somewhere along here, right?
Yep.
Okay.
Yeah. So that's where you could have entered the trade. That's how you would have seen to enter the trade. You wouldn't have entered it just with a limit order. It was a already tested hold. You would have waited for it to go in there. You'd wait to see it reverse. And then when it did reverse, you'd take the entry. Now, this is where it gets really cool. Your stop loss can be based on that 5-minute.
So down below the range?
Once you got that 5-minute reversal, your stop loss could be based on the 5-minute, but you're targeting the weekly. So
okay, yeah, because once we start losing the 5-minute, the weekly's lost its strength to go.
Yeah. So the risk to reward is massive. So if you're waiting for the entry on the lower time frame, then basically your stop loss is going to be based on that lower time frame, but your target's actually going to be based on the higher time frame.
Okay, that makes a lot of sense. I think that's helpful too, because I probably would have thought this is like a huge stop loss, so I'd have a very small position size to account for that.
So you only have to have a huge stop loss if you're just going to chuck a limit order on the weekly and wait, because you get that entry, but it could go all the way to the bottom of that range, right? All the way to the bottom of the hold candle or more. It could hit the break. So your stop loss has to be really, really wide if you're just going to set a limit order. But if you're actually going to manage the trade, wait for the reversal, then different.
Okay. That does bring up kind of what's happened recently is a lot of these big moves have happened overnight for me.
Yeah.
So I guess in that case, I could put a smaller order. If it hits it overnight, it'll open it, and then when I'm up in the morning, I can watch, are these low time frames reversing? If not, just move my stop loss up in case we lose their range, or if they are building up, like we start getting past this 2.6 on the 5 minute, I could start maybe adding a little bit more to the position now that I've kind of confirmed its motion.
You're also touching on something else there. You're touching on how do you build a position, right? So jump back down to that 5 minute, and now look at the 5 minute fib. Okay, went all the way to the top of the range, and then came all the way back to the start again, right?
But we did at least hard close the range, so I guess this is supposed to be viewed as more of a sweep.
Yeah, correct. Yeah, it's to take out the people that chased it. It's to return back to the front side, and then it goes off from there. So even that 5 minute
Oh, right,
range,
that was our retest to the breaks too, so that made a lot of sense to come back here.
Yep.
Especially factoring liquidity sweep.
So you could take profit at the top of that 5 minute range. At a minimum, that's going to pull back to that 3618 at an absolute minimum on the 5 minute. In this case, it went deeper. So there's no reason why you wouldn't take half your profit off the table from your entry.
Well, this would have happened overnight for me. So that's one of those cases where I wouldn't have known necessarily what was happening.
And then
But yeah, during the day, I could look for that.
Yep. And you could choose to re-enter it when it went back up above the range. You could re-enter it at the bottom. You could do anything like that, really.
If I am looking at the 5 minute for this re-entry, I see that we came back above the 3.6, but then we lost it. So I think looking at the charts, I would start to bias myself towards that we're losing this move and the bounce is going to happen anytime soon. I guess we are keeping our base here and we're not losing it yet.
Yeah, you haven't gone to the weekly target yet. So your bias is still that the weekly is going to go to the weekly target. What you should be thinking is, can I compound my money on the way to the weekly target?
Okay. Yeah, that's another issue I have as I'm looking for these bigger moves and we start returning and I haven't taken much or any profits because it was only a 5 minute and I'm looking for a daily or bigger move. So then I just sort of round trip it back to my entry.
Yeah,
so I should be looking for more things like this, at least partial take profit on these lower time frames and just kind of play in the ranges that they create on the way up.
Yep, because that's how you set your bias. So from 2023, we hit a weekly hold level. We do a 5 minute reversal, we build a 5 minute range. Now your bias should be buy the dip of the 5 minute range, because the 5 minute range is eventually going to do one or two things. It's going to keep ranging sideways until it hits the weekly trend, and then the weekly trend will break through the hold, or it's going to range upwards until it hits the weekly trend, and then the weekly trend could send it back and break the hold. You don't know what's exactly going to happen when it hits that trend, but but what you do know is that you've landed on a weekly moment, so you're going to go to a weekly moment. So yeah, what's the percentage there between the weekly hold and the top of that 5 minute range? Is that 3%?
About a 3% move, so that's a good one to go ahead and capture while it's there.
So if you just
and then maybe
that and then took half of it at the top, there's 1.5% you've made, and then you re-enter it at the bottom again, take it again at the top, another 1.5%. So you can basically just keep on making money through that range, and knowing that it probably will break. Excuse me, it probably will break the top of that range at some point because it's a weekly moment.
Yeah, we did break it up here, I guess. So we expect to return and continue.
Yeah, and it's effectively what it is. It's accumulation. So you're ranging to accumulate on the 5 minute because you're going to bounce off the weekly hold, and then they've got to build the position, and it's it takes time to build a weekly position versus building like a 5 minute position. But if you did the same thing, if you looked at a 5 minute hold level and then you looked at it on a 30-second chart or a 15-second chart, you'd find that the price ranges along the 5-minute hold level because it's accumulating on a 15-second chart to bounce off a 5-minute hold. So it's all fractal and relative.
So this does fit with kind of the direction I'm trying to shift to, is to take these smaller scalps, take profits as they're offered, and then entering back in after picking some set of profit up here.
Yeah.
This would be another case where I don't want to set limit orders, but I want to watch and see which one of these levels gets hit and which starts seeing a reversal.
Mm-hmm.
Is that right?
Yeah. So if you look to the left of the 5-minute range top, you've got frontside, backside, middle hold combination on the left. So keep going left.
Back here?
Up a bit.
Up here.
Now, what created the downtrend was not the front side, was it? It was the backside of those 3 candles, 3 yellow candles.
Oh, when it hit it here?
No, the initial downtrend that led you into the weekly.
Oh, okay.
So the backside of so down, right, go right.
This down.
And then up a little bit and to your left. You got those 3 yellow candles?
Yes.
Okay, so now the bottom one, the backside, rejected it and sent you down into the weekly. Okay. Now,
and then it worked its way back up to
the top side,
possibly
right?
accumulate.
Bingo.
Okay.
Distributed. So distributed in the top side and then gave you the rejection back down to the hold. So what's on the left creates what happens on the right.
I see.
Always look left.
That's got to be my new mantra.
So taking profit when you hit that front side hold was...
Yeah, okay. I see that now.
Yeah. And then it heads down to the front side hold on the 5-minute and does a little bit of accumulation, not a heck of a lot, but it bounces along that, or the weekly, from the looks of it, and then off it goes. So whenever you go off the backside up, you'll always have a relatively fast move, but also an unsustainable move. And normally that's because it's going to run into resistance, and then that's going to come back down to the front side. The front side's often the slow, drawn out one. And a lot of people capitulate in front side holds because they don't see the price bouncing from where they took their entry. And that's also why you don't need to hurry into entering a trade, on a front side hold, because it's probably not going to hurry out. It's probably going to hang around for a bit.
Okay.
And if you can get a lower entry down inside the front side hold, then you can scalp the lower time frames and basically build your position. So like a lot of these algos, by the time the price moves, a lot of these algos are just dealing with free money. They've bought, sold, bought, sold, bought, sold, bought, sold, bought, sold over and over again on that 5-minute time frame. Their entire position is free money by the time it moves. So
yeah, this has been really great for me. There's a lot of things to go over and do the live stream again. Unfortunately, I have to head out to other things. But thanks so much for going over all this with me.
No worries.
It's been a big boost to help me progress.
No worries. 4 hours and 45 minutes. Woo.
Good luck through the rest of your 24-hour journey.
No, just try not to cough.
Well, now you get a quick break before the next session.
Yeah. Who's
all right.
next?
Thanks again.
No
I'm going to sign off.
Catch up. Bye. Right. What am I doing now? Changing screens, right? Who's up? Been drinking more water. It's not good. I mean, it's good for health perspective, but it's not good for sitting here. Hey, Blue.
Hey-o.
Do you want to entertain everyone for a second while I go to the bathroom again?
Sure, yeah. Good luck.
Sing a song.
Okay. The data access. Hey, thanks, Ryan Bears, for subbing. I appreciate it. Yeah, it was Big Brain Helpful with 5-man ranging and a weekly move. A drug for remembering all this.
Oh yeah.
Yeah, there's a drug. It's vitamin C. You can eat pineapples, or lemons.
Play Phil Collins on
Yeah.
loop. I like that.
So I was just saying we have like an hour of gap now, and that if somebody feels to hop on like spontaneously, feel free to do so. Otherwise, I said it's also nice timing because you probably don't have time for your daily update today, but the daily closure is in 12 minutes. So I think you don't run out of things to say, fill that gap, if anything, I guess.
I suppose we could do a live daily update. Just
Yeah,
jump in
exactly.
and do that.
That's what I thought. And
Okay.
then in an hour and 10 minutes, Trevor 2.00 will hop on for 2 hours. And yeah, gives us a pleasure to shoot more questions to you.
Okay. What have I got there? Some little topics being timestamped. I'm not timestamping. Hopefully someone is.
So I didn't have like a giga brain plan yet for the outcome of the stream. The only thing that is obvious is like cutting it down into per person, and then upload.
The outcome of the
Maybe
stream is
write a bit of summary.
the outcome of the stream is going to be a day of sleep.
Yeah. That first of all, after the soccer VM match and public viewing, gonna meet some guys and go full zombie, no sleep.
Yeah.
So no, Jay, good input. I think about it. I don't know if I can rewatch 24 hours again and then timestamp it minute by minute, but for sure there will be a cut version for per person at least, and maybe I can chuck down some rough bullet points. Maybe that helps already. Yeah. Other than that, let's go with what we got for now, because we have a lot of guests for the next, what is it, 18 hours still?
Well, I'm still bearish.
Good.
Something about this. So daily. Let's go daily update.
All right.
Should we go daily
Have fun.
update? Yeah, we've got time. We'll do a daily update. I don't have to record and timestamp and do this one like I normally would.
Yeah, exactly.
So first thing we do is we're going to look here at the safety risk. And as long as we stay like this, we're going to open on the wrong side of the support trend, which is kind of good, but we're going to be opening above the resistance trends, so that's kind of bad. Opening above both range trends, having polarized the bottom one. So if we do take a move to the upside, we're going to have 71.49% up here as a bit of a rejection. And as long as we stay under this overall range top, then we aren't going to completely crash and burn yet. But if we start to get a close up over that, and it's definitely trying to get there, then crash and burnville. Now, if it does pull back a little bit before the end of the day and close underneath the resistance trend, then that could be good to try and send us lower. But yeah, at this stage, it still looks a little bit like it wants to try and break out the top. And the weekly looks a lot like it wants to try and break out the top. So we did hit the break level. We hit the break level again. We're up above the weekly resistance trend. Most of this weekly resistance at the top's already been tested and touched. So, in fact, I think it all has. Oh, did I just lose voice? Don't know. Can someone tell me if they can still hear me? I think my headphones just went dead. But if you can hear me, then it's all good. Oh, can anybody hear me? Oh yeah, cool. Okay. All right, then that's all good. In fact, since no one's talking, I'll use this time to charge these damn headphones. All right. Okay, so the intent shown by the fact that it's hit this 2 times over isn't ideal. Means that it's really got to spend another week not touching it, and that's pretty close. So at this stage, still kind of bearish for risk assets. Okay, let's have a look at the totals. Now, totals, we've hit the break level. Now, it didn't touch it last time, so really it's tomorrow that makes or breaks this as to whether or not that becomes resistance. So quite important that into tomorrow we see this thing actually hit that break level again. And unfortunately, the thing that can be a wee bit troublesome about this is that we're moving sideways. We've got this resistance trend sitting right here. And if we come at that from the wrong side of that break level and hit that resistance trend, that's a pretty good means of actually sending the price back down, plus the retest of the prior broken trend today. So at this stage, I can still see a lot of ways that this thing can end up dumping. If we close over probably about 1.89, it's going to be a little bit stronger, but if it ends up retracing back down under this new trend as well, that's also quite bearish, because if it was able to, if it ended up pushing through 2 trends and hitting that break level again, then it's almost certainly going to end up as a full reversal. And the ultimate bullish close really would just be engulfing both the break and this hold, and then that would actually give you a front side backside combination and be up over the top of the trend, and then at least have the ability to have a proper unsustainable pump to the upside before a return to accumulate and then hopefully travel off to the next trend. So it's kind of really, like most days, depends where we close. So if we look at it, let's just jump back there and look at that weekly. So weekly looks a little better on the weekly, but we haven't tested this backside hold here yet, so that level up there at 1.96 could become a rejection before we actually reach the trend. And we're going to get a very, very steep trend in play. So for the weekly, it's possible that it comes up here, rejects off the hold, pushes back down, lands on something bigger, and then goes back up. So if you watch the last session, that kind of makes a bit of sense. You've got the ability to basically go down and hit those larger levels, and then have a decent bounce off the larger levels. But how are we going to get to them is the question. And if we were to hit this backside candle here and have a solid rejection off that, so 1, 2, 3 pieces, smack into that thing, have a decent dump, and then a better bounce. So definitely keep a bit an eye on that one. BTC. So BTC doesn't look too bad on the daily. It's up above the break, so any kind of close over 64,179, and also a bit more bullish if it closes over 64,370. That's quite good. The wick's nice and small on the candle. Open over the top. So this actually looks all right to give some continuation. And then we run into these retests which need to be done, as well as some of these very, very old. Yeah, so it's all retests basically above us. So we might get an up, a down, and then a bounce. 66. And that's a range level on a higher time frame. So up. Just going to bring up those range levels again that are getting retested. Somewhere. Okay. Change screens. Okay, so we have this whole area around here, particularly that one at 66. Just given we've come off a weekly hold, heading up and hitting that weekly range retest would be something that could be a bit of a stopping point. So 66,019. Which is roughly the same as coming up here. So it's that level right there. Okay. So 1, 2, 3. Yeah. Anything sort of 65 or up could be a bit troublesome. But if they approach it quite slowly, and this is, say, for the weekly close now, if we just continue to creep slowly up here and stay above the trend and then hit these levels, then there is a chance that the trend can actually survive and get us back up in here. If we come at this too quickly before weekly close, hit that and end up pulling back under the trend, then yeah, get bearish. Then we have to come down and check these deeper levels. Okay. Sol BTC. So we really want to see this thing close over all of this. So 105.64, 106.30, and it would be definitely a bit more bullish if it just popped up and got over the top of that 107.04. And then of course we can we got some pretty good confluence with coming up and running into these hold levels and the trend at the same time. So I wouldn't expect the daily just to continue to fly up into the sky. If anything, it's going to come up here and hit this and then have to bounce back. But it's in a good position if it at least starts from over that 107.04 level. Let's have a look. Sol. So trolling, as always. So just looking to close bullish if it's up over 68.780. But a bit of a trap really, because that's still going to mean it's on the wrong side of the trend. So chances are we just push up and reverse back to the hold. If it goes down first, could maybe be a little bit more bullish about that. So closing in a position of horizontal strength, rejecting the trend, coming back to the hold, and then bouncing might be a decent daily move. Ideally, you just want to see it come back into this bottom area and test that, and then bounce from there. The troublesome thing about this is that we're drifting sideways from the trend, so we can end up with a trend move where we open under this trend again, and because we're actually technically breaking this bottom one, we could bounce all the way back down here, which gets you that lower $58 sort of entry point. So that's very possible if we close under this trend. And the deal is suddenly off. Deal on, deal off, deal on, deal off. Soybeans, no soybeans. Funny world. Okay. We could end up just with this reverse hold as well. So it's all kind of confluent with that area of trends, minimum bounce from the reverse hold. There'd be this hold potentially getting created. Same stuff. It's all that sort of $70 area. We could hit that 70, 71, and then that might be the end at that point, and some kind of rejection back, and then the hold's got to hold and get through the trend. So that's Sol. Then of course we have to look at the higher time frame stuff. So key level really for the big stuff to become bullish is it's got to close over these wicks. So that means a pump up through 69 before the end of the day, which probably isn't going to happen. But hell, if it did, that could be quite bullish. Alternatively, that wick can then become resistance if it closes under here, and the body down there at 58 can become support. So we could look at a move. If you entered at 58, because it started to reverse here and show decent volume and decent strength, then a TP at 69 just to be safe, and then try to hold it all the way through to 85 could come about after this. We're starting to create enough stuff around here that points there, and some of it's already in play. So same thing on the 931. So you'd probably do a slight adjustment. Same sort of level, 69,145. So that's and then down to 43 maybe. Okay, so this is under the break. That's not how you do a trend line. So sitting around 81. Excuse me. Okay. So it might open, come down, and more confluence around that 58 level. In this case, you'd have 69, 74 as levels. 91 at the absolute top again if it went back up to test the top of that range. Closing inside the hold, so bearish again, sort of 69. It's probably all going to be about 69, most of this high time frame stuff. Wrong side of the trend, 72. So, and this is already, is this already in motion? No, not quite. So any kind of move up into here could send it back to there. I think this is, got to zoom right in on this one. No, not quite tested. Okay, so we're still, so more levels down there around 48. So what you can get with this kind of structure here is basically the trend. Now that we're down under the trend again, we can just keep continuing down here to 48. So that's possible. But you could also head back up to that trend in that sort of 80s area and then reject back down again. Or we can come down here first and then head back up there. So one or the other. But what you know is that when you get to one side of this equation, it'll balance by heading to the other one. And the earliest point it could reject would probably be about that 69, looking at that. Backside of the trend plus there. So that could definitely move it. Yeah, wrong side of trend. So all it really takes to get along, like a decent long playing out, is it just takes us to generate a hold and generate a trend, but actually to be on the right side of the trend. Whereas you can see why this is bearish. It's that the holds are down below and the trends are getting created with the price opening on the wrong side. So any kind of move up just results in a retracement back down after they take that liquidity. Oops. And that's down about 38 for the body of that hold and about 48 for the top. It may just reject the range level as well. So it's pretty primed to go down. If it gets back up above that, it might be all right. So 64, 65. It's really got to be over 65 today for this thing to be in a reasonable position. Otherwise, yeah, it could just up, down. Let's see. Try to find something a bit more current. It's good that a lot of these have played out. So if you've been watching the live stream today, that's the move when you go through the top of the range and then you come back down to the 3618. So unfortunately, there are still a lot of these that haven't played out, which are down around that 47, 48. So the wick's starting to get a bit longer on some of these. So if we are to break a trend, it's not quite bodies touching, so it doesn't shift to support inside the hold. So that's 68.8, top of that 72. It's really not recovering fast enough. Yeah, and then this is kind of shows you how far you can sort of zoom out, but this has got a full range in it with a back, a middle, and a front. This was the hard close of the backside, and then you had that unsustainable bounce, which is this part of the bull market. And now we are bleeding back. So this is likely our target levels that we should be looking for if this ends up losing this level. So it is very realistic for this thing to come all the way back here into the 30s. Yeah. Okay. And most of these bounces have already played out. So we've bounced off these holds and gone back up and rejected to come back down. So there's not much left in there. That level is probably going to bounce. But that's down at 48. And then eventually back to this fella down here. Looks like we've got 45 that hasn't been revisited. Yeah, still kind of bearish. Just doesn't look like a bottom. Looks more like we're going down. And then this. Okay. So 64,936. It's either going to close below this wick or it's going to creep above this wick. Now, if it creeps above it, it's probably going to go back to the hold, body of the hold. It's about 70k. And it's bouncing off this. Did we? So what we've got to check is, since touching this level, have we been back to 65? So first use the right tool. Put that on there. Put that on there. Go from 50 down to 1. No. So we've still got that little bit of upside potential, just sort of like a minimum bounce. It looks like it's pretty much complete now. So where this gets, bullish or bearish really comes down to when they choose to complete it. If they complete it tomorrow, they've already created the resistance, and that's bearish. If they complete it today, then it gets it back up inside here, and then we don't create that resistance under that wick, so that then looks a little bit more bullish. So staying under that wick could push up and then break down to that range trend. Yep. Still a downtrend till it's not. So got to get back up above 64,935. Same thing. Yeah, and even if it sort of gets above that wick, it's still got these bodies that it could be below. And backside holds, frontside holds. It's pretty bearish. They've got half an hour, basically, 40 minutes to pump this thing, get it out of this area. $65.6. It's really got to get above that. $66. So it's got to get above that. Okay. Yep. Definitely need a last minute pump. It does look like it might at least get out of that whole 64, 65 area, but don't know whether we're going to hit 66. Yeah, 65.5. Oh. Pump, 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 pump. Okay, so our first possible upside hold, if we can close over 64,732. Or over 64,118. So we're already over 64,118. So we've got possible 5-day reversal there. It's pretty hard to have huge hopes on this though. Just if it, even if it creates this engulfment, the amount of really big stuff that's in there waiting to reject, because it's just spent so much time in here, is pretty huge. $64,880. $66. Okay. Oops. Not there. Definitely got a pretty good chance of getting to 66. And then beyond that, who knows? Okay. So So once we're under the 73, if we could reject anywhere 73 up and then come down here to 48 or lower. And could get a 38 to 58. Could get a 58 to 89-ish. So could get a bounce in there. Definitely a bounce once we get lower. Be good to see that 330 as the sort of top for the next swing if it goes all the way back up to there. $48, $46. So good sort of levels to look at starting spot, basically. Trend coming back to the hold. Origin. And yeah, reasonable structure to bounce next cycle, but at the moment, under the trend. If it hits the back of that, it could just come straight back down to that. So not much change really. 38, 27. As long as Sol doesn't die, it's going to go back to 300 at least. After a little bit of trouble at 260. Hmm. 109. Could bounce off this trend too and head back up. Or go up and then come down to it. $23. 109. So most of the stuff still points to lower targets. Anything from 48 to 23 so far. And new hold levels getting built above. Okay. This is the first one that could bounce. Still kind of bearish being under these trends. So not looking like it's finished. But there's another reason. So there's, yeah, it's looking a little. It definitely looks like they could take this thing up. But it doesn't look like it's finished coming down. There's another time frame that can bounce. So with some of these that are 90 plus days, that is about right for if we were to go down a bit more, then roll around and start coming back up more towards October. That's quite possible. So hard close and break of 109. So it goes to do a retest of that level and then rejects again, or doesn't. So it could just keep coming down to the next trend. Could go up and just reject off the back of this trend. That's about 74. 48 should be a bounce. But greedy area is more like 25 to 30. Minimum revisit for exiting this range is about 46. So I think one way or another, it's definitely coming in here. It's just whether it does it first, whether they go and take some liquidity, then come back down. And could bounce off the back, head up, come back down. Another reason to go to 48. So it's yeah, if it's not back over 75 before the end of today, then closing under the trends again with a reason to go have an unsustainable bounce off 48, and then a possible move back to 26, 25 after that for accumulation, and then run into that trend, maybe sweep the previous market bottom trend. Creating resistance there at 76. And some more. And some more. So that's 78. Okay. Oh, super. 75. Again, yep. 75, 76. Yeah. So you can certainly see the bigger timeframes are looking like they've got the ability to bounce off some large supports and head back up. The lower timeframes look like they're creating resistance to send the price down into those. Oops. Yeah, looks like we've got a 10-day trend. So that's going to break today. If we keep pushing up, we're going to hit the next one around 72. So the 7-day could open up over the top side of the trend, but by the time it pushes up a little bit, it's going to be running into resistance, but also that 10-day trend is running through there. And the 5 days not really done enough. It needs to engulf that 72 area. Okay. And the 2 days already done its minimum level, so it's got no real obligation to continue, but if it does, then that next level is 71. It's going to be trend break. So heading up to that next trend is about 72 as well. So that's about where that 10-day trend is. All right. So building new resistance around 75 and above, trend resistance existing at around 72. Breaking downtrend on the 2-day could send us to the next trend, which is also about 72. Have already tested the hold underneath, so may not hold if it goes back to it again. And it looks pretty bearish on the high time frame. Looks like it really wants to go visit something starting with a 4. So we shall see how the next couple of days play out. Soybeans. Let's have a look at what Hype's up to. It's probably not going to have any of these big time frames because it hasn't been around long enough. This is bound to be one of the biggest holds that exists, but buying Hype somewhere down in this lower level, 35 or below, would not be a bad place. Try to find one with a trend. So that trend puts it up around 90, 91. But it's closed under the 2618, so more likely to go down from there. Everything's tested, so not really any decent entries. Oh, that's interesting. So this could actually go up. Look at that. $94 or $83 if it was to push to the upside from there. So this could be, next cycle for hype, or it could be this, I suppose, if it decides to stay above 59.491 till the end of the day. $60 now. So definitely a positive to have structure like that long term. Same here, really. It's not too bad. Entry on the trend. It's broke through the hold. 45 could act as a reverse hold. We've got a backside here at 35, and it may close above that. If it's going to have one final sort of hurrah off to the upside, it may come up here to 83, something around there. Or 91 if it keeps going to trend. Hold to trend. Yeah, keep an eye on hype if it starts to get really bullish. Yep. So accumulating below there, below 54, but may go up there and revisit 75 or trend up there. Sometimes when you get a final sweep of a trend too, you get this kind of thing where it creates, not that. So it creates one trend which it fails to get back to. Then it creates another one lower. So this is the sign that the price is starting to roll over. But sometimes before it does, it sweeps through and taps that top one. And that gap in there is your blow off top or your liquidity sweep. And that would be sort of an 84 to 95 window. definitely looks better than Sol and BTC. There was a trend, bounced off that. Yeah, not really seeing anything super bearish on the high time frame for hype. It looks so much better than the others. It's definitely hit the topside trend. Six minutes, see if they keep it above that 59. Or above the reverse hold. Yeah, can't help but wonder if hype's going to have one more gotcha type move to the upside looking at this. Okay. How long have we been going for? This is 5 hours and 58 minutes. Don't know when the next person's joining. Some of this stuff is for hypers relatively bullish, like closing up inside the holds. Might be wanting to have one more go. Okay. So that's a good trend, brand new trend, first trend, sitting there at about 64 and stuck inside the hold, but 50%'s up there about 90. So there's your wedge. Down to trend, up to 90, or up to 90, down to trend. And if it gets out of that, then could go higher. It's interesting that that's not creating a hold. 756, if it stays over 756 today. Maybe it's just Sol that's bearish. Sol and BTC. You're welcome. This is the first attempt at a 24-hour live stream. We'll see if I can stay awake. Oh, Trav. I think Trav's online.
Can you hear me?
Hey, Trav. No?
Hello, hello.
Let's see. Can I hear you? Can you hear me?
Hello.
Hello. Oh, yes, I can hear you.
Can you hear me now?
Yep. How you doing?
Right on. Good. Good. How does this go? So I see you're here in Discord, but you're not sharing on Discord. You're on YouTube.
Yeah, so it's streaming on YouTube, Except if you want to see my screen, what I'll do is I'll share it on Discord. That way it's synchronized that way.
Yeah, that's probably easier. I was noticing too, some guys were coming through on YouTube and others not. Is that sorted or no?
Don't know. We're about to find out. We'll just test every time a new person comes on. I don't know what I changed last
Yeah.
time. It just when I shared the screen, it stopped streaming audio, and then it just started again. There wasn't really too much of a.
Yeah, it's tough being an influencer, I imagine.
Oh hell yeah, it's a hard life.
Very good. Very good. Well, listen, I really appreciate you taking time to, well, your day plus more, I guess, to help us out and talk
Yeah.
about trading.
No worries.
Really appreciate that. So, I guess I have a long list of questions, to be honest.
Go. Shoot.
So
Makes time go faster.
Yeah, first of all, just thanks. I've been following you ever since you started in the Invest Answers channel.
Oh yeah.
Discord, and
Yep.
it's been quite a while, and I've learned so much. So I really appreciate you taking time and helping us out. And so, okay, let me pull up some questions. Okay, first of all, I have a fan question. You do all the trading stuff. If you weren't doing trading, if you couldn't do any trading anymore, what would you be up to? What would you do for work? What would you do for fun?
Fun. Work. Don't know if I'd bother working again. What would I do for fun? Maybe renovate houses, shoot guns. That's probably about it.
Right on. Right on.
Yeah, I think that's
Cool.
probably about it. I like building things.
Is there strict gun laws? You're from New Zealand, correct?
Yeah, definitely. Yeah, unfortunately.
Yeah, I'm Canadian. We
can't just walk around in public and shoot people. Yeah.
Very good. Okay. Okay. So basically, I have some questions. I think for the most part, I follow along pretty good, and a lot of the terms, and I can draw origins and breaks and trends, et cetera. I have some gaps, and most of the gaps are related to, I guess, managing trade. Like once it's open, like if this, then that.
Yeah.
And so, yeah, I think in general, I'll have a good run, and then it'll take one or two trades, and then we're back at break even, and then another more, and then you're in the red. And so, but I'm curious to pick your brain a little bit about risk return and using stop losses. I think probably I probably leave the trade open too long and take a bigger loss than I need to.
Yeah.
But then on the other hand, I'll be like, okay, no, I'm gonna put my stop losses in. I'm gonna cut the losses manually, and then it'll jump back to where I had hoped it would go in the first place. So that's kind of where I'm coming from. So here's a couple questions for you.
Yep.
In like a while back, and still now, we talk about hard closing a level, hard closing a trend, and more recently, been talking about polarity. And I'm curious, like I understand the difference, but I'm curious to know when it would be appropriate, one way or the other. So, for example, a hard close trend versus a polarized trend.
Okay, so a hard close is more about when you're actually flipping a level, and then polarizing is when you're effectively confirming or strengthening a level. So say this candle here, which I think you can see, hopefully you can see, on the 4 hour.
Yep.
So we've touched that 4 hour trend. So the first thing you sort of got to do is scroll back and go, is this the first time? So just scroll all the way back here. And no, it's not. So we created it here. We tested it here. We polarized it here. And then we had a pretty decent rejection the next time. So even though we actually got over the top of some of these trends, we didn't quite hard close it because the corner is touching the trend. And you've got to be that kind of anal about it. If that corner is there, it's not a hard close. So you could then look at this exterior one and say, okay, well, what about that exterior one versus these interiors? We created it here, tested it here, polarized it here, had the bigger rejection of it here. And then as we come back up, we created this range trend, hit it, rejected, polarized it here. So somewhere in the future, that range trend is going to be pretty important when eventually we run into it. Looks like it's... So is that where we're heading now? Maybe. So
Yeah,
once
I think...
Now, as for hard closing, so hard closing would be something like this candle here, which has hard closed this horizontal level here, but it hasn't actually retested it. So you can still lose a level after a hard close. It can go through it, find something else, come back down. Where this level becomes definitely support is if you hard close it and then this candle never goes back to it. That's when it really is, you know, confirmed as support because the price just hasn't bothered to revisit it. So polarization is basically when you just don't return to something. Whether you, and it could happen in the next 4 hours if we just don't move, we could do it to this level here. Likewise, we could be doing it to this level down here if we don't move in the next 4 hours. And then when the next candle does go down, it could bounce back up, you know, quite strong off that level.
Right. So in that example, we're above the hold, and it could potentially polarize the hold level if it closed above without touching it. Is that correct?
After it touches it, the hold. So if we look at the weekly that we bounced off on Sol, way back over here. Okay. So the reason this is a polarized level is because we touched it with this one.
Correct.
Never went back to it. Which means all the way over here, when we eventually did go back to touch it, oops, we weren't just touching an untested hold, we were touching a tested and polarized hold. And we bounced. And there was one above it as well, which is what created this bounce in that entire range. So, you know, this is a pretty good spot to take an entry. It's a tested polarized hold. It's really old. Someone's just messaged me. What's this? Short break. Someone's sending me videos. Right. Back to reality. Yeah, so that's a tested polarized hold. This trend, which has been created, hasn't really been tested yet because we've never come and touched it from the underside. We've actually come from the top side in both cases. So this candle could well get over top of this trend. Yeah, it's got 24 hours to do it. It doesn't have to come up much more to be on the top side of it. But it's if it comes up, touches it, pulls back underneath it, and then doesn't touch it for another week, that it becomes, you know, a polarized trend. Likewise, we've not retested this one that's running down here either. So there's a lot of complete uncertainty at the moment around what will happen with this price, because nothing's really tested to the upside, nothing's really tested to the downside, and we've already done the minimum obligation bounce of the weekly, so it's kind of now a case of yeah, who knows what comes next.
If we would close the week down though, then that resistance would be polarized, correct?
If we close the week, this one won't be, no.
Yeah.
This one won't be because we've. Oh, actually, sorry. Yes, it will be. Yes, it will be. We tested it there. So yeah, if we close this
Right.
without touching the trend becomes polarized, and then we're more likely to have a rejection
Right.
off it. And that kind of
Right,
makes
okay.
sense because most of that high time frame stuff is just screaming to go to $48 or lower.
Mhm. Yeah, so I think so. One of the questions I have then is, again, a ways back, we talked a lot about having untested levels and how you would expect some kind of reaction off of them.
Hmm.
Is that still kind of the current findings,
Yep.
or is it more like, no, actually we should wait till it tests and wait till it polarizes?
No, you're still going to have entries on untested levels. So it with a high time frame level, it really does pay to make sure that you're taking it as a managed trade. So you're not just putting a limit order on it and waiting at the laziest point.
Right.
You got to see what it, and also you got to see what it does before it gets to the level. If they're going to break a level, they'll create resistance to break a level. They'll put a trend right above it. They'll hover above it until a trend is created. They'll create a hold. There'll be something that is created by the level if they do just want to bust it, which is unfortunately the way it works. So, but no, untested levels, first touch generally has some reaction. It's very rare that it doesn't. So you almost
yeah, that was kind of my question. Is it still worth taking like an untested trend back to a hold?
Yeah, if it's the first touch of an untested trend, it's
Yeah.
more often than not. It is the trade. They're going to test the trend, target the hold. One of the two is going to win, and sometimes it can take a bit of time. One of them will become polarized, and then it'll break the other. Sometimes it just does the move and then reverts.
Right.
So at the moment, really, like with this, we're still just waiting for it to kind of come up here, and as time progresses, we get closer to that trend without even actually changing the current price. So I think we're currently at, if I look on the 1 minute chart, which I have on my other screen, that trend is sitting at about $70 at the moment. So it's sitting up about there. And the longer they kind of keep it sideways, the closer we're going to get to that trend over the coming days.
Yeah, certainly. Certainly. Okay, I think that makes sense. Oh, just a question about the polarized hold levels. I think originally when you first came up with the finding, it was a hard close of the 1.618 level after the touch.
Yep.
Is that still the case, or is any polarization?
Well, it appears to be any polarization. So the hard close can basically just means you've got a closed candle that hasn't touched it. Where it gets really interesting is it doesn't actually seem to matter whether it's a distribution candle or an accumulation in some cases. It's just a candle that doesn't go back, which yeah, I've got about 400,000 different hold levels that I can export from the database, and the more I look through it, the more I sit there and think, is it because it's on a time frame that we're not recording, which is also another possibility, because you see a candle that doesn't say it touches a level and doesn't go back to it, but it closes as a blue candle. Well, maybe it's actually a yellow candle. It's on a time frame that we're not actually measuring, because we're only really recording basically the factors 1 hour and above. So yeah, I'm still a little bit unsure about that. What I tend to see is if it doesn't go back to it, it's gonna bounce. or if it goes
Mhm.
into it, comes out of it, and closes, it's going to bounce. If it closes inside of it, it can still come out of it if it came from the top side. But if it closes or hard closes inside the hold, it's probably going to go down, like probably going to break it. So that's
Yeah.
this candle really isn't the one that would break this hold. It would be if this candle went inside of it and then the next one continued down inside of it, it's more likely to break this hold.
Right. Yeah. Yeah, that makes sense. Okay, so let me ask you a little bit about trade management with hold or just the basic fib trade. So tell me if I understand this right. So if you set up a fib trade and you get your entry on the one or somewhere below, if you then close into the hold, so that's your first warning, and at that point you would adjust your TP to the fib 1 level. Is that
Yeah.
kind of best practice?
Well, best practice is if you can actually be there and manage the trade. What you would do is you would mark body to wick, like in this case. This would be classed as a high risk fib trade. The
Yep.
trend is there. The trend is slightly below the 1618 from the looks of it.
Right.
So the trend is slightly below. But we do have actual trend support. There's a range trend we've just got back up above as well, which is in here. So we'd mark the wick of the candle, we'd fib the body of the candle, and we'd have these target levels that are up here, which are just above the trend, hence making it high risk. You'd then come down and have a look. It pays to. So what I normally do is mark them all, and then you can, maybe it's just my OCD, but I like to just turn everything off after that. So we can find the trend. Yeah. So I've got this. I'd mark this interior as well, which is there. And then I usually just turn off everything. Okay. So that's kind of the little wedge that we're working in. And sometimes I'll put two fibs on as well. I'll just chuck one on the wick and one on the body. So okay. And then we're on a 4 hour, so I'll go down to 1 hour and we'll have a look to see if there's a greedier level on the 1 hour, which there is down here. So we'll look at the possibility of getting the entry down here if it doesn't start to bounce off here. So we can mark that as 1 hour. Come down and have a look at the 15-minute. So you can see the 15-minute is just laddering down. And we're either going to get a close up inside this hold because we've touched the backside here. So this could be causing a bounce. And if it closes up inside this hold, it might actually come back up here anyway. So sometimes you can actually get the same move like the one on Sui the other day, which we got the same daily move twice because it never actually went to the target and then it went down again. And then, it was just through not so much luck, but front running the target a little bit that meant we got to take the trade a second time. But if this, you just got to keep watching this to see it come down and how it reacts to the 4 hour level. But this 4 hour level actually looks like it's some kind of backside. So even if it bounces off that, it would probably end up hitting the trend, rejecting the trend and coming back down lower. And so we've got levels down here. But you kind of want something lower than the 1 hour. So there's a lot of polarized stuff down in here. Got origins down here. This one hasn't had a first touch. So you've got a 15-minute. Yeah. And now you get to play the waiting game. So you just basically mark out some 15-minute levels, some 1 hour levels. You could look to just take a scalp now if it closes up inside this hold, and it might go to the trend before it goes back to the hold. It's kind of close enough.
Right. So if it would all of a sudden go down and touch the break level, I'm not sure if that's
On
above
the
or below where we
4 hour?
we would enter. Yeah, on the original. Yeah.
It probably won't. Just based on that, it's pretty unlikely. It would have to get on the other side of the trend somehow.
Sure.
So
Is
the break
is that in general that's a sign that the range would be failing? And is that a sign if you would be in a fib trade and it's going and touching the break level, is that another warning sign that, hey, it's probably should be looking for the exit?
if it closes below the break level, yes.
Right.
If it hits the break level, not necessarily. See, 50% of break levels turn into origins. So touching it in itself is another type of trade you can take, because a lot of break levels will actually bounce back to trend as well. Just think of them the same as a hold level. They go back to the trend, and in this instance, we don't really even have a break level to hit. We've got nothing on the 4 hour until you get all the way down to this level down here. And we've got other things that could bounce the price before that. So it's
Would you adjust your TP potentially?
Oh yeah.
Or
you lower it. Yeah.
Would you lower it to the fib 1, or would you think that, or for example, if it wicks like way through, would you think, man, I'm just gonna cut this when it comes back to retest the break?
If you hit a break level and close above it, you'd probably look at the halfway point of the hold at 0.5.
Sure.
If it closes below the break, then it's pretty risky to stay in it, because some break levels are going to be backside rejections at the same time. Like if you think about how a backside is created, it's exactly the same as how an origin level is created, which is partly why it has the reaction it does. Like you've got a level that is usually touched down. The only difference between an origin level and a backside hold level is an origin level can be created without a front side candle, whereas you'll have 2 or 3 parts to a backside level. It's really hard to explain that actually. But let's see. So see this origin level here, 15-minute origin level. If we had taken this blue candle and so that's front, middle, no, it'd be this one. If we'd taken this blue candle and gone down and closed under that origin level, we've technically created a backside range to reject off. So now the fact that didn't happen meant that this is an origin level, and it's not also a backside hold level, because it never got that engulfment. But sometimes you're looking at a break level as something that's protecting along, but sometimes it's actually something they're creating to induce a dump or create a dump. So it all sort of depends on what happened before it went back and whether it closed underneath it or not. So that's Likewise, I look at this structure up here right now and I go, well, we haven't tested this break. We've created holds. potentially going to close inside this one if it stays up here for another minute.
Mhm.
And we know we have the 4-hour trend up there. So, you just kind of got to wait and see what actually happens here. This has tested this. This has been tested several times. We've got resistance here, but we might move to the hold first, and then to the trend first, and then back to the hold.
I see. Yeah, right on. So okay, so for example, a close under a break. Okay, danger. And a hard close, of course, is no good at all. Would you, if it would hard close, is that like an instant? Just cut the trade as soon as the candle closes, or perhaps even front run it if you know, like, hey, this is not going to recover in the next 5 minutes or 20 minutes. Or would you still be thinking like, well, maybe it'll make it back up to the break level that it's hard closing, or maybe it'll make it up to the halfway point of the fib, or is it more just like, nah, we'll just cut it and move on?
Okay, so say you entered this whole candle and it closed under this break level, which it did down here, and you thought, I'm going to cut the trade because it's going to go down. The thing is, more often than not, what will happen is it will go down to whatever the next ladder point is. And in this case, it's some kind of reverse hold in here, which got tapped and then went up to the upside. So it's hit this, and then it's gone back up. So often, I guess there's risk involved in whatever you do with this, but if it closes under the level, it's going to test the next level. Often the next level will send it straight back to the first one, and then it's whether that level at that point continues to hold the price down or whether or not it breaks and goes up. So if you'd done it in this instance, you would have closed down here, whereas you could have held it for a bit longer and then closed up higher. Maybe not necessarily got, let's see, how far did it go back up inside that hold? Yeah, so it hit it and it went back up to the 50% of the hold. So hard closed under the 50%, did end up going back up to the 50%. If you'd waited to get your entry on this, you would have been watching this candle, watching this candle, watching this candle. Maybe you would have entered here, maybe, and then it would have just rejected the body of the hold, gone through the break. But if you'd held it, it would have come back up here to retest the 50%, and you could have got out break even or in profits. There is a point at which you've just got to say, nah, this trade is effed. And that would be if it sort of broke through the next level as well. You just, nah, I'm not going to keep holding this. It's not retesting, it's just laddering down. So even just the instance that you're seeing here now, this closed back inside this, but it started to go back up to test this. So if you'd longed this and it closed down inside, you could look to close it now into the 15 and just be done with it if you'd taken that long. But it's not actually hard closed inside that backside hold yet, so it could still just come all the way up here until it runs into something like the trend, and then it could reject the trend to go back to the 4-hour hold, and that's just basically smaller time frame hitting bigger time frame stuff.
I see. Okay. Now this is helpful. Thank you. Okay, so this is on I think a live, like a long time ago, talking about how what was it? It was a stop profit strategy where you would, I guess you would double down on the break level. If it was touched, and then exit. So I guess that's kind of if you're just gonna put a limit order on the break, then you're not gonna know for sure if it's gonna bounce or not. And so okay, assuming it bounces, great. And I guess you're just gonna follow the kind of the same process then with a bigger order or bigger trade and a lower
the other
lower
one
entry.
the other one to watch for is just this kind of thing here. Okay, so that's your break level. And that's the top of your hold. Okay, so what you kind of got to watch for is where does that candle actually open? So if you look at these two lines, this one came from underneath, hit the break level, and you had the rejection back into the hold. So if you had entered down on this hold, you can see straight away the candle actually closed up inside of it. So closed up inside, started traveling towards the top of the hold, had some fun here around the 50%. So that's your first sign. Kept going up, managed to polarize the top, touched it, didn't go back to it, touched it, rejected, but it's building structure. And this is what you notice is that if they're going to break a level, they make structure to break a level. So we're up inside the hold and we're creating holds and we're creating backsides and middles and front sides to bust through the top of the hold. Now, if they're going to bust the top of the hold, they're probably going to break the break, so because all it really takes is to break the hold and then the break is vulnerable. And in this case, the next sign is that they just keep hitting the hold until eventually it's gone. Now, once they exit the range, they still revisit it. So this is where, I guess you can get quite frustrated sometimes as a trader because you cut a position because you think, okay, it's screwed. I'm going to lose. And then what happens? It goes back, and that does happen. But at the same time, you sort of just got to take that loss because you don't know necessarily that is what is going to happen. But you do see signs in the very first place that it's just not a viable trade sometimes to take. And the first one is just stuff like when it closes just sneakily up inside the hold like that. That's a sign. And that's kind of why we call it trolling, because they just troll the level at the time of the close and then up inside. And off they go. So
because of that, would you not consider exiting? Because that would have been at the end of that candle, that would have been a hard close within the hold.
Yeah, so I wouldn't have entered that at all. I would have waited for the reversal. So
you would have not entered because it closed inside the hold?
Yep. Yeah, I'd be waiting and watching this. There'd be an alert that would go off when I hit this. And then I'd be waiting and I'd be watching and I'd be looking to see if it closes up inside the hold. And if it does close up inside the hold, then I wouldn't enter it at all. I'd possibly enter this because that's a polarized level. But I'd have to wait to see what it did. So this trade for me would have been too risky. We've just closed inside the hold. And if we look down here, what have we done? We have created starting to range up. So at that point, I'm going against the trend if I try to short that hold. So what I would look at though is that this is a polarized hold. The top part of it is. So this candle wicked up through it, came back down, continued down. So I could short that level, but I don't know where my TP is going to be. I know I'm not going to try and go past this trend. That would be silly because that's a bigger time frame trend sitting there. And I've created this hold to hit this level. So your actual short's going to be a relatively small position, and you've got to say, is it even worth shorting this? And it's probably not. And that you're not going to get anything out of that. Fee's going to eat you out. So if this was a 4-hour time frame or something bigger, and that was a decent move, you could short that level, and it'd be worth it. But so all of that structure is what you'll see on any time frame, but is it worth it or not? It comes down to how big the percentage move is. You're better off just looking for longs because you can already see that it's going up, and you just got to wait for it to actually come back.
Would that not be considered a low risk short? That in theory would be more reliable than a high risk long.
This one here.
No, no, further back.
Shorting this one.
Yeah, that one.
Yeah, but trend has to change sometime. So I'd be more inclined to say that this is a lower risk short. This is definitely a lower risk short. Also, it depends on whether it's after consolidation. So this. So whenever you get the price going sideways like this, it's either going to be accumulating or distributing. When you got the price trending like this, it could reverse at any time. This is a pretty good sign that it's going to change. It's just going sideways like this. A low risk long on a hold level be this one right there.
Yeah.
Now, a quick trade would be once it breaks this level, but it could just take off like it did, like that. And another one would be this level. This would be a quick trade, in out.
Yep.
So yeah, shorting, it'll be this. Yeah. But this is already becoming higher risk. So even though it's on the backside, the fact is you've already started to range up and then you close inside of it. You do those two things and yeah, trend has changed.
Yeah. Yeah, no, that makes sense. That's helpful. Okay, next question. If you look at a 2v1 hold, when I've seen you do it a bunch, and I've seen other people do it a bunch, and sometimes they are done, separately off of each candle, and then other times I've seen you group them together. Is there a reason why you would do one and not the other?
It depends what you find when you look inside of them. So this would be, let's find an example. Okay. So like these two?
Yeah.
Bad example, they haven't been revisited, eh? Or have they? No. Let's find another one. Let's find one that did get revisited. Okay.
There's a short a little further up ahead.
Up here, right?
Yep.
Yeah, that's engulfed a heap of stuff. Okay. So that engulfed all three. So what you want to do is you want to look inside of that. So chuck a horizontal line here on the open of that candle, put a fib on the whole range, like so, and then take it down to a lower time frame. So that was 4 hours. We'll just try 1. And for demonstration purposes, use replay tool. Otherwise you end up miles in the future. Okay. So when you take it down to a 1 hour, you've got accumulation and distribution all inside that same area.
Mm-hmm.
So what you're now looking for is you're looking for things like broken origin levels, you're looking for backsides, so 1, 2, 3, something like that as an entry. And that is a possible entry. Just the hold of that range.
Mm.
That one there. So you just kind of mark out the various levels that exist inside of it. And it could come up to 44.379. It wants to come back up inside there. There's also technically this. That's a level as well. And we've closed below all of it. So
Would you expect the fib 168 on the outside candle to play out before the inner candle? Because I've seen that from others in the group.
yeah, I'd expect this to dump first.
Okay.
And either this one or this one. It's going to be one of these two I'd sort of expect to dump first. And then after that one, I'd expect it to head into this area up here or this one for a more sustainable or more sort of distributed pullback. So it would be, so whenever you're looking at something like a 1v1 or a 1v2 or whatever, it's always fractally something else on the inside. It's actually going to be more than one rejection. So that was that 43.667 was that backside range on the 1 hour just in there. And then after that does its initial rejection, we're probably going to go back up at some point. Okay. And then we hit.
And what would your expected TP be off of that first rejection? Would you try and take the whole range, the 168 off of the whole
Yeah,
range, or
yeah,
outside candle?
yeah, I'd take that whole range and usually just go to the 1618. But the backside rejections quite often go to the 2. So it is normally they're the more, there's kind of like fast and violent, and then it'll come back up. Typically it would spend more time up in here, but it hasn't actually gone to the top yet. So that would be up a little higher. So this is more bouncing off the middle from the looks of it. So if we come in here and have a look, yeah, we're bouncing off that one. So effectively what's happening is each one of these is a rejection of a whole candle for a accumulation range on the hourly where multiple ranges were all engulfed on the 4 hour in a single candle. So you're not actually technically trading the 4 hour, you're trading the hourly. You're just trading all of the different backsides that exist on the hourly.
Sure.
So, but it's just a case of if you tried to show someone how to do this, it would be hellishly confusing. Whereas it's it's much easier to say put a fib on this. And you don't really even have to tell people that so much. You can sort of just say put a fib on this and then reject off that. So then you just take that to there. And
very good.
The framework for basic fib trading is really, most people don't know what is actually happening inside all of this. They don't know about all this. They don't know about all these different levels. They just need to build the confidence and learn how to take that line to that line and do it on a regular basis. and
Mhm.
yeah, that's and then it keeps traveling, and you just don't care. And if you went and found the actual levels inside here, you would have got slightly better entry, and maybe you would have got your TP lower down. But it's people can learn that over time, I suppose.
Yeah. Yeah. Okay. Well, that brings me into another set of questions I have about front side, backside levels. So I've been trying to wrap my head around those, and so I have a few questions, mainly on the. So I guess I want to know how far back do you take it? So I have an example on May 7th on the 2 hour on Sol. There is one that is basically just a huge engulfment, right? I'm curious to know, are you limited by the 3, or can you just keep going, or does it just kind of become something else? It just becomes the break levels
It normally
that
becomes
you're busting.
it normally becomes a bigger time frame. So May 7th, this one here. No, it's 13th.
Yeah,
my bad.
when it comes back up, actually, it's the long.
In here, right?
It's either that one or the one to the right.
I'm on the 4 hour, aren't I? Okay. Are you looking for the long or the short? Long.
I'm looking for the long, yeah.
Okay.
Yeah. It's right there. You were just on it. So
So
again, basically there's a lot of distribution and accumulation ranges, and I'm curious to know like where you say like, no, I'm only going to do 3,
it's
or
something.
I'm going to do 4 or 5.
It,
Or,
it's something bigger. This is what it is.
right.
But there's one that's pretty clear, which is this one here. So that's the top of a hole that was polarized, then it was broken, then it was revisited. So that's that's a big level. That's the backside through there as well. So that's
Right.
quite a,
No, I'm looking actually at the one to the right of that, broken by 2 candles there.
these two.
Yeah, so those two break a whole bunch of different ranges. And I'm curious to know, so that would be the front side, and then the back side is going to be somewhere middle, somewhere in there.
It's going to be these two. So that's that bounce there. So in this case, because the front side is actually up quite high, this one thing here is hitting the backside and the front side at the same time. And that means that the front side's kind of already been tapped in the bounce. So it's probably not going to hold it the next time it comes through it, which it had a bit of a go and then just kind of failed. Might be the middle, body of the middle had a bit of a go there. But it ended up closing inside the hold and down it goes.
So that's a 3-piece.
Yep.
It's kind right. And so even though it closed, two other ranges above, you would just ignore that if you would be wanting to trade on the 2 hour?
No, these are tradable as well. So front side.
But are they all in one package, I guess, is my question.
Yeah, they're also all a different time frame, most likely, a bigger time frame. There's so much going on in there that it's probably going to be something else. So where was that? It is. So front, middle, back. So backside bounce.
Right. And the one even further back, just
Front
you know,
side.
2 candles to the left of the current backside that you had.
Yep.
You're not gonna take that into account, or yes, you would.
No, you could. You take that into account. So
Okay.
that's that bounce.
So
So you'll
that's kind of
notice,
like backside number 2.
yeah, you'll notice every one of these levels basically gets a bounce. This gets a bounce.
Yeah.
It's like that Oprah gift. What's that Oprah meme?
Yeah.
You get a bounce. You get a bounce.
Yeah.
You all get a bounce. So yeah, every single one of those levels gets a bounce. And there's probably something else in that as well. Like if it's, you could just keep looking up a notch until you find that it could even be, there you go. So it just starts to look a bit cleaner and a bit cleaner as you go. So front side
Sure.
down here,
Yeah.
and the body of the front side had already been tested on the 6 hour by this candle, so that was pretty shot. But you could get the wick there, creating that bounce, and then you've got that level through there, and that level there. So it's actually more like a 6 hour if you broke it into 3.
Yeah.
And
What would your risk management be on a trade? Like, for example, if you thought, like, first of all, what would make you think I want to take the bounce on the top? And second of all, where would you stop loss that?
the top bounce, this one, is the most
Yeah,
likely
that
one to give you a fast move, but a completely unsustainable move. So you'd have to look at what's sitting up here, and you would look at 1, 2, 3, and that would be it. So you'd stop at 92. So basically backside to backside
interesting. Okay.
would be it. And that's more so than the fib. So the other thing you could do is just fib it and see if you get the 1618, because you can see the 1618 off the backside candle was resistance. So that's kind of like a range
Yeah.
level based off that candle, but really the actual opposing hold is this one. So that's so you could either just stop at 91 or try to take it up to 92.5.
Right. So that one, this is one of my questions, because okay, it's a front side, or it's a backside bounce. You would expect a good reaction. You got one here. That was awesome. If you didn't, are you cutting it like way, or are you going to double down on the front side and then just TP it like a normal fib trade, or is it as like depending on your preferences? Because I guess what I'd be concerned about happening is you would say, okay, I think this is going to bounce. Boom, it doesn't bounce. Well, now I'm underwater, so I can double down, but now I'm in. Now this is, you know, one big trade instead of what I hoped would be, you know, two separate trades.
So you could get out on the front side. So
Mhm.
that would just basically be a case of taking this one, because that's going to have some kind of first touch bounce, which it did there. But if it closes inside the backside, it's actually almost worse closing inside a backside than it is closing inside a front side. So that normally means violence. So as you can see, they closed just
In
under
the
it
other
here.
direction, yeah.
Yeah. So closing just in under, that could be a reason. I mean, generally speaking, of backsides, I don't know if I've ever seen them not bounce. It's more a case of how high do they bounce than not bounce.
Yeah.
Most people who lose in a trade because they try to hold it too long. They don't know where to TP.
Yeah.
Where to TP.
Yeah, I was trying to do some back testing on that, and I think I had the stop loss at the front side level, at the front side wick.
Yeah.
That got stopped out like about half the time. So this is my question, right? Because it's
Yeah.
like, okay, well, you could view that as a backside fail, right? Because it didn't have the quick bounce that you were expecting, right? But I guess my question then is like, okay, now I'm down at the front side level. Is it time to and just get the front side and hopefully get out in at break even or in profit? Or is it time to say, hey, listen, this is not going well. I'm just gonna cut this entirely.
Well, I would take them as basically two totally separate trades. So
Sure.
first of all, the backside will probably always bounce.
Mhm.
If you have gone below in the backside, you've probably screwed up. You've just not taken the TP, or you missed something like they created the resistance really bloody close to the backside just to be
Sure.
an absolute epic pain. So you either probably shouldn't have entered it at all, or you missed like a really close resistance, which could happen, I guess.
Mhm.
But they do typically always bounce. They do annoying things like they push right through trends. They're just volume and momentum, but
Mhm.
they are market orders. Like, so just imagine every single FOMO human being or whatever. I don't even know actually how this really works. It's lizard people, right? But they're all sitting there and they're all going, if the price ever returns to here, I will trigger a market order, and that's the difference. Trigger a
Mhm.
market order versus a limit order. So
Yep.
when that market order triggers, you're just going to get a fast reaction in the other direction, but it's an unsustainable fast reaction because it's going to run into something because the price was trending down to get to it in the first place. So that's where you get that sort of move back. Then if the front side, and this is not a great front side candle because it's already been tested here,
Mhm.
but it is still going to bounce off the wick because this came from below the wick, so we haven't really tested these loud alerts. This is going to bounce, but again, it's going to have its own resistance, and that resistance could be anything from just the minimum fib resistance, so that's like we just chuck that on there, which is kind of where it stopped, or because we've already now hard closed a candle inside the backside as well, chances
Mhm.
are it wasn't really going to escape this. Like it was going to get trapped in there. So if you were to have held that backside bounce and you are underwater down in here, the only options you've really got is either to add enough to the trade so that you can exit at that minimum 1618 bounce,
Mhm.
which you
Yeah.
would have got. You wouldn't have assumed that it's going to go back to the backside because that would be a bad assumption to make. It might just stop at the 1618. All the other option is to cut it and just go back to the drawing board about finding the right time frame and finding the right levels and practice a bit more, because this
Mhm.
was a 6-hour trade, but we initially started on a 2-hour, and it could even be something slightly bigger, just given that there's 3 candles in here. So
Right. No, would that then be best practice then to try and find something like let's say the biggest
try to find the biggest time frame
applicable time
first.
frame?
Absolutely. So 1, 2,
Yeah.
3, 1, 2, 3. There's enough in here for this to be bigger than 6-hour as a singular hold. So
Yeah.
if we keep moving up, we have a 2-piece.
Yeah.
So now,
Yeah, and that's a bit cleaner again.
yeah. Now this one hasn't closed inside the hold on this time frame. We've got our bounce here. We've got our backside bounce here. It's almost perfect, isn't it, that one? Touched the
Yeah.
level, closed just above the level, took off with volume to the upside, actually polarized it, had another go at it, had another bounce. It was failing at this
Right.
point, right? Because we hit it the first time, bounced, polarized, hit it again, bounced. So it's a 8-hour level. And we've got 2 candles now. It's probably nothing bigger than an 8-hour level because there wouldn't be
Sure.
2
Yeah.
candles in it. But
Right.
so you're working high time frame down is ideal. Try to find what the biggest thing is, and then
No, that makes sense then, because I was going through and I was seeing like, oh, like is there 3 backside levels? Like how far back do you go? But it makes sense then you just move up the time frame until you find a nice, nice two piece, and that would be
Yeah.
the same.
Or what you do is quite often the other way. You actually. Do you hear those alerts?
Yeah, everyone hears them.
Screech, screech, screech. What you do is kind of go the other way. Actually, you start with just one single 1v1 engulfment, the biggest one you can find, and then you
Yeah.
start to go down and actually find where it splits to 2, find where it splits to 3, and
Right.
that's
And you got a
typically,
few extra trades.
yeah, that's typically the best way to do it.
Right. Let me ask you. So I have another example. Where is this one? April 25th, again on the 2 hour. And in this example, the engulf candle makes it about halfway up the range. And so basically it doesn't engulf the entire range. And so I'm wondering about those, like, you just leave it. Which one would that be?
April the 25th. Where are
I
we looking?
think
In here?
no. So I'll give you an example. Right where you are right now,
Mhm.
you had a close just over the level. That's the top of the range, right? But what would happen if you get a yellow candle close, in between two blue candles? So yes, it looks like a front side backside, but it's not. It hasn't actually gone above the previous range.
So do you mean like this one, which closed above this but didn't get above these two?
Go to the left. Yeah,
In here?
yeah, that one to the left. Yeah, this is what I'm talking about, right? You see the yellow one that engulfed it. It only made it up like a third of the way up that range, right? Previous range.
This candle right here, which went up over these ones?
Yeah.
Okay.
Yeah, exactly. So the front side is right to the left, and then the middle is two over, but then it only makes it up halfway on the back side. So I'm wondering, does that have relevance or not? So it qualifies as a two piece, right? Easily.
Yeah. I'm trying to see what's stopping that. It's got to be a trend or something. Okay. Right. So the one that's under the resistance trend and under the topside trend.
Right.
So let's see. Okay. So it's pushed through the trend, but hasn't managed to hard close it. Yeah, straight through, straight back through. So that was a trend deviation, straight through the trend, which looks like
right.
it was created, tested, polarized, yeah, swept, dumped. So basically trying to take a trade when it's rejecting off a trend.
Yeah, I have been looking at the backsides, and this does happen, not often, but but it certainly does happen where in theory, you'd have your backside level ready to go, and then it just wrecks it.
Yeah, that's through there. You've also got that origin. So what do we got if we look at a higher time frame? So your hard close inside the hold. So I think this is partly why you've got to really be looking bigger down, because we're inside this hole.
Yeah.
And there's actually a 4-hour trend that was running through there as well. So you could probably then go bigger and close below the body of the 6-hour hold.
Right.
So let's have a look. Go bigger.
So you shouldn't be longing that or trying to.
No. In fact, if we keep going bigger, we'll probably find that there's some kind of hold candle because of all this. Let's see. Oh, hello. It's a 12-hour hold candle you just longed into.
Yeah, that's the problem.
There you go. So common, really, really common. It's easy to look at a low time frame chart and then sort of go, okay, I see a level. I'm going to take that level, but what are you in? And are you really close? Because that trade would have played out perfectly fine if it was down here, because you were miles away from this. And there's actually probably an origin level. Look, see these wicks? In fact, there'll be a lower time frame one in there, and there'll be another one in here. And those levels would have also worked perfectly fine on a lower time frame because you're quite far away from the high time frame resistance.
Sure.
Yeah, so it's just a real testament to why you always work top down. Always work top down. And so if you're trading on the daily, it's good to have an idea of the weekly, but it's also just a really good idea to have a idea of everything. And although you might look at the high time frame charts and not necessarily take any trades off them, like I'm not entering on 11-week levels, but I'm sure as shit aware they're there. So, things like that. That October 10 was like a 13-week level or something like that we hit, and it was just, that's what happens when you hit a 13-week level. And down below us, we have a 41-week level. So, we're ready for when we go into those levels to change our bias, but at the same time, you don't want to be shorting a 2-hour hold into a 41-week level.
No, certainly not.
Yeah.
No, you're playing chicken, I suppose. Do you wait? So like there's just hundreds of time frames, right? Hundreds of high time frames to pay attention to. Do you weight them to be like, hey, the 100-day to the 200-day, more of them are bullish bias, and so I'm gonna keep that in mind? Or is it more just like, well, the biggest one says
No,
bear.
I do weight them. Like I look at, so one of the reasons I still use those old-fashioned CSV sheets is because I'll look at how many shorts are active at any given time, how many longs are active. It is really surprising how the market returns to balance. Like it's nuts how there's almost 50-50 at any given time. And then if it gets out of balance, it normally ends up reverting. So yeah, I'll look at that. And like as we were traveling up into 80K on BTC, it was kind of like, okay, we're triggering more shorts, we're completing longs. At some point, this is gonna have to drop. And sure enough, once you complete enough longs and you activate enough shorts, you go the other way. And so as we come down into the 60K area, it was the other way around. We were completing shorts and we were opening longs. So there was going to be some kind of stability or bounce. And now we're sort of at a point where we seem to be generating more short resistance above. And so once that gets too much, it's probably going to have another push down. But we could push up into it first to activate it because it's not active unless we go into it. So, but yeah, I definitely
And
look at that.
that's in the Origin bot currently, right? If you would look at hold levels.
Yeah, so hold
Hold
levels. Yeah, hold levels are in there. Not for all tokens. The hold level one is very
yeah, right.
slowly, slowly churning through 600 tokens. It takes nearly a couple
Yeah.
hours for it to actually refresh on some of those.
Right.
So that's doing its thing. But BTC's there, Sol's there, Civi's there. I think Hype's in there now.
Yeah.
It's chewing through them. There's a heap in there actually, but it's kind of random as to which one it refreshes at which time. Not really random, time stamped based on last rebuild. But
Very
those, but also you got to look for things like what range trends are we approaching, because range trends from all-time high are very important when it comes to when will this truly reverse. And there'll be some really big ones, like I think we got 76 day or 79 day. There's something massive we rejected off. Let's see. Let's see. $76, $75, $79, place your bets, something like that. There it is. That didn't go so well. And so with things like trends, it's more about when's the time up. So, this one here, you can spend quite a bit of time above a trend. You can deviate it like this, come back down below it. You can instantly reject off it. You can then deviate it again. The thing is unless it can actually break the trend and get a hard close above the trend, it's generally speaking just going to keep coming back down. So that creates this range. And here we are. Close just above. And if we look at this on a smaller scale, I think we opened just above the trend and we've come back down below it. And I think there was like a 79 or something through here as well, and a 75. There's quite a few, but so unless we can get a close over that trend, there's no going back up to all-time high until we break that thing, and we don't have an opportunity to break that thing for another 1 to 2 candles to check. Yeah, because we were touching it when we opened. It's really got to get clean and clear of it, then have an accumulation close above it, and then we could look to break it. But we've also really got to recover this horizontal level as well. Get back up above there. Oh, I just got my TP. 1% done for the day. Yay.
right on.
I opened a swing on that trend in 4 hour, figuring it's going to go one way or the other eventually.
Nice. Yep. Nice.
Makes it look easy, doesn't it?
Yeah, just a little. There you go.
There used to be this thing called dopamine when I started trading. Fun gone.
That's probably better. It doesn't bother you anymore.
No.
An effect.
So
okay, here's a question. Thanks by the way on the front side, back side. That makes a lot more sense to me now. So I appreciate that.
All right.
Quick question on origins.
Yep.
If you if I just look at any origin, I think you said the stop loss you generally want above the previous range, but I just want to clarify, is that the range that converts it, or is that the original range that the break level was?
Okay, so are we talking about created origins, or are we talking about already existing
First test.
origins existing,
Yeah,
getting
so
first test?
yeah, so if you wanted to take a first test trade and you're trying to figure out, okay, I'm going to TP at first resistance, whatever that is, and my stop loss should be reasonable, and so you've said in the past that, you know, one basically where either, and this is where I'm not clear, either where it wicked through and converted the break to an origin, or the range that the break level was originally created on.
So first thing to watch for is, was it created with a deviation, or was it not created with a deviation? So what that would mean is, say this one right here, we swept the range and grabbed the liquidity below it,
Yep.
which means you can generally have a tighter stop loss because there's less incentive for this to go back down here,
Right.
because we've done that quite recently. So we did the sweep. It's probably not a huge amount of liquidity here anymore. We're probably just going to get a nice tight stop loss. But in this case, the candle that comes down, we would look to probably take our TP initially about here. Yep, that'd be right. So we'd look to take our TP up at this origin, maybe the body of this hold. Okay. And the candle then closed, and this is the difference. The moment that candle closed below this candle, you wouldn't necessarily aim for this anymore. Like yes, you still got it. You still got that hold, but you would have just closed it here. In fact, you could have even gone as far as just saying, I will close it the instant this candle closes. Like, I won't even try, because you've gone back into this older hold and you've created newer ones, and this has already been tested and it's already been wicked up really, really high. So liquidity inside that hold is probably pretty much taken, and you're dealing with something like this here now. But yeah, you'd probably just close it the moment that closed and be done with it. Kind of depends on how risk averse you are.
So in this case, the more appropriate stop loss is basically where the break level was created because of the big deviation.
I mean, in this instance, I would normally just go 1-to-1 on it and just have my stop loss.
1-to-1 based on what? On the TP or the stop loss?
Yeah, I'd start like this, and because this candle hasn't technically closed, I'd start with my target up here, and I'd just go 1-to-1, which actually puts me down below this break level. That's a really, really, really wide stop loss, given that it's already been swept, deviated.
Right. Yeah.
Liquidity taken. And then after it hits and starts going up, closes the candle, just cut the trade there.
Yeah.
And, you know, that doesn't seem like it's a great risk reward, but if you look at the chances of a bounce off an origin that's had a liquidity sweep already, it's pretty damn high. You know, so it's kind of about the risk of the trade idea more so than it is about the risk to reward on the trade. The trade idea is almost unstoppable. I mean, he accepted it again. There was just no point at that point in going lower because all this liquidity has been taken. So it bounces into a hold, polarizes again, comes down, bounces again up into the hold.
Yeah.
Eventually, what would happen if you were watching the liquidity maps at this point? What would be happening is people would be getting confident that this is a strong area and that it's not going to break. And then it's once there's enough liquidity down in there, it's like, oh, yeah, we'll take all that. Continues down because it's still in a downtrend. And the point of that origin level is that it's been touched, which means they are testing the bottom of the range. And if you look at the top side ones, same with this. This got tested, created the rejection, never closed above it. that got tested, created the rejection, never closed above it. At some point,
Mhm.
one of these two sides had to break, and it was the bottom. So
Yep.
there would be lots of trades you could have taken in there, just been origins and holds as that went through. And the only way you would have lost any of them is if you held it too long.
Right. So then you mentioned it's more about the trade idea, because my other question is, if there's a large discrepancy between what you would expect to be your TP, your first resistance, and according to the wicks or the ranges on the stop loss side, that would still be a reason to maybe not take a trade. Is that right?
So do you mean something like they have hovered above a level and not touched the level? Do you mean something like that?
Yeah, so I guess I mean, like, if there would have been like a trend running through pretty close to where on this example that we talked about, if there
Like
would be
this one?
a resistance trend pretty close. Yeah.
Yeah.
So like where we bounced it from the correct side, and so that was great. But if it would be, slightly above, and you think, okay, well, it's probably going to bounce, but because of the previous structure, I need to put a stop loss, quite wide. Is that a trade you would just leave?
Yeah, we have to look to see what's on the left. As to
Mhm.
if you lost this level, I mean, you wouldn't even take, you wouldn't take a trade on this break. Number one, it's just a break. It's not an origin at that point.
Mhm.
But number two, look what they did. Hovered just above the level to close below the trend,
Yeah.
which was a deviation and non-hard close of the trend, to reject off the backside of the trend to smash through the break level. So
Yeah.
you can take trades on break levels, but you're generally only going to be taking them back to trends or holds as well. And everything was wrong about how they just kept that candle there until they did this.
Yeah. Yeah.
So it became a trade after this. Now, if for whatever reason you decided you wanted to take a trade on that, and you then have to look over here and go, well, where's my next level? Like, what could I bounce off? Well, I could bounce off that, and it still did that deviation on it.
Mhm.
So where's your next level? It'll be over here, more so to the left. Probably that. Kind of got just down to that. So you'd have to really, I mean, that's another trade in there. Sweeps it, goes back above it, comes back to touch it, goes back up to the hold in the trend. But
Yeah.
you'd have to keep looking left to just see, like, what is the next level? What is the next level? What is the next level? And if you were ever to look at just taking almost a martingale approach to entering a position like this, a great example would be that you'd be entering here, you'd be doubling down here, you'd be doubling down here again. And
Mhm.
then, yes, you would definitely win, because at some point this thing is just going to, if it goes through all those levels, takes all that liquidity, of course it's going to bounce. And I used to have some bots that just ran like that. They just laddered in on the various origins, but
Mhm.
they just had like a 1% TP take. So they were never trying to
Sure.
come all the way back up to here. They were just laddering in on the way down and then taking a TP as they bounce back up. But still, you don't know what these gaps are going to be like, particularly if you're at the bottom of a really big range. Once you lose a really big range, you can see what happens. It just keeps going down. So we had a break here. We had a break. Don't even think that one bounced. So we must have hit something pretty big by the time that dumped.
Mm-hmm.
Then you're all the way back down to this type of level here again. And there's the risk of taking all your trades on a 12-hour without really looking above. There's clearly something bigger in here that we lost.
Mm-hmm.
And
yeah,
we would have lost that on a particular day based on a particular close. So it's probably, what would it be? Some kind of weekly hold from the looks of it, weekly backside maybe.
Mm-hmm.
Actually, this is the other thing that's quite good to know about backsides too, is that they don't always touch.
Mm-hmm. Yeah.
Because of what they actually are, given that they're just absolute FOMO levels, you can get this kind of thing a lot, where they just don't quite enter. So really different from frontside levels. Like frontside levels, you really want to manage the trade. Backside levels, yeah, you can just kind of go, oh crap, we closed below the backside. Are we going to dump? Probably.
Mm-hmm.
Probably something even bigger, actually. Looks like that was really struggling to get out of that hold.
Very good. Very good. So I have, if you don't mind, I have a few more questions on ranges.
Yep.
So in order for a range to be confirmed, we need a hard close above the 1.618.
Yeah.
That's correct?
Yeah, that's effectively the base of the range. So taking this one as an example,
Mm-hmm.
we've got your engulfment. The range
Yep.
can pretty much reject or bounce back up until we're down under here. Once we're under here, we can just continue to travel all the way to the bottom like this one has. And then normally once they achieve the bottom or the top, they'll typically bounce back to the 3618, which is that level there. So,
yep. Mm-hmm.
So that's a pretty good example. This is a vicious range. I mean, it just went. It's probably some backside candle over here that it rejected off. Yeah. See all of these wicks that just keep going up, and particularly the fact that there's these non-revisits in between mean that whatever this level is through here, it's important. And you'd be able to find that level obviously on dashboard or anything up to about 120 days you'll find on the origin bot as well. But it's created a bit of a dump, and then that's your range created. So not a bad trade.
But technically confirmed at the close of the candle that closed beyond the 3.618, correct?
Yeah, it's pretty much that one that confirmed it.
Yeah.
Yeah. So, and it had already gone a long way.
So in that case, so I guess that's kind of my question is, because I've heard you say, you know, if you're thinking about taking a trade within a range, you would wait for the hard close of one of the levels and then maybe enter on the retest. And so, for example, you hard close the 1.618 level. It hasn't touched the 2 yet, so you're gonna put an entry on the 1.618 and take it to the 2. Is that so? So I hear you say, okay, wait for the hard test, but then I also hear you say, well, you know, we closed over closed over it, so I would expect it to go up.
Yeah.
I guess maybe my question is, how much weight would you give a hard close opposed to just a close over the level?
Well, you have to look at what else there is at play, I guess. Like in this instance, you have this, which you lost here. So you've
Yeah.
already lost your range.
Yeah.
Everything that kind of happened after that, it could just keep on going. Now you are going to create a new range trend off this. So that's kind of your first support. So the moment that candle closed, it was either going to come back up here and dump, or it was just going to dump. And then all this other kind of stuff in between is actually pretty secondary. But it's, as for where you would have entered on this range, if you'd waited for it to confirm, it's too late. You're pretty much at that point
Yeah.
already at the bottom of the range and looking for longs. If you entered on the hold and took it to the 1618, took a TP here, so entered up inside the body at 125, took your TP, or even if you took it at 122, took your TP at 113 as your first TP, and then waited to see what happened, there's a really, really good chance that nothing is going to stop this until you get a range trend created off this whole candle over here. Because what else was there? There's nothing else in there, no other holds. So it could have played out very differently than this. It could have come down, landed into this hold, maybe created a range trend like that, or something like that, and then bounce back up from there. Totally possible. You don't know that was going to go all the way down like that, but that's there really wasn't much to protect that. It was just stuffed from the moment it lost that trend. So I don't know if that really helps, but it's all kind of in context. And this is a 3-week chart, so you could have been looking at a daily then and just wondered why the daily just absolutely shafted you. But it's because you lost.
Yeah.
It's because you lost a 3-week.
Yeah. So when you would have a close, for example, over one of those, like the 1.309, for example.
Yep.
Is that so okay, so we would say we would expect then maybe that it would go up to the 2.6. But would that be confluence enough to want to take a trade on that, or is that just, helpful to keep in mind?
No, they do tend to play out, but they go down and accumulate sometimes. So you wouldn't just necessarily open it at the level, and you've still got to follow.
That's kind of my question. Like, would it make sense to do like a 1-to-1 trading strategy within the ranges, or would there be generally too much movement that it's just you just get stopped out?
Yeah, it'd be. I'd never go as like a entry exactly on a range level. Range levels, as you can see, they spike up above them, they come down. The only sort of things you really want to do high leverage trades on is going to be polarized things like origin levels or polarized range trends, and even not so much trends. Trends in general tend to get swept as well. So really, high leverage trading is for waiting. You either sit and wait and find the low time frame reversal that's happening inside the higher time frame level, or you're looking at things like origin levels, which do tend to be pretty precise if they've already been swept. That's probably one somewhere around here. See, once they've had a sweep, that was your first rejection. There's your sweep. See that candle that just went up and then just had a massive pullback?
Yeah.
Yeah, that's the type of moment you could have taken a high leverage trade on.
Mhm.
and
And
you
would set a tight stop loss because of the range before it
yeah,
had just completely swept.
yeah. I mean, it was created, it was swept for liquidity, it came back up, touched it, dumped. Doesn't mean it doesn't go back like it did again, but that
Mhm.
would have been the
Sure.
point at which you could have taken a trade, and all it really did was come all the way down to the hold. So 3 week origin was swept, went back under, created a hold, went up, hit it, came back to the hold, and 31% move. You can also just ladder into these types of entries because you know where it's going, so it's going to come back down here, and you know where you're going to enter, so you can start looking at taking a entry here, which could be conservative, and maybe you've go low risk, especially if you're sort of unsure and you're new and haven't done it 1,000 times. And then look at that candle. And note to self, use replay tool. I always do that. So that's your trade entry. And it's not like it just tapped it and disappeared, like it hung around up here for a bit. So if you're looking at a 15-minute time frame, knowing that you're going to get some kind of rejection from there, you could wait for it to, if you're just taking it on the level, you would have got down to there. If you waited for it to create its own kind of top, which is through here,
Sure.
sweeps it, and continues down. So you could have tried to get that entry, take some profit, maybe at the hold, comes back up. I've done this quite a bit actually, where it's just you enter the trade like this because you know it is a level it's going to reject. It comes back down, it starts laddering up again, so you just take some profit. You set your stop loss at break even, which would often be up here somewhere because you've already taken some profit down here. Comes back up to the level, comes back down, you're still in the trade, comes back up again, you're still in the trade, and then eventually it starts that downtrend, and off it goes. But you would have had 3 opportunities to enter that trade over a span of a day, basically, where it just sat there poking at the 3-week level. So when you look at it on a 3-week time frame, it just kind of looks like it hit it and went, but
Yeah.
not quite like that. What happens a lot of the time though is people set their TP to entry, and then it comes back and knocks them out before it goes. So the bonus of just taking some profit down here is that you can then set your stop loss up higher, and you get technically stopped out and at a loss, but you're not really at a loss because you've already taken profit, and that profit offsets that loss. And then once you start to generate some decent structure to the downside at that point, you can start to add. So maybe you then get a daily engulfment. So there's it. Okay. What's that level now? There it is. So you know you're heading to this 157 level from this 204, but the difference is now you've got a daily engulfment. So at which point you could build your position larger, say you doubled it and your entry was here, you've taken some profit, your break even's sort of up here, you could then enter that amount again. You're now here as your break even, and now your position is larger as it comes back down. So as soon as it sort of creates that, and then you could do the same thing here. So you could add to your position. You're going to come down into here, but the price is under here. Your position is now even bigger, down into the target. So don't have to put the whole thing in at once. And you just wait for the bigger structure to form, and then you can add to it. Ooh, are we talking or have we lost volume?
Hello.
Hello, hello. I can hear you. Can you
Yeah,
guys,
I can hear you fine.
Can you guys on YouTube still hear us? Oh, am I not seeing any bars? I can see my mic. I think it's working.
I don't know.
I don't know. Not seeing any responses. Oh no, yep, they can hear us all right. Cool. Yeah, so you could just be a complete cowboy and open 100x position on that swept origin level and just run it all the way down for a 5,000% trade or something, but it's probably not going to be a very sustainable trading career long term.
That'd be ideal. I am curious. I know you mentioned once when you were starting out, you were doing, I think you said 100x off of backside order blocks. Is that just frontside backside trades?
Yep, backside trades, because they typically always bounce. So
yeah,
I mean,
what was your risk management when you were doing that? Can you give me an example?
Normally just 1-to-1. I was just trying to double the money every time, so it's just a 1-to-1, and I would base it off where my target actually was, rather than where I was having to be as far as an invalidation, because it very rarely did anything other than just bounce. But like I say, start at a high time frame, work your way down, because you don't want to be trading inside the high time frame. You want to be trading the bigger move or the stronger move. And the other thing I used to do a lot of was just refine front side, but that's a bit you don't always get the trade if you refine the front side. Like say this daily level here. Let's try this one. So simple rules. You go to the body of the candle, greedy apart, and then you roll down. So down in time frame, forward in time. So straight away we're already here. So if we're going to look for a greedy entry, it's going to be down here. So I'll just go back and just flip that daily. So our target's going to be 188, but we want an entry at 175. We don't want an entry at 82. So just put that on. Now I can see already there's an origin just below here. So for our candle, for our origin, now, and all you're looking for is basically the same thing fractally. So we've got a slightly lower level here, 1 hour, untested, and it's forward of the 4 hour, so it's valid. Down the 15 minute. Okay, and it's tested. This one's not. And when you're doing high leverage trading, it's body or nothing. When it comes to front sides, you're not going to entertain entering a wick because it's probably going to go lower than the wick.
would you say that for the backside level as well?
Backsides are the opposite. Sometimes backsides, like I say, will trigger before you even touch the candle. It's kind of
Right.
So-
So the happy medium is
Yeah.
the wick.
So all you're doing with a backside is you're sitting there with just like everybody else, you're sitting there with a market order button and you're
Right.
waiting and the candle comes down into it. And then the moment you see that thing just start to turn, you just boom, you enter. And that's your 100x starting point.
And you would do that in place of a limit order.
Yep. Yeah, your limit order probably
What-
won't get
what-
filled.
I see.
It's just backside bounces. Or if you're going to put a limit order in, you'd kind of have to put it above the work. So what are we down to? 3 minute. So you got a 3 minute level above a 4-hour origin, 4 hour, 1 hour, 15 minute, 3 minute, 4-hour origin. Okay, so you could keep going. You could probably go down to a 1 or something, but you're getting pretty close. And so then somewhere amongst all of this. So miles away. So you're only going to take this really greedy entry all the way down here, and it doesn't necessarily mean you're even going to get the trade, and you might also just get stopped out. Back on daily.
And the stop loss would be where?
Did we get an entry? Oh yeah, we did. On the 4-hour level. So
We missed it.
yep. So you went through all that. You wanted your entry down here, didn't get it.
Yeah.
So that's the downside of trading with 100x. You've got to be so greedy that you just don't necessarily even find your trade, and then if you wanted to take it afterwards, look what happened to you. Just got
Yeah.
knocked
Right.
out. Yep. So generally speaking, hold levels, frontside hold levels, not the best for 100x trading. But things like polarized origins and that kind of stuff, yep. And backside
Yep.
levels, got a better chance. You just got to get out. Just got to get out fast.
Very good.
Where would you put your stop loss on 100x trading? Your stop loss would be your liquidation. Because it'd be like 0.6 on most exchanges because they liquidate you early to save themselves the loss.
Right.
Yeah.
Mm-hmm.
Which is also kind of BS, but that's how it works. So you think you've got the ability to go to 1% up or down on a 100x trade. You don't. They'll normally be already unraveling or liquidating your position at 0.6.
How many times did you have to get liquidated to learn that?
A couple of times. Yeah. But what I used to do was I used to just go take like say $100 and you turn it into 200, take 100, turn it into 200, take 100, turn it into 200. So now you've basically got $600. Then when you get to $600, you take 200, turn it into 400, and then you do that 3 times. And after every 3 doubles, you double what you're risking, and that way you can take that occasional hit. And you're only taking the most greedy levels, but it's not as fast as you think, because it might take a week or 2 weeks for that 100 to become 10 grand. Because you've got to take just very particular levels.
Sure.
But yeah, that's pretty much how you do it. And you can't just keep doubling it because it doesn't work. You will lose it all.
Yeah, certainly. So okay, I think we're almost at 8 o'clock. Have time for one more example question.
Geez, I get a half-hour break soon.
Yep,
go.
Which one is it? So I've been playing with the Origin bots with the Origin first touch levels.
Mhm.
I had one that I've had more than one. that did this. It just blasted right through.
Yep.
So let me see, where is this example?
Which token?
I think it's Zen.
Sounds fun.
Oh, there we go. Okay, Zen. Yeah, it does. Sounds like a poop coin for sure. 8 hour April 1st.
Is it this thing?
And yeah, I think it's that guy. Yeah.
Which exchange?
Bybit.
Zen. Spot or futures?
Futures.
Yep.
And then 8 hour chart, April 1st, and the origin's around 5.6.
That one? 5.7?
April 1st.
Oh. Resistance origin.
Yeah. It was a short. It got wrecked.
That's what.
Yeah, so it's the origin right before it, I believe. I guess it.
Oh, that's March. Okay, gotcha. That.
Yeah,
April
that's
1st.
the one. Yeah, it was a funny joke. Yeah, so I'm just curious. So obviously I should not have taken that trade. And I think I had my stop loss pretty high up actually. I had it right around 5.9 or something like that. But I'm just curious to know like what happened.
Yeah, it did kind of just blast right through it. So there's something. So 1, 2, 3, 4, 5 candles. There's something bigger here. And 1, 2, 3, 4. Let's see. 3, 1, 2, 3, daily. Okay. So you bounced off a daily hold.
Mm-hmm.
Straight through an 8-hour origin. So there's something. I mean, you did bounce off daily hold, so an 8-hour origin is probably not exactly gonna stop that.
Yeah, so that's the question. So you wouldn't assume it would stop it, but you also probably wouldn't assume that it would just.
Yeah, I'd also be curious as to whether this was the rejection. See this candle right here?
Yeah.
This is one of the reasons why I don't trade so much with Bybit. I used to trade with Bybit, but you can get little displacements and things sometimes, but I'd be really wondering about that, especially with such little liquidity. So this kind of near miss, and you probably heard me mention it quite recently, is that I'd always be a little bit wary of these near misses as to whether we're just going to blast through the levels, because sometimes they are actually touches. You could check that out maybe on another exchange if it's available on another exchange, or check it out on spot. OKX is shocking. Don't look at OKX. Do we have a spot?
Is that the same? I think you're on a different token.
Yeah, that's called Zent. Fun.
I have noticed that on comparing Vibit levels to BitGet when it shows up on the scanner. Sometimes it'll be like, oh, okay, this has already been touched, or this shouldn't be in origin yet, depending on the exchange. So that does
Yeah.
seem plausible.
That didn't touch it. So didn't touch it on spot. Let's see. Is this thing listed many places? I suppose it is.
I have no idea. That was a one and done. I didn't like the token after this one.
Nah. Let's see, BitGet. Oh, that's Zent again. Yeah, I think you had a. Oh no, I still didn't touch it. So I would be very wary of that thing because it's already done what you'd expect an origin rejection to do, which is come back to the hold. So getting that close and then coming back down, yeah, I'd get paranoid about that. If it was BTC or something, I'd trust that is not a touch. But yeah, anything smaller.
No, that's helpful to know. I appreciate that. So
good long in there.
Yeah, certainly. Very good. Well, I think you're about due for a break, so I won't take any more of your time.
Mojito time.
Really appreciate it. Yeah, I'm sure you need a coffee.
Yeah. What's this? 8 hours. Jeez. Okay. Right. Half-hour break.
A little bit to go yet, but hey,
Yeah,
good luck.
no.
I'm gonna head off to bed, I think.
All right. Enjoy that. Good night.
So, hey, just a suggestion or request for the Origin bot. And I'm trying. There's a lot going on. There's a lot of numbers. There's a lot of different percentages. On some of the newer stuff, there's certain acronyms that are not explained in the little description at the bottom.
Yeah, like OTT and all that kind of stuff.
Yeah. So I'm a little lost there. It's like, well, I don't really know what this means, so I'm not going to take it too seriously.
I should probably do some documentation.
Yeah. That honestly, that'd be really helpful. Like, I was mostly following at the start, but ever since we started throwing other measures in there, and there's graphs and charts running all different directions, it's kind of tough to follow for the average guy. So that would be really helpful. The other thing too, and I think this would be most helpful, would be, how we have you click the, what is it? If there's a lot of volume on an origin trade, it'll send you a little alert.
Oh, the RVOL thing. Yep.
Yeah, that would be really helpful for some of the regime changes, or the flip, the bullish bearish on origins or on folds, etc.
Yeah.
If you could,
that's long term, that's the plan. There's just other metrics not included. So for example, we look at holds, we look at breaks, we look at two classes of range trend, but there's more. We haven't got normal trends in there yet, so that's tricky as hell, and almost just not necessarily able to be processed quick enough. So there's also things like the flipping of origin levels, like what you're seeing here.
Yeah.
So assuming that this was the rejection of that level, and then it hits the backside,
Mhm.
and then it breaks the level, and then it tests the level, and then it polarizes the level. This is actually now support. So we
Sure.
don't take into account that support, which is created, because unfortunately
Mhm.
levels are almost forever in some cases, and
Yeah.
although they kind of lose high time frame ones, there's few of them and it's pretty easy to track. But at the moment we're tracking 1 hour, and if we're tracking 1 hour
Mhm.
levels, and you've got to have every single level, and you've got to basically keep track of its polarity through forever, it's pretty
Yeah.
tricky.
Yeah.
But
That's a lot.
eventually, I think we're A, going to be able to do that, and B, maybe we restrict it to daily plus, and we just start tracking the overall market daily plus for polarity. If we do that, then we can actually take this level and just measure it for good, which
Sure.
is then going to make that whole bias thing considerably more accurate, because you'd have every single actual created level that's created as support or resistance, but you'd have also every single level that's actually flipped, and whether you've got that support or
Nice.
resistance.
Mhm.
So yeah, and then you just got to put it all together because
Yeah. 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 Certainly.
I think the reason why
No, it's crazy.
the missing piece of the puzzle is that everything matters. So having just having the balance of, say, origins, or the balance of holds, or just everything as a singular, doesn't actually give you anything really super precise to work with. But when you actually start putting it all together
Sure.
and you go, oh crap, okay, so every trend, every hold, every origin, etc., right now is flipping bullish, then you know the market's going to break bullish. So yeah,
Yeah.
I think
Yeah. Yeah.
early days. Need more
Very
computing.
good. Yeah. Yeah. Excellent. Well, thanks again. I really appreciate this. And yeah, we'll keep at it.
Yeah, no worries.
I'll be in the chat.
All right, I'm gonna, don't know whether to stop this thing and then start it again, or just leave it muted. And yeah, that alarm is
There you
just
go.
psycho. I don't actually have the audio turned on, and I don't have speakers, so I only hear that alarm if I'm wearing my headset, which I'm not usually.
I see. I
Anyway,
see.
all right, good night.
Very good. Take care. Thank you.
See you. Bye. Okay, I'm going to take my half-hour break now, and Blue can entertain
I
everybody.
never know. Yeah. Thanks for coming, Trev. It was a good session.
I'm going to go
Time
find
for
some
some breakfast.
food and alcohol.
Yeah, thank you, Blue.
No worries.
Appreciate you as well.
Thanks soon. Hey, for those of you still listening and still there, I'm just going to restart the live stream because YouTube will only record it for 12 hours. So we'll just, each time we take a break, we'll just restart it. So I'll just do that now.